Very good morning, everyone. How are you all? Fine or super fine? Fine or super fine? Super fine. Okay. Now, even though you are not fine, after the entire live session, you will be fine and you will become super fine. Now, first, let me ask all the live student: is it audible? No, live student. You are my face-to-face student. Okay. So, live online. Is it audible, everyone? Please respond, then we'll proceed. Fine, sir. Okay. Now, audible. Okay. Now, first thing, let me clear some point before I start the batch, that this is a revision batch. Okay. Now, what do you mean by revision batch? First, you need to understand that. Correct now. Revision batch means I will assume that you have done the regular class means or any other class by whatever name known as. You have already done one time the class you have taken either by me or by any other faculty. That is not an issue, but you have taken the class. Okay, already you have taken the class. So then only this batch will be useful for you. If you are the first time you think that you want to learn everything in this revision batch, it is not practically possible. It is not practically possible. Understood now? Only as in 60 hour, 50 hour, it is not completely possible to revise, to understand entire thing about FR. You all know that FR is one of the lengthier, I will say lengthy subject for entire CA final. I will say DT and FR will take lot of time, not only for the classes but also for revision. Correct now? And if you can complete the revision in timely basis, on timely basis, then I will say you will be able, means you will have the confidence before entering the exam hall. So a complete revision is required. Now, what is my role in this revision batch, and what will be your role in this revision batch? That must be clear. Now, if you know my role, but if you don't know your role, or if I am performing my role, because I will perform my role, I have a professional obligation towards it. So I will perform my role. But the question is that whether you are performing your role. If you are not performing your role, this entire batch is wastage of time. Entire batch will be wastage of time. Means you are coming here only listening the class. It will not help you. It will not help you. So what I have done, so that in the next coming 10 days, how to complete entire FR revision. Once again, revision. Okay. If you are the first time and now you came into this batch, so and now you don't have any option of the classes and you are thinking to write in the coming exam, of course you don't have an option to once again go to the entire regular classes. I will say sit in the class. I will do my level best to give you all the concept, but I will not commit you anything that you will understand everything in FR. That is not possible. Correct. But one thing is clear, that you will be able to understand everything. Now your effort is required if you are the first time. Now what I have done, I have divided the entire schedule in how many days? 9 days. Means I am taking 10 days into target, but then also 9 days plus 1 day buffer I have taken. Understood? So entire schedule, entire syllabus I have divided into how many days? 9 days. So today being the first day, so you can see the schedule is already finalized. In the day 1 I will take Ind AS 16, Ind AS 2, Ind AS 38, Ind AS 23 and Ind AS 20. This will be the 5 Ind AS which I will take. So today I'll try to complete these 5 Ind AS. It may happen that I am not able to complete it, then I will carry forward the chapter in the next day. But it will be my target that let us complete these 5 chapters today. Now once I complete, what will be your job? Then you will go home and you will sleep, and then you will come back again. If that is the mode, then don't come here, because that will be wastage of time. So of course, can I say you have the ICS study material, or you have any book of your previous faculty, or you have my question bank. Understood now? Whatever you are referring, stick to that. I am not going to change your book. If you want my book, that is available, you can buy it. That is your choice. But I will not recommend you to take any other book. Understood? Because if you have already done classes with some other faculty, all faculty are super faculty in India. Understood? All faculty are very good faculty from whom you are taking, from whom you have taken the classes, including me, including me. So all are super faculty. Don't change the book. Don't change the book. Be with the book. Correct now. But what will be your job? That once I have completed these 5 chapters, go to home, do all the questions of your material from question number 1 to whatever last question is there. That will be your target. Understood now? So I will complete, suppose I am taking 6 hours per day. So I will be leaving you at 6 p.m. most probably. It can be sometimes 6:30, it can be sometimes 7 also, depending upon how much time is required. Understood? But once you reach home, so from that moment till you are coming back to next day, you have, I think you have more or less, you will be having, I think, 7 to 8 hours or 9 hours. Correct now? In that hours you need to complete what? You don't have 9 hours? I'll count it. I will prove that you have 9 hours. Correct now? So you reach, let us suppose you reach at 7. Okay na? So 7, of course you want half an hour relaxation. So 7:30 you will start your study. Okay na? 7:30 you will start your study. 7:30, 8:30, 9:30, 10:30. 3 hours you study. Then if you want to sleep, sleep. Then wake up at 4 a.m. You can't wake up? Give me your number, I will call you. Okay? Give me your number. I will wake up with you. So 4 a.m. you will wake up, because 6 hours, 5 hours is sufficient to sleep. You will not die, huh? You will not die. Wake up at 5, then 4 to 10. How many hours? 6 hours. And chalo, 1 hour relaxation. So 3 plus 5. 8 hours so you have. 8 hours you need to study. 8 hours you need to only study. And do all the questions, whatever these chapters I have done. If you can do that, then it will be beneficial. Otherwise, what will happen? 10 days I will take, 10 days you will take, 20 days, then there are balance 5 subjects also, huh? That who will do? So what is the objective? That if you are with me, so most, I will say approximately, if you can complete 80% of the question bank, then objective is over. See, in this 10 days, if you, I will do all the revision, but 80% if you can complete, then the objective is over. Then it means FR is prepared one time, then one more preparation, one more time preparation you can do by your own, then 100% you can score more than 70 marks in exam. Normally, why students are not able to score marks in exam? There are 3 reasons for that. There are 3 reasons. One is lack of concept. Lack of concept, that I will do in this batch. Lack of concept, so I will clear all the concept once again. So that will be automatically cleared in this class. Then lack of practice. Practice you will do in this 8 hours. Practice you need to do. Okay, how to practice, that also I will inform you. Lack of practice, so that you need to do. Then lack of confidence. Okay, confidence will come only when you have done what? Lot of practice. Means in exam, confidence will come only when you are fully prepared. If you are half prepared, that confidence will not come. And if you have lack of confidence, you will not be able to concentrate in exam hall. And because you are not able to concentrate in exam hall, some small mistake you will do, even though you know the answer. The main reason I will say 50% students do not able to write in exam because of lack of confidence. Because of lack of confidence. First question will come, it will be a new question, you will lose your concentration. So that you need to work on. And that will come only when you have done all the questions, all the practice by your own. So target you understood? So today your target is what? 5 chapters. So today only, means once you come back tomorrow, your 5 chapters, all the questions need to be completed. Now one more thing I will say, that that tomorrow when you will come back, so after class I will be here only. Understood? After class. If you have any doubt, live student as well as offline student, if you have any doubt in that question, that also I will help you. But that will be beyond 6 hours. Understood now? So if any doubt, I will say there will be not much doubt, but if some doubt is there that if you are not understood any question, that also I will help you in this live session as well as what? Face to face also, whatever you have doubt. Got this point? So this will be the objective of this batch. Now coming to the book which I will refer, I will refer my Ind AS Saransh book. From that I will teach you. If you have that Ind AS Saransh book, very good. Or you can also refer any other book, whatever you have. You can also refer ICS study material, because content remains in only. Whatever content is in my Ind AS Saransh book, same content you will find where? In any other book. Or if you want to buy the Ind AS Saransh book, then you can buy. That is your choice. I am not forcing you to buy. I am not forcing you to buy my Ind AS Saransh book. Correct? But soft copy is not available due to copyright issue. So don't ask me what soft copy of Ind AS Saransh book. Okay? Understood? So soft copy of that book is not available. But you can refer ICS study material. You can refer your previous faculty book also, because the content of Ind AS Saransh will be same in every book. Now I'll give you the PDF of one question booklet that is already provided in my Telegram channel, that you can download, and you can also make a photocopy of that. In that PDF, I'll just inform you what I have done. 1 minute. In that PDF, you can see, right now only 5 chapters are there. All the chapters will come in this. Suppose we will start Ind AS 16. So you can see I have given MCQs also. Bolo, thank you very much. All the MCQs have been given. So it means all MCQs chapters wise given. Correct now. So these MCQs, can I say you can do it by your own after class? And if you can solve all MCQs, means you have understood the concept. Correct now. How many MCQs I have given? So all the MCQs which I feel is important, and there are some MCQs from ICI resource also. Correct now. It means it is up to, I will say, as per ICI standard only. Correct. So how many MCQs I have given in this chapter? You can see 23 MCQs I have given. But in exam, whatever question you are getting, that can be different from this. So don't rely on this. But this is a sample of MCQs, because you all know that for the first time you will be writing exam under new scheme. So we also don't know what is the expectation of ICI about MCQs. Correct. But with all the concept and with this sample, you will be able to understand what type of question, what type of MCQs they can ask in exam. However, from my point of view, if you are conceptually strong, any MCQs you can do. And good point is that there is no negative marks. Good point is that if you are solving and there is no negative marks, so you can go and attempt any question. Sometime God is with you. So it can be also correct. Okay, but MCQs, there is no need to worry about that. And then I have given some practice question which I will do in class. So these are not expected questions. These I have taken only for practice in class, so that you can understand the relevant concept. Means don't rely on this question. This question is only going to come because this has been given by Chiranjeev sir. No. Question can be different in exam. Okay, sir. I hope you have understood the purpose of this batch. But one commitment I will give you, that with this revision batch, at the end you will be confident. You will be confident about the concept of what? Entire FR syllabus. That commitment I can give, and with your effort, you can score easily 60 plus or 70 plus in exam. So our target will be exemption only, 60 plus. Of course, my target is always higher one, that 70 plus. But for you, exemption is also what? Very good marks. Chalega? So can we start? You have any questions? You have any question before I start? How to download practice question? It is given in the Telegram channel. Telegram channel is given in the live chat only. You can just click it and download it. Okay. Now don't ask me again and again this question. Any more doubt? Today you don't want anything because you have what? Projector. Okay, sir? Can we start? So we'll start with what? Ind AS 16. Ind AS 16. Ind AS 16. Sir, why you are starting with Ind AS 16? Because I want to start with Ind AS 16. Okay, na? Now your revision will depend upon me. Whatever chapter I am taking, that chapter will be the starting point, and then we'll go as per our class only. You need to revise on that basis only. ठीक है ना? Ind AS 16 is what? Property, plant and equipment. Property, plant and equipment. Okay. Now, let us start with Ind AS 16. Everyone ready? So, what is the meaning of PP? PP are tangible item. So, what do you mean by tangible item? Tangible item are those items which are not intangible. Which are not intangible. Means, can I say tangible item means which has some physical substance? Which has some physical substance. So, inventory can be also tangible item. But inventories are not PP. So, we need to understand when a tangible item become PP. So, what Ind AS 16 says, there are two conditions. If that two conditions satisfied, then any tangible item will become PP. First condition is what? It is held for use in production of goods or for supply of goods or services. Production of goods or for supply of goods or services. Second, rental for rental to others. Third is what? For admin purpose. So, first is what? For production purpose, then for supply purpose, then for rental to other, then for admin purpose. Understood? Correct. And means both the condition need to be satisfied and expected to be used for more than one period. One period means 12 months, you can say, means annual year. 12 months will become one period. One accounting period will become one period. So, expected to be used for more than one accounting period, you can say. When I say expected, to expectation of which date? Expectation of initial recognition date. When you are initially recognizing it, so at that time what was your expectation? If it is expected to be used for more than 12 months, then it will become property, plant and equipment. Then one clarification has been given by Ind AS 16 that this admin purpose is a wider term. Because there are many other purpose which is not covered in this definition. For example, accounting purpose, selling purpose, distribution purpose. Suppose you have some PP which are used for distribution purpose, then it is not covered in the meaning. So, one clarification has been given by Ind AS 16 that admin purpose is a wider term. Whether my speed is okay? Huh? Speed is okay? So, lot of concentration required. If you think about someone, you will miss some point. So, think about only Chiranjeev sir. Okay? Correct? Understood? So, don't think about someone if someone is in your life. Understood? Anyone is in your life? You don't have anyone in your life. Huh? No, you have. You think you need to say, yes sir, one person is in your life, ICI. Correct now. Only think about what? ICI. Okay. So, chalo. So, can I say admin purpose means is a wider term. It will cover any other purpose other than for the sale in the ordinary course of business. Means inventory is not covered. Apart from that, any other purpose will be covered under admin purpose. For example, it will include selling and distribution purpose, finance and accounting purpose, and research and development purpose. Then one more clarification has been given because the word is property, plant and equipment. When I say property, property meaning is what? What do you mean by property? Property means land or building or part of building or land and building. Correct? So, when we say property, property means land or building or part of building or land and building. Now, the question arises that property is covered under Ind AS 40 also investment property. So, there are some property which may become investment property. The one clarification has been given that any property which meet the definition of investment property is not covered under Ind AS 16. So, any property which is covered under definition of investment property is not covered under Ind AS 16. That will be covered under Ind AS 40. Correct? So, what do you mean by investment property? Coming soon. But investment property are those property which are held for rental purpose, which are held for rental, for earning rental income or for capital appreciation. Or for capital appreciation. Means, can I say in this way, any property which are held for rental income will be investment property? Any property which are held for rental income will be what? Investment property. Or for capital appreciation, that will be investment property. Means any property which are held for production purpose, that will be PP. For supply purpose, for rental to other. So, one doubt will come, so why they have given rental to other? Why they have given rental to other? So, it is for plant and equipment. Plant can be given on rent to others. Equipment can be given on rent to others. Suppose you have plant MSC that can be given on rent to others. That plant will be covered where? Under Ind AS 16. But property given on rental purpose for earning rental income, that will be covered where? Ind AS 40. I hope you have understood the meaning. Correct? Yes, sir. Then one more doubt will come. So, what will be the accounting treatment of spare part, servicing equipment and standby equipment? So, one doubt will come because these are not used throughout the year. Sometime it may not be used in that year. So, one doubt will come, so whether it will be PP So one clarification has been given that if it will meet the definition of PP, it will be PP. Otherwise, it will become inventory. Otherwise, it will become inventory. Very important point for MCQs. Correct? So any spare part, any standby equipment, any servicing equipment, if it meet the definition of PP, then it will be Ind AS 16. Otherwise, inventory apply Ind AS 2. Ind AS 2. Ind AS 2 means, you know, Ind AS 2 inventory. After this, we'll do Ind AS 2 only. Now the question is that, can I say, if we say if will satisfy the definition of PP, the first condition will be always satisfied. Only second condition might not be satisfied. So if such equipment means spare part, standby equipment, servicing equipment are expected to be used for more than one accounting period, then it will become PP. Otherwise, it will be inventory. Otherwise, it will be inventory. So if it has been classified as inventory, then such inventory will be charged. Such inventory will be charged to profit and loss account as an expense once you have used it. Once you have used it. Understood? Have you understood? But can I say if it has been classified as PP, then apply Ind AS 16 from the initial recognition only. So all the provision of Ind AS 16 will be applied to that spare part, standby equipment, and servicing equipment. Now we have understood the definition criteria. After always definition criteria, we have a recognition criteria. Recognition criteria means when to recognize in our books of account, when to record journal entries. So what Ind AS 16 that says that if two conditions satisfied, it will be recognized as PP in our financial statement. First condition is what? It is probable that future economic benefit will flow to the entity. It is probable. Probable means what? Probable means what? Chances are more than 50%. Chances are more than 50%. It is probable that future economic benefit associated with the item will flow to the entity. Correct? Means chances are more than 50%. And the cost can be measured reliably. Can I say for tangible item, normally these two conditions will be always satisfied. For tangible item. Correct. But suppose if these two conditions are not satisfied, then it cannot be classified as PP. Then it will not be classified as PP. Well, just give one example. Suppose you purchase one equipment and after purchase you find that this equipment cannot be used for your business. Quite possible. Quite possible. You purchase some equipment, then you realize that this equipment cannot be used for your business. Means now it cannot be classified as PP. Can I say then it will become a equipment which is held for sale. If it is held for sale, then Ind AS 105 will be attracted. Then Ind AS 105 will be attracted. And if no future economic benefit from such equipment means you are not able to sell it, then it will be derecognized immediately and charged to profit and loss account as an expense immediately. Understood? Have you understood this point? It means to recognize we want two conditions, definition condition and recognition condition. Understood? Now once recognition criteria is satisfied, then we'll go to initial recognition, and initial recognition says that every PP will be recognized at cost. At cost. So initial recognition is done at cost, not at fair value. Not at fair value. Initial recognition is always done at cost. Understood? Now what do you mean by cost? That we need to understand. So what Ind AS 16 says, the cost means cash price equivalent. Cash price equivalent. Cash price equivalent. So what do you mean by cash price equivalent? There are two situations. There are two situations. Are you able to concentrate? Some of you can come here. Fast, fast. इतना दूर. Fast. We love you, sir. I love you. You don't love me. Huh? Gamre? Nalayak. Come, fast come. Live student, are you able to concentrate? Everyone, are you able to match with my speed? Fast. Don't worry, I will inform you every point about major changes, everything. Just concentrate with revision class. This 10 days, everything will be completed. You are with me in this 10 days, not 10 days, entire FR syllabus will be completed. Don't worry about amendment. Amendment also I will do. Amendment also I will do. Okay, sir? Yes, sir. Now, cash price equivalent. Now, okay? Correct now. Paste. मतलब मजा आ रहा है? Now you'll feel more मजा. ठीक है ना? Now come to cash price equivalent. There are two situations. First situation is what? When the payment is not deferred beyond normal credit period. And second situation is that when payment is deferred beyond normal credit period. Can I say whenever we do credit purchase, there will be some normal credit period. For example, 30 days, 60 days. So if the payment is deferred beyond normal credit period, then what our Ind AS 16 says that cost price will be equal to present value of all future payment. Cost price will be equal to present value of all future payment. You are expert in present value, discount rate will be given, discounting you are expert, correct? So cost price will be equal to what? Present value of all future payment. Now this present value of all future payment is nothing but it is the purchase price at normal credit term. Purchase price at normal credit term. So you can add on, this is nothing but purchase price at normal credit terms. Normal credit terms. For example, purchase price means what? Purchase price means what? Invoice price less trade discount plus minus non-refundable duties and taxes. Correct? So purchase price means what? Bolo? Invoice price minus trade discount plus non-refundable duties and taxes. Correct? Suppose in exam they have given the normal purchase price is 10 lakh and future payment is 20 lakh and they have not given rate of interest. They have not given rate of interest, but the cost price will be equal to what? 10 lakh. There is nothing to, because 10 lakh will become what? Your cost price, and the difference between 10 lakh and 20 lakh will be what? Interest. So you can calculate EIR because you are expert in IRR, in FM, correct? Now so you can find out what? IRR. That will become what? Rate of interest. That will become rate of interest. Till now no question of this nature has been given in ICS certificate, but they can ask this type of question because I am saying. Understood? Correct? So if suppose normal purchase price at purchase price at normal credit terms is given, that will become the cost price. Suppose they have not given purchase price at normal credit terms, so they will give you all future payment with rate of interest. So you can find out what? Present value. That present value will become what? Cost price. So two type of questions can come in exam. Understood? The second one is more popular in exam, which is easy. Understood? The second one, they will give you future payment with rate of interest. So you can easily find out what? Cost price. Understood? Yes, sir. And the interest will be equal to what? Future payment minus present value. That will become interest. That interest will be recognized as an expense over the period of credit unless it is covered under Ind AS 23, because as per Ind AS 23 it can be capitalized if it is a qualifying asset. So unless it is covered under Ind AS 23, it will be not capitalized. Correct? Now then it will be charged to profit and loss account as an expense. Understood? This much? Correct. Now, if question is silent, always charge it to profit and loss account. If question is silent, then interest expense will be always charged to profit and loss account as an expense. Got this point? Yes, sir. Now, when the payment is not deferred beyond normal credit period, then of course cost price will be equal to cash consideration paid. Means whatever you are paid, that become what? Cost price. Then no present value, it will be recognized at undiscounted amount. Undiscounted amount. Done? Yes, sir. So you have understood what do you mean by the cost price? Correct. Then what is the elements of initial cost? There are three elements of initial cost. First is what? Purchase price. Second is what? Directly attributable cost. Third is what? Third I will say. Okay. First, purchase price. Purchase price already I have said. It means what? Invoice price less trade discount or rebate and add non-refundable duties and taxes. I think you know about non-refundable duties and taxes means GST for which credit is not available. Credit is not available means credit is available, then it will be refundable and that will not be added. If question is silent, always assume that credit is available, not available, not available. So if question is silent, always assume credit is not available and add it. Understood? Now trade discount and rebate means cash discount will not be deducted. So any cash discount will not be deducted. Any cash discount will not be deducted because cash discount is settlement discount. That is not known at the time of initial recognition. So any settlement discount, any cash discount will be transferred to profit and loss account at the time when it is received. At the time when it is received. So don't deduct any cash discount or settlement discount. Cash discount or settlement discount. Understood? Yes, sir. Now coming to directly attributable cost. So what do you mean by directly attributable cost? Which are incurred for bringing the asset in present location and condition for ready for use. Understood? Means I will say for bringing the asset in location means all the transportation costs, correct, and to make it in working condition, for example installation expenses, etc. Understood? Now directly attributable cost means what? Which are not related to ongoing activity, which are not related to ongoing activities. Means this cost will be incurred only because of purchase and acquisition or construction. Means this cost will not be incurred if the entity has not acquired it or entity has not constructed it. That become what? Directly attributable expenses. If means such expenses, if it will be incurred even though even though PP is not acquired, even though PP is not constructed, then it is not directly attributable expenses. Understood? Correct. Means these are, I will say, incremental cost. Incremental cost means which will be incurred only when you have acquired it or constructed it. So what is what? It is not related to ongoing activities. It is not related to ongoing activities. Examples are very simple: employee benefit cost arising directly from construction, etc., transportation cost, installation expense, site preparation, professional technical fee, and cost of testing. Cost of testing. I think you all know about testing cost. So if any testing is required before actually purchasing it, so while performing testing you may incur some expenses. That expenses will be also capitalized. That expenses will be also capitalized. Now while testing, can I say some unit might be produced? Some unit might be produced. That unit can be sold, to any sale proceed from that unit will be deducted from the cost of testing, and net amount will be capitalized. Net amount will be capitalized. So cost of testing minus sale proceed from the unit produced during the testing period, the net amount will be capitalized. Net amount will be capitalized. Now there is one carve out. You know about carve out? You know about carve out and carve in? Difference between Ind AS and IFRS. Difference between Ind AS and IFRS. So this is recently amendment in IAS 16. One recent amendment is there in IAS 16. What was the recent amendment? That as per IAS 16, the deduction of proceed of item produced during testing of cost of an item PP is actually there is some missing, is transferred to PL account. Means as per IAS 16, that any sale proceed is transferred to what? PL account. Is transferred to PL account. But as per Ind AS 16, it can be deducted from testing cost and net amount can be capitalized. This becomes the difference between what? Understood? Yes, sir. This become difference between IAS 69 and Ind AS 16. Now whether carve out is important or not important from examination point of view, that we don't know. Correct. Till now in all the past examination they have never asked carve out. But with MCQs this become important. With MCQs, in MCQs they can ask anything. So in MCQs this type of question can be asked in exam. Chalega? Yes, sir. So there are only, I will say, very few carve out. You can retain in your mind. Just revise before exam. Just revise before exam. Chalega? Yes, sir. Now coming to last point, initial estimated cost. What do you mean by initial estimated cost? Initial estimated cost of dismantling, removing the item and restoring the site on which it has been located. Means, can I say, suppose you purchase one AC. You purchase one AC, the purchase price will be capitalized. Then you bring the AC, transportation cost will be capitalized. Then you have installed it, installation cost will be capitalized. Correct? This you have understood. Now once you have installed it, you start using it till the useful life. At the end of useful life, it will require dismantling. So at the end of useful life, dismantling cost will be there, removing cost will be there, and it is located in a wall. So once you dismantle it, the wall will be destroyed. So you need to restore the wall where it has been located. So there are three costs: dismantling cost, removing cost, and restoring cost. Cost you understood. Now the question is that whether it should be capitalized. Whether it should be capitalized. Are you able to understand? So what Ind AS 16 says, that initial estimated cost of dismantling, removing and restoring will be also capitalized. The question is that, what question I have asked, whether it will be capitalized. What do you think? This dismantling cost, restoration cost and removing cost, whether it will be capitalized? No, it will not be capitalized. It will not be capitalized in every situation. It will not be capitalized in every situation. Means it will be capitalized in only in one condition. Only in one condition. So what Ind AS 16 says, that if the obligation of DRSL, DRSL means what? Decommissioning, restoration and similar liability. Decommissioning, restoration and similar liability. So if the obligation of DRSL has been incurred when the item of PP was acquired, or when the item of PP was used during the useful life. So if that obligation is already incurred, this obligation can be legal obligation or constructive obligation. You know about constructive obligation? You know about constructive obligation? Constructive obligation are those obligations which arises due to the entity's action. Due to the action of entity. So it can be either legal obligation or constructive obligation. Then Ind AS 37 will be applicable. Now Ind AS 37 says recognize provision. Recognize provision means as per Ind AS 37, can I say we need to create a provision for such future expenditure? So what they want to say, if the obligation is already incurred either at the time of purchase or during the period of use, then Ind AS 37 applicable and to recognize provision. And now Ind AS 16 says that that amount of provision will be capitalized to the cost price of PP. Understood? Means if the obligation is not incurred at the time of purchase or during the period of use, because can I say I have given the example of AC, there was no obligation to dismantle it. There is no obligation, there is no legal obligation, there is no constructive obligation. I don't want to dismantle it. Yes or no? It means for this AC there is no capitalization required. Understood? But for example, if I take some other example, there is a contractual obligation as per the tenancy agreement of this building that once I leave this building I will dismantle it, then there is a legal obligation to dismantle it. Yes or no? Then we need to capitalize the cost of dismantling, removing, etc. to the cost price of AC. It means you need to find out whether there is a legal obligation or constructive obligation. Understood this point? Have you understood the point? However, in exam question in this chapter, if question is silent, we'll assume there is a we'll assume always there is a legal or constructive obligation for this chapter. If they have given what? Dismantling cost. So even the question is silent, we'll assume that yes, there is a legal obligation at the time of purchase. Correct. It means, can I say in this way, if obligation of DRSL has not been incurred when the item of PP was acquired, then it will not be capitalized, treated as cost of disposal on derecognition of asset. So then it will be cost of disposal on derecognition of asset. But if the obligation has been incurred, it will be capitalized the cost of PP and amount will be estimated as per Ind AS 37. So what journal entry you will do? PP account debit to provision, PP account debit to provision, and this provision as per Ind AS 37, this PP as per Ind AS 16. Now Ind AS 37 say that it will be a discounted amount. So you need to find out present value of future expenditure, that amount will be capitalized. Understood? Yes sir. I have taken a very simple example. On 1/4/2017, PP was acquired for rupees 50 lakh, subject to a trade discount of 10% and GST 18%. Credit of GST is not available. Other directly attributable cost of 5 lakh, useful life of PP is 5 years. As per the applicable law, PP need to dismantle at the end of useful life. As per applicable law means it become what? Legal obligation. Correct? Estimated cost of dismantling is 6 lakh. Appropriate discount rate is 10%. Solution, calculation cost price. So how to calculate? First we'll add purchase price. How much? Invoice price 50 lakh. Less trade discount. Add GST because the credit is not available. Correct? Then add directly attributable cost. Then add also what? Dismantling cost. But at which amount? Present value. Present value you can calculate. You are expert in calculating. This become what? The total cost price of PP. Correct? But can you see to this amount Ind AS 37 will be also applicable. And as per Ind AS 37 we need to add interest every year. We need to add interest every year. So it is quite possible they may ask you the carrying amount of provision after 2 years or 3 years. So you need to add interest and you need to find out carrying amount of provision as per Ind AS 37. Understood? Yes sir. Correct. Now this one is special point which is also important because in recent time they have added one question to this particular point. This may be important for MCQ question. What they want to say? Entity applies Ind AS 2. Entity apply Ind AS 2 to such cost. It is an exception to the above rule. The entity apply Ind AS 2 to the cost of obligation for dismantling, removing and restoring the site on which the item has been located that are incurred during a particular period as a consequences of having used the item to produce the inventory during that period. Means if that item is used for production purpose, then that entire cost will not be capitalized to the cost price of PP. That entire cost will be added to what? Cost price of inventory. Correct? Understood? And that will be a part of cost price of finished goods. Understood this point? Correct? Not understood. Means suppose just try to understand this class I am using for production purpose. This class I am using for production purpose. In the class I have done some modification for production. Quite possible. And there is a legal obligation to dismantle that modification once the production is completed. There is a legal obligation, contractual obligation to dismantle that modification once the production is completed. Correct? It means whatever dismantling cost I am incurring, that is for production only, that is directly attributable for the production of goods. Therefore it will be capitalized to the cost price of inventory as per Ind AS 2 and it will become the cost price of inventory. Then it will not be capitalized to the cost price of PP. Understood? Correct? Because the benefit of this dismantling will be during which period? Production period. So entire cost should be allocated to each unit produced during that particular period. This is an exception to this rule. So this point will be applicable only when the question has provided this type of information. Otherwise, ignore this particular point. So this point may be important for MCQs, may be important for MCQs. Chalega. With this, we have understood the elements of cost price of PP. So can you repeat? It will include purchase price, directly attributable cost, and initial estimated cost of dismantling, etc. Correct. Now coming to self-constructed asset, means can I say either we can acquire asset or we can do construction. So whenever we do construction, so we will incur some cost of construction. So what Ind AS 16 says, the rules of whatever we have discussed right now, that is applicable to self-constructed asset also. The rules remain same. Whatever was the element we have discussed right now, same element will come in this. Only we need to be careful about two costs. Can you say whenever we do construction, there can be specific cost of construction or there can be some allocable cost of construction. So if there are some allocable cost of construction, so we need to allocate it as per the sum benefit ratio. Correct. That benefit ratio will be given the question. As per that benefit ratio, you need to allocate that cost to what? The cost of construction. Understood. Then they have given three special points. During construction, if there is some abnormal loss will not be added to the cost price of PP, that will be charged to profit and loss account as an expense. Then one more clarification they have given, that any internal profit included in the cost should be eliminated. Can I say internal profit we always eliminate in every chapter? In consolidation chapter, in Bachpan C and branch chapter, departmental chapter, we have always eliminated internal profit. To the cost include internal profit of the organization, that should be eliminated. That should not be a part of the cost of construction. Then one special point they have added that this might be important. Correct. What they are saying, that income and related expense of any incidental operation that may occur before or during the construction or development of an item of PP are recognized in PL. So any income and expenses related to incidental operation during the development of that property, plant, and equipment will be always transferred to PL. The best example I'll give about car parking. Suppose you have some land and the land is, some construction is going on, but some portion of land is idle. So you may give that land portion for parking purpose. So when you have given for parking purpose, you are generating some income and you are incurring some expenses. Yeah, these income and expenses are not directly attributable to the construction of PP. Correct. Now therefore it will be transferred to what? Profit and loss account. So any income and related expenses of incidental operation. Now only one clarification I will give you for this particular point. Just try to understand. Just try to understand. There can be two type of income and expense. There can be two type of income and expense. Means if I say it is directly attributable. If it is directly attributable. For example, sale of scrap material. Sale of scrap material. For example, you are doing construction of building. For that you need to demolish old building. So when you demolish old building, some scrap will be there that can be sold in the market. To some sale of scrap metal will be there, that is directly attributable to the construction of PP, and therefore it will be deducted from what? Cost price of PP. So it will not be transferred to PL. It will be deducted from what? Cost price of PP. Understood this point? Have you understood this point? But if it is not directly attributable, the given example, parking wala example, is not directly attributable to the construction of PP. Therefore, it will be transferred to what? Profit and loss account. Understood this point? This clarification you understood? Yes, sir. Now, coming to the next point, what are excluded from cost price? Can I say simple example which are not directly attributable are excluded from cost price? Which are not directly attributable are excluded from cost price. That will be charged to PL as an expense immediately. So whatever costs which are not directly attributable will be charged to profit and loss account as an expense. For example, they have given some example. The cost of conducting business in a new location or with a new class of customer. If you are doing some new business with a new class of customer, that cost will not be capitalized, including any staff training cost. Any staff training cost will never be capitalized. Cost incurred in introducing a new product or services. Suppose you have introduced a new product, you have done some marketing activities, that will not be capitalized. Cost of opening a new facility. For example, you open a new factory and you have done some inauguration expenses, that will never be capitalized. Admin and other general overhead will never be capitalized. So one clarification has been given. However, it is understood that these are not directly attributable to the acquisition or construction of PP. Chalega. Then when to cease capitalization? When to cease capitalization means right now we are into initial recognition. So when to cease capitalization? So what they are saying, once the asset is ready for its intended use, will cease capitalization. Once the asset is ready for its intended use, it will cease capitalization. Means what they want to say, suppose this is the date of acquisition. This is the date of acquisition. This is the date when the asset become ready for use, and this is the date asset is actually put to use. Quite possible. Means the time gap might be 2 months, correct? So there are some expenses which are incurred here, but there are some expenses which are incurred here. So we need to cease capitalization at this point of time. We need to cease capitalization. Means this cost will be capitalized, but this cost cannot be capitalized. This cost will be charged to profit and loss account as an expense immediately. So whatever cost you are incurring after the asset is ready for use, till that asset is actually put to use, will be charged to profit and loss account as an expense. And therefore they have given some clarification. These are the examples which will never be capitalized. For example, cost incurred when the item is ready for its intended use has yet to be brought into use. This cost will never be capitalized. Initial operating losses. Suppose you started your operation and you are incurring some losses. Can I say always initially will incur some losses? That will not be capitalized. That will not be capitalized. Cost of relocating or reorganizing part or all of the entities operation. This is the most doubtful point. For example, Abhi, right now I am doing my classes in this premises. We may shift to another premises. So I need to relocate all my property, plant and equipment from this place to that premises. So there will be some relocation cost. Can we capitalize it? No, no, no. Because it was already ready for use. Once it is ready for use, after that whatever cost you are incurring, that will never be capitalized. So this will be also charged to profit and loss account as an expense immediately. Even though your relocation cost is in lakhs, then that cannot be capitalized. Understood? Yes, sir. Then 2 points they have given about borrowing cost. Borrowing cost can be capitalized as per the requirement of Ind AS 23, and government grant may be deducted from the cost price of PP as per the requirement of Ind AS 22. That we'll discuss in the relevant chapter. Then PP acquired in exchange of non-monetary asset or a combination of non-monetary or monetary asset means PP acquired in exchange. PP acquired in exchange. Before I do it, means can I say we are doing what? PP. Can I say it can be acquired or it can be constructed? Correct now? Acquired. So it can be acquired for monetary consideration or non-monetary consideration. Monetary consideration. Can I say it can be acquired in cash or credit? Understood? Can I say it can be also acquired in exchange of equity shares? It can be acquired in exchange of equity shares also. Can I say it can be acquired in lease transaction also? It can be acquired in lease transaction also. I hope you are understanding. Are you able to understand? Correct. Now, constructed right now it is covered. We will do already we have done as per Ind AS 16. In cash also we have done as per Ind AS 16. This credit also we have done as per Ind AS 16. That is deferred payment. If it is the payment is delayed beyond normal credit period, that point we have covered. This point we are right now doing non-monetary consideration. But if PP is acquired in exchange of equity shares, then what you will do? Excellent. Ind AS 102. Tab maja aata hai. Means you have done this. Means now this revision will be important when you have done previous classes. Correct now. So in this Ind AS 102 will be applicable. So whenever PP is acquired in exchange of equity shares, then Ind AS 102 is applicable. Ind AS 16 is not applicable. So Ind AS 102 coming soon. And whenever it is acquired in lease, then Ind AS 116 will be applicable, and in the books of lessee ROU asset will be recognized. Correct. So it will cover all acquisition. It will cover all acquisition. Correct. Understood. So now we are doing in exchange of non-monetary consideration. So very simple formula they have given. In this case, the cost price will be equal to fair value of asset given up plus minus cash adjustment. Fair value of asset given up plus minus cash adjustment or fair value of asset received, whichever is clearly evident. Whichever is clearly evident. Means what they want to say is suppose this is 10 lakh and this is 11 lakh. Both are given. So first preference will be given to what? First preference will be given to what? Fair value of asset second. So in exam always first preference will be given to fair value of asset given up. If that is not given in exam, then second preference will be given to fair value of asset received. So if both are not given, then it will be the cost price will be equal to carrying amount of asset given up plus minus cash adjustment. So if fair value of both asset given up and asset received is not given in exam, means it is not clearly evident to us, then the third preference will be what? Third preference will be what? Carrying amount of asset given up plus minus cash adjustment, plus minus cash adjustment. Understood? Have you understood this point? So what clarification Ind AS 16 has given, that if the fair value of asset are not reliably measurable or exchange transaction lacks commercial substance, exchange transaction lacks commercial substance, in that case cost price of PP acquired will be equal to carrying amount of asset given up plus minus cash adjustment. So I hope you have understood, if fair value of asset are not reliably measurable, then of course it will be equal to carrying amount of asset given up. But if the exchange transaction lacks commercial substance, it means what? It, in simple what I will say, that exchange item are similar. If exchange item are similar, can I say if you exchange similar item, so there is no commercial benefit? There is no commercial benefit. So if you exchange similar item, so there is no commercial benefit, means this transaction lacks commercial substance. In that case, you will not recognize any gain or loss on the date of exchange. Therefore, they are saying that recognize cost price of PP as equal to what? Carrying amount of asset given up plus minus cash adjustment. Understood? So if exchange transaction lacks commercial substance, can I say this point will be applicable in exam only when they have informed you about this point? Otherwise, we will not be able to understand by our own the exchange transaction lacks or do not lacks commercial substance. However, they will give some type of information like that your two buildings are in near location, same location. If two buildings of same size, etc., are what? In same location, so it is quite possible that they want to ask you this point, the exchange transaction lacks commercial substance. Understood? In that situation, you need to answer it this way. But whenever you have a doubt in exam, now I will say answer both. If suppose you have a doubt in exam whether the exchange transaction lacks or do not lacks commercial substance, so just give both answer. If this is the case, this is the answer. This is the case, this is the answer. Understood? Correct? Yes, sir. I think simple. This is simple. This also you have understood. Correct. One more point about this. What journal entry you will do for this? Can I say new asset account debit? Old asset account credit? And if there is some cash payment, cash will be given up. This will be with what cost price? This cost price as per Ind AS 16, whatever we have done right now. But the old asset will be credited with what? Carrying amount. This will be with carrying amount. This is the whatever consideration paid, and the difference will be what? Gain or loss on sale of old asset. Gain or loss on sale of old asset. This gain or loss will be transferred to what? PL. This gain or loss will be transferred to PL. Chalega? Yes, sir. Understood. Now, coming to subsequent cost. Can you say once we started using it, there will be some subsequent cost which will be incurred on that property, plant and equipment. So what Ind AS 16 says, there are two types, there will be three types of such subsequent cost. One is day-to-day servicing cost, one is replacement cost, and one is major inspection cost. Major inspection cost. So there are three types of cost. One is day-to-day day-to-day service cost. Okay, day-to-day servicing cost is only to maintain the asset in the same level. So what Ind AS 16 says, that will not meet the recognition criteria for capitalization. Therefore, this expenditure will be always charged to profit and loss account as a expense. So day-to-day expense will be what charged to profit and loss account without capitalizing it. But replacement cost and major inspection cost may meet recognition criteria. So what do you mean by recognition criteria? That two conditions: it is probable that future economic benefit will flow and the cost can be measured reliably. These two conditions satisfied, then that replacement cost and major inspection cost will be capitalized. Otherwise, it will be also charged to profit and loss account as an expense. If question is silent, always we will capitalize it. If question is silent, always will capitalize it, because normally they will meet recognition criteria. Understood? Correct. Now what Ind AS 16 says, that in this what you will do, first you will find out the carrying amount of the asset, whatever given. In this you will add the cost price of new component, and from this you will minus what? Carrying amount of old component. This will be the amount after replacement. So any new cost means any cost of new part will be added. and the carrying amount of old part will be derecognized. Carrying amount of old part will be derecognized. Correct now. Means can I say any item has many components, and now we know that we charge depreciation based on component accounting. We charge depreciation based on component accounting. So if you are following component accounting, you can find out the carrying amount of the part replaced, that will be derecognized. That will be derecognized. Now one information is given. Suppose this is not known. This is not known or not given in the question. Then what you will do? Then you will calculate it by using the present value of new cost. You can find a present value of new cost and then charge depreciation on these. So this will become what? Carrying amount of old part. So in this way you will find out in exam. Understood this point? Have you understood this point? Correct. I think this you have understood. This can be one important question from exam point of view. This type of question they may ask in exam. Correct now. One question I have that I would like to do, because this question is totally expected in exam, till now not asked in exam, and very good question. This question 9. Correct. What they have given? Flying Airways Limited is a company which manufactures aircraft parts and engine and sell them to a large multinational company like Boeing and Airbus Industries. On 1st April 2001, the company began the construction of new production line in its aircraft part manufacturing set. So they are doing construction of new production line. New production line means they are developing one facility for production. It is not production process. They are just constructing one production line. So that become a property, plant and equipment. Costs relating to the production line are as follows. Cost of basic material like lease price 12.5 million less 20% trade discount. This will be capitalized. Recoverable goods and service tax incurred not included in the purchase cost. So recoverable, whether it will be capitalized, it will not be capitalized. Employment cost of construction staff for the 3 months. So of course this will be capitalized, but is it given for how many months? 3 months. Other overhead directly related to construction. Of course this will be also capitalized. Payment to external advisor relating to construction. This will be also capitalized. Expected dismantling cost. This will be capitalized but at present value. This is the very simple. This type of question, lollipop question. But now maja aayega. The construction staff was engaged in the production line which took 2 months to make the ready for use and was brought into use on 31st May. So it was started on which date? 1st April. What was the completion date? 31st May. Means 2 months. So this will be taken for 3 months or 2 months? So we can do that proportionately allocated? Yes sir. The other overhead were incurred in 2 month period only. Thank you very much. They included an abnormal cost of 3 lakh caused by the major electrical fault. So what will do? Minus 900. 900 minus what? 300. This 300 will not be capitalized. This 300 will not be capitalized. The production line is expected to have a useful economic life of 8 years. At the end of the Flying Airways Limited is legally required, understood, to dismantle the plant in a specified manner and restore its location to an acceptable standard. The amount of 2 million mentioned above is the amount that is expected to be incurred at the end of useful life of the production line. The appropriate rate of discount is 5%. The present value also given rupees 0.68. So what you will do? 2000 into 0.68. Now one more point. If they have given 0.68, can you take 3 decimal in exam? Can you take 4 decimal? No maja aayega. If you take that 3 decimal and 4 decimal, then 6 months will come. Understood? So don't take. If they are given some information, suppose this is wrong also, take wrong. Understood? Don't try to change it. Don't try to change it. If the information if they have given 5%, understood? So don't change any decimal factor. You can write a note that from our point of view, the decimal factor is this much. That note you can write down. But you can't change the question. You have no right to change the question. Understood? If given 2 decimal, take 2 decimal. They gave 5 decimal, then 5 decimal. Chalo. 4 years after being brought into use, the production line was required a major overhaul to ensure that it generated an economic benefit for the second half of its useful life. Means some major inspection cost will be incurred after 4 years, which will give benefit for the next 4 years. Correct? The estimated cost of overhaul at current price is 3 million. The company computes depreciation charge on a monthly basis. No impairment of the plant has occurred. Analyze the accounting implication. Only I am here to explain this line, this para. If you have understood, then okay. If you have not understood, you will do mistake. Have you understood this point? Correct. What they want to say? even though you have done, you might have forgotten also. Let me revise this point. What they are saying? What was the put to use? Sorry, ready to use 31st May, correct? And what is the year end? 31st March 2022, correct? And can you say, let us assume this is the 4 years after this. So on this date, major inspection cost will be incurred, which will give benefit for another what? 4 years. So this will give benefit for another 4 years. Now major inspection cost, whatever be incurred, the current price is given. Current price means as on this date, current price, that is given how much? 3 million. 3 million has been given. So it means this is the present value of what? Future expenditure. So current price means this become present value of future expenditure. Thank you very much. They have given present value. Now what is the total cost incurred? 13,260. This we can calculate. 13,260. So this 13,260, what they want to say, just try to understand what Ind AS 16 want to say. See, whenever you have done some production, means you have constructed some property, plant and equipment. Suppose I have done the construction of this camera. So during that construction, whether I will do inspection or not? Yes, it means some costs are related to inspection or not, and that inspection will give benefit for the first 4 years, and after that once again you do some inspection, that will give benefit for how many years? Next 4 years. It means this 13,260 includes some inspection cost or not, and the as per component accounting, that inspection cost will be depreciated for how many years? 4 years. It means it has two parts. One is what? 3 million. 3 million means 3,000, correct? Now so 3,000 will be depreciated for how many years? 4 years, and balance 10,260 will be depreciated for how many years? 8 years. Understood? And now if you have understood, so you can charge depreciation for how many months for the first year? From 31st May to 31st March, 10 months. So in this 10-month depreciation, in this also 10-month depreciation. But this is for how many years? 8 years. This is for how many years? 4 years. You can do it. Have you understood this point? Have you understood this point? This only is given as a para. This para, carrying amount of previous inspection will be derecognized even if the cost of the previous inspection was not identified in a transaction in which the item was acquired or constructed. If necessary, the estimated cost of future similar inspection may be used as an indication of what the cost of existing inspection component was when the item was acquired or constructed. So for this para, that question was created. Till now that question has not been asked in ICI exam. 100% expected. 100% expected. In which attempt I don't know. It can be your attempt or any other attempt, but it is expected in exam. Understood? So you have understood subsequent cost. Now we'll come to subsequent recognition. Subsequent recognition. Subsequent recognition means what? Recognition after initial measurement, means at each reporting date. At each reporting date. Can I say at each reporting date we want carrying amount of the PP to be carried in the balance sheet? So how to calculate that carrying amount is the objective of this particular concept. They have given how many options? Two options, either cost model or revaluation model. Cost model or whether revaluation model and fair value model are same or different. Whether revaluation model and fair value model are same or different. Huh? Whether revaluation model, are you able? Doubt आया ना? हाँ, in MCQ they will ask this type of question. Doubt आया? हाँ, they will ask this type of question. They will pinch you. They will pinch you. Fair value model and revaluation model are different. Are different. Are different. Understood? Correct? You are saying same. You are saying same, na? It is different. Name is different, na? Name is different. Correct, na? CA final student and CA intermediate student are same. Both are doing CA, na? So both are different. Okay. So revaluation model is not equal to fair value model. Understood this point? Have you understood this point? So it is cost model and revaluation model. Cost model, revaluation model. Under cost model, how to find out carrying amount? It is cost less accumulated depreciation less accumulated impairment loss. This become carrying amount. Depreciation will be calculated as per Ind AS 16. The impairment loss will be calculated as per Ind AS 36. Okay, cost model is very simple. If you know depreciation, if you know impairment loss, you can find out carrying amount. But revaluation model requires थोड़ा सा discussion. Revaluation model means you need to find out first fair value on the date of revaluation. So find out fair value on the date of revaluation. It is fair value. It is fair value. Fair value less cost of disposal without deducting cost of disposal. Means they have given fair value 10 lakh and they have given cost of disposal 1 lakh. But you will take 9 lakh or 10 lakh? 10 lakh. Now it is at fair value. It is at fair value, not fair value less cost of disposal. Be careful in exam. Be careful in exam. Understood? Correct. So revaluation is done at fair value. Fair value. Now one of the objective of this entire session is to identify where you do mistake. Normally these are the point where you do mistake. So wherever I am stressing, just underline that point. Wherever I am giving stress now, stress means I am repeating 3 times. It means you do mistake there in exam in this point only. They will give you fair value. They will give you cost of disposal. You will take fair value less cost of disposal because Ind AS 105 what says? Fair value less cost of disposal. Understood? In exam all chapters will be amalgamated and in exam internal reconstruction required. Understood what I am saying? Every chapters will merge. Every chapters will merge. Therefore this clarification is required. So revaluation is done at what? Fair value less subsequent accumulated depreciation less subsequent impairment loss. Okay, so 1 second depreciation will be done. Miss, can you say any revalued asset also require depreciation? Any revalued asset also require depreciation. Now the question is that whether revalued asset require impairment. Whether revalued asset require impairment depends क्या होता है? Yes or no? It is given now. Less subsequent impairment loss. Means even though you have done downward revaluation, then also impairment is required because impairment is done as per Ind AS 36 and downward revaluation is done as per 16. So downward revaluation will be done at fair value or recoverable amount. Downward revaluation will be done at fair value or recoverable amount, and impairment loss will be calculated by using recoverable amount. Coming soon in which chapter? Ind AS 36. Understood? Correct. This is why I said this is only revision purpose. So I am using some other chapter reference also. Got this point? So it is fair value, fair value. So can I say this is also require impairment testing if there is an indicator? If there is an indicator as per Ind AS studies. This is the point where every student do mistake. This can be asked in MCQ question. MCQ question. Subsequent accrued depreciation we can calculate as per Ind AS 16. This become carrying amount. So revaluation model you understood. Now come to revaluation model. Now question is that this option cost model revaluation model, this option is available item wise or class wise? Class wise means if one item is revalued, all the item of that class require revaluation. So land is one class, building is one class, but we can have land 1, land 2. So if land 1 is revalued, entire class require revaluation. So option is available class wise, not item wise. Now frequency of revaluation, once you have opted revaluation model, should we do revaluation every year? Well, no. We don't, that does not require revaluation every year. But if the fair value changes significantly every year, means if the item of PP experience significant changes in fair value every year, then go for what? Annual revaluation. Otherwise revaluation can be done after every 3 to 5 years. For example, land value will increase every year. So for that you can go for annual revaluation. But for other asset, fair value will not increase every year. So you can go for what? 3 to 5 years. Understood? Now once you have adopted revaluation model, what will be the accounting treatment? So that accounting treatment depends upon first time revaluation or subsequent revaluation. The first time revaluation, there can be two situations: upward revaluation or downward revaluation. Upward revaluation means revaluation gain, downward revaluation means revaluation loss. So revaluation gain will be transferred to OCI as revaluation surplus. It will be credited to OCI as revaluation surplus. Jana, it will be PP account debit to OCI, and that OCI will be accumulated where? In revaluation surplus, in statement of changes in equity, means in other equity. Very good. Downward revaluation means revaluation loss. This revaluation loss will be transferred to profit and loss account immediately. Got this point? I hope you all know that statement of PL have two parts, PL and OCI. PL is first part, OCI is second part. Now subsequent revaluation is done based on what? Previous revaluation. The subsequent revaluation is based on previous revaluation. If previously there was upward revaluation, now again upward. So 1 second revaluation gain, 1 second the revaluation gain will be transferred to OCI as revaluation surplus. But previously there was downward revaluation, that the revaluation gain will first, the revaluation loss will first adjusted with OCI to the extent of revaluation surplus available. Balance loss will be debited to what? PL. Means what journal entry will do? OCI account debit, PL account debit to PP. OCI account debit to the extent of revaluation surplus available. Then balancing figure will be debited to PL account to PP. Understood? Correct. Now previously there was a downward revaluation, but now again downward. The revaluation loss will be transferred to PL, but now upward. So it is a revaluation gain. So revaluation gain will first credited to PL to the extent of previous decrease. Means you nullify the previous loss. Understood? So it will be credited to PL to the extent of previous decrease, and the balance gain will be transferred to OCI as revaluation surplus. What journal entry will do? PP account debit to PL to the extent of previous decrease to OCI revaluation surplus with balancing figure. Understood this point? Correct. This also you have understood. Now accounting treatment of revaluation surplus, this is super important, and normally students forget about this. Accounting treatment of revaluation surplus. Can I say once you have done upward revaluation, there will be some revaluation surplus existing in the balance sheet. So what we'll do about revaluation surplus? So two options has been given by Ind AS 16 for the accounting treatment of that revaluation surplus. First option, which is easy, that entire revaluation surplus will be transferred retained earning on derecognition of asset. Entire revaluation surplus will be transferred to retained earning on derecognition of asset. Are you getting what I am saying? Entire revaluation surplus will be transferred to retained earning on derecognition of asset. Means can I say once it is sold, the entire gain become realized gain, and once it become realized gain, it should be available for distribution to shareholders. Therefore, it will be transferred from revaluation surplus to retained earning, but not to PL. It will be transferred directly to what? Not from PL, not from PL. It will directly transfer to retained earning. What journal entry will do? Revaluation surplus account debit to retained earning. Second option is given that a portion of revaluation surplus, a portion, not the entire amount, a portion of that revaluation surplus will be transferred retained earning during its remaining useful life. During its remaining useful life, and that portion will be an amount equal to additional depreciation. Amount equal to additional depreciation means, can I say in this way, an amount equal to additional depreciation due to revaluation, that we can calculate. An amount equal to additional an amount equal to additional depreciation due to revaluation will be transferred from revaluation surplus to retained earning. What will be journal entry? Journal entry is what? Where I said OCI? Where I said OCI? Think what I am saying. One second. Whatever I am saying, that only you will see, na? An amount equal to additional depreciation will be transferred from revaluation surplus to retaining. OCI kahan se aaya? From where OCI came? Huh? Think one second. It will be transferred from revaluation surplus to retained earning. What journal entry? Revaluation surplus to retained earning. Means journal entry is same. Here also journal entry is what? Revaluation surplus account debit to retained earning, but with full amount. Full amount now. Here the journal entry is what? Revaluation surplus to retained earning, but with an amount equal to additional depreciation. With an amount equal to additional depreciation. In exam, normally they ask SLM. If they ask SLM, then you can use one formula to calculate additional depreciation. That is revalued amount divided by remaining useful life. This will be the amount of additional depreciation. If it is SLM, RBM, then use this formula. RBM, the 99.9% they will give SLM. 0.01 chances that they may give what? RBM. It means they want to kill you. Correct? So if this is SLM, what is the formula to find out additional depreciation? Revalued amount divided by remaining useful life. Otherwise use this formula, depreciation revalued amount minus depreciation on original cost, that become additional depreciation. Understood this point? One question to you all. But the additional depreciation, whatever we have calculated right now, that will be charged to PL or revaluation surplus. Once again, additional depreciation, whatever we have calculated, that will be charged to PL or revaluation surplus. Huh? PL. Everyone saying PL? So any depreciation of whatever nature will be charged to profit and loss account. This is not depreciation. This is transfer of revaluation surplus to retained earning. Chalega? Yes, sir. Correct. Yes, sir. Then this adjustment of carrying amount of asset due to revaluation is not so much important. But what they are saying, me still now do not ask, but you don't know ICI, they can ask anytime. Means for accounting treatment, they have given two techniques for accounting treatment. Technique 1, technique 2. First technique is what? They say whatever accumulated depreciation, that will be eliminated. Means entire past accumulated depreciation will be eliminated on the date of revaluation. All the past accumulated depreciation will be eliminated through PP account. Means you will pass first this journal entry and then you will pass OCI, PP account debit to what? OCI revaluation surplus. This will be the first journal entry. Can you say with this journal entry, your accumulated depreciation will become 0? Your accumulated depreciation will become 0, correct? And gross book value will be equal to fair value less accumulated depreciation will become nil, and your net book value will be also equal to fair value. Understood this journal entry? Correct. Second, what they are saying, second journal entry, what they are saying, he will not eliminate accumulated, instead we increase PP and will also increase accumulated depreciation with proportionate amount, and the difference will be what? To OCI revaluation surplus. This is technique number 2. Means whenever question is silent, we'll use what? Technique number 1. Kasam ka, whenever question is silent, we'll use what? Technique number 1. Till now they have not asked technique number 2, but they can ask, if they ask me the specific question of this journal entry, it is a specific question of this journal entry, so what they want to say, I'll just inform you with one example. Suppose before revaluation 1 lakh, then 60,000, then 40,000 in net book value, and we have done upward increase by 80,000. So what is the carrying amount? 1,20,000. So what journal entry will do? First we'll eliminate all the depreciation. So what journal entry? Accumulate depreciation account debit to PP 60, and then how much increase? 80. That will be increased through the gross book value. So what journal entry will do? PP account debit to OCI 80,000. So net effect will be what? PP, the gross book value will become what? 1,20,000. You can see it become 1,20,000 now. 1,20,000 less accumulated depreciation will become 0, and the net book value will also become 1,20,000. Understood? This is the technique number 1. We'll follow this. This is simple to understand and simple to apply in exam. But what is the second option? In this case, there is one limitation in this presentation. You are using an asset from last 5 years and depreciation become 0. Can you say not a fair picture? Not a fair picture of presentation. Not a fair picture of presentation means the last year we have used this asset, 5 years we have already used, but depreciation becomes 0. Okay, not a fair information we are giving to the user of financial statement. Therefore, they have given one more presentation, technique number 2. What they say that 1 lakh become 40,000 due to this depreciation, and we have increased what? 1,20,000. So how much increase in net book value? Okay, 200%. This is 200% now. Means we increase net book value by how much percentage? 200%. So we'll increase proportionately gross book value and accumulate depreciation by 200%. Means we restate gross book value and accumulated depreciation proportionately. And if you increase 2 lakh and 1,20,000, it will become 3 lakh and 1,80,000. The difference will remain same only. The difference will remain same. Means the net book value remains same in technique 1 and technique 2. But what journal entry we are doing? PP has been increased by how much? Accumulated depreciation has been increased by, and the difference became 80,000. That will be transferred to OCI and revaluation surplus. Accounting impact remains same, only presentation different. Accounting impact remains same, but in this case gross book value become how much? 3 lakh. Accumulated depreciation become how much? 1,80,000. And net book value remain what? Same. Remains same. So the balance sheet total remains same, only the presentation change. Can you say if you inform this to the user, they will be happy? So this is only presentation purpose, only for presentation purpose, but this you will apply only when they have given a specific reference of this journal entry. Chalega. Otherwise apply what? Technique number 1. Chalo. Then coming to depreciation. Depreciation is nothing to say much. Depreciation you know from bachpan, but I will discuss important point. Depreciation, you know what is the meaning of depreciation? When to commence depreciation? When the asset is ready or when the asset is put to use? Ready to use. So depreciation will commence from the date when the asset is ready for use. When to cease depreciation? Depreciation cease when the asset is derecognized or when the asset is classified as held for sale, whichever is earlier. So when the asset is classified as held for sale or when the asset is derecognized, whichever is earlier. These are all important for what? MCQs. They will ask this type of question in MCQ. They will give two date when to cease, like this. Now, one more question. Suppose COVID-19 came and for three years no production and the asset was idle. Understood? And after 3 years we will start using it, but right now we are not using it because COVID-19 lockdown is there. 3 years no use, no production, nothing. So will you cease depreciation? No. Very good. So depreciation does not cease when the asset become idle or is retired from active use unless the asset is fully depreciated. So when the asset is idle, will not cease our depreciation. Will not cease our depreciation. Component accounting, I hope you know component accounting. Now we follow component accounting of depreciation. So each significant component require depreciation as per their useful life. So significant component information will be given, useful life information will be given, charge depreciation component wise in exam. But till now this type of question also not asked in exam. Okay. Residual value is an estimated amount that will be also given the question from exam point of view. The residual value will be always given the question. Depreciable amount, if cost model, it is cost minus residual value. If revaluation model, then fair value minus residual value. My question to you all, at a given point of time, suppose 31st March 2023, we are calculating depreciation. Under cost model, we suppose entity A is following cost model, entity B is following revaluation model for the same asset. Whether residual value will be same or different? For revaluation model and cost model? Same. Very good. So residual value will be same whether you are following cost model or revaluation model. Under cost model, revaluation model, residual value remain same. Understood? Only what will change? Depreciable amount will change. Understood? Yes sir. Depreciation method, very easy. There are three depreciation method. SLM, reducing, SLM is straight line method, RBM is reducing balance method, and third is what? Production unit method. Production unit method. Okay, this will be done as per the information given the question, whether SLM, RBM or production unit method. Correct? Understood? Yes sir. So this, I think no explanation required. SLM, RBM and production unit method, this you are doing from CA foundation level. But can I say under production unit method, when there is no production in a particular year, will you charge depreciation? Very good. But under SLM, if you are not using the asset, under RBM, so one exception has been given that under production unit method, depreciation can be zero when there is no production, but this will not result to what? Ceasing of depreciation. Similarly, sometime what happens, residual value might become more than carrying amount. Quite possible. The residual value is more than carrying amount. Will you charge depreciation? No. It does not mean it is a ceasing of depreciation. Next year it can be reverse situation. Next year residual value can be less than what? Carrying amount. It will not result in ceasing of depreciation. Understood? Then change in useful life, residual value, depreciation method. Of course we know that we should review, we should do reassessment of useful life, residual value and depreciation method at the end of each financial year. Why at the end? Why not at the beginning? Why at the end? Means we do reassessment of useful life, residual value and depreciation method at the beginning, at the end. Why at the end? Because we calculate depreciation at the end. We calculate depreciation at the end. So okay, useful life is an accounting estimate, residual value is an accounting estimate, but the depreciation method is an accounting estimate or accounting policy? Accounting estimate. Very good. So okay, changes in this will be changes in accounting estimate, and therefore as per Ind AS 8 we will apply retrospective accounting or prospective accounting? Prospective accounting. Prospective accounting. But for this, one clarification I want to give you from examination point of view. Suppose they have given this year useful life at the beginning was 10 years, and they have given at the end of third year useful life from 10 year it becomes 15 year. Quite possible. Means this is useful life from the beginning. Reassessment of useful life. So we need to calculate new depreciation for third year ki fourth year. Third year ki fourth year. Understood the doubt? Doubt is this. And here actually we do some mistake in exam. But the depreciation we should calculate from third year, new depreciation, revised depreciation for third year ki fourth year. How many are saying third year, how many are saying fourth year? Third year. Fourth year? So it will be third year because we are doing reassessment at the end of third year for calculating depreciation for which year? third year. So it, of course we need to calculate new depreciation for which year? Third year, based on the new useful life. Understood is fine. Depreciation you can calculate, that is not a point. But third year, fourth year, you have understood. But similar question, now exam question are dangerous. Can I say exam question is exam emotions? Emotions of exam, practical emotions will fail in exam. Now they have given information in this way, the same information what they have given. Useful life is equal to 10 year, and at the end of third year, remaining useful life, they have given at the end of third year, remaining useful life is suppose 12 years. So but this remaining useful life will start from which year? Fourth year. Means what is the emotions of the question? They have given remaining new life for which year? Third year ki fourth year? Fourth year, na? Understood. Practically this is correct, but emotionally this is now what? They are giving at the end of third year, remaining useful life is how many year? 12 years. So that is start from which year? Fourth year. It means in this new depreciation you will calculate for which year? Fourth year. You will assume that for third year depreciation was calculated based on old useful life. This is emotions of the question. So you need to respect the emotions of the question in exam. Understood? So understand the language of the question. Understand the language of the question. Correct. I hope these two difference you have understood. Difference you understood? But depreciation question normally they don't ask at CA final level. CA final level they will not ask this type of question. But this type of question is given in ICS study material. Chalega. Now land and building. Land and building. Suppose you purchase land and building together. Now we all know the land is not a, building is a. So we need to split it. We need to distribute cost, total cost in land and building will be depreciated. Land will not be depreciated. Correct. But what Ind AS 16 says that sometimes land is also depreciated. Some portion of land might be depreciable. If it has a limited life. For example, you have done some improvement on land. You have done some improvement on land for your business purpose, and that improvement improvement cost required after every 5 years. So that improvement cost is added to land, but it has a limited life of how many years? 5 years. So that improvement cost will be as per component accounting will be depreciated for how many years? 5 years. So some portion of land might be depreciated. Be careful. Be careful. Understood? Have you understood? Correct? Yes. So that is only given. Chalega. Then impairment loss will be covered under Ind AS 36. Derecognition means derecognition of the asset. When to derecognize? When the no future economic benefit is expected from it, or when the asset is disposed of. So when the asset is disposed of, or when no future economic benefit is expected to flow. Correct? Understood? Can I say whenever there is a derecognition, we need to find out gain or loss on sale? Gain or loss on sale. So that gain or loss on sale will be transferred to. If suppose there is a revaluation surplus, then confusion हो गया ठीक है ना. Suppose there is a revaluation surplus of rupees 10 lakh and there is a loss of what? 1 lakh on sale. But this loss will be transferred to PL or will be adjusted to revaluation surplus? Adjusted to PL or revaluation surplus? How many are saying PL? समझ में नहीं आ रहा. How many are saying revaluation surplus? मजा आ रहा है. All are wrong. Revaluation surplus wrong. I am here to identify the mistake which you will do in exam. This is what student emotions mistake. You know everything, you have learned everything, but in exam you will fail because revaluation surplus given. मजा आ रहा है. Correct ना? Revaluation surplus will not be adjusted for loss on sale or profit on sale. The profit or gain or loss will be always transferred to what? PL. Right on PL. This is the area where you will do mistake. This gain or loss will be directly transferred to PL. Directly transferred to PL. Directly transferred to PL. Will not be adjusted with revaluation surplus, even though given in the question. Understood? Correct? How? Once derecognition done, entire revaluation surplus will be transferred to what? Retained earning. If first option is available. Second option, already you have transferred some portion, then balance portion will be also transferred to retained earning. How to calculate gain or loss? Sale proceed will be given the question. Less any cost of disposal. Less any cost of disposal. Net sale proceed minus carrying amount of what? Assets. So that carrying amount you can find out, that will be gain or loss on sale. So this cost of disposal will be always given in the question, nothing to worry. But can you say dismantling cost, removing cost is also cost of disposal? Correct. So in this there are 2 points. If the dismantling cost, removing cost is already capitalized, then it is not a cost of disposal. Then do not add यहाँ पर, हाँ, means do not consider यहाँ पर. Understood? But if dismantling cost and removing cost was not initially capitalized, then it will become what? Cost of disposal. Then it will become cost of disposal. Once again, this type of question has not been asked, can be asked in exam. Understood? Have you understood this point? Yes, sir. Now there is one special point. We all know that sale of PP is not a revenue. Sale of PP is not a revenue. Therefore, it will not be classified as revenue as per Ind AS 115. So it is not considered revenue as per Ind AS 115. But there is one special point. This special point till now not asked in exam, but can be asked in exam. Suppose there is a car dealer. Now car dealer means their business is to purchase and sell car. So they have allocated 100 car for sale, and they have allocated 20 car for rental purpose. Quite possible. Now this rental purpose, but it will be PP or inventory? PP, very good. It is PP. And this will be what? Inventory. So Ind AS 16 will be applicable. Cost model or revaluation model as per the choice of management. Correct. Now, after some time, what I mean, after 1 year, 2 year, it will be ceased to be given on rent, and it will be included as a inventory only for sale in the ordinary course of business. So it requires reclassification from PP to inventory. So on that date, when it is ceased to be given on rent, will reclassify, will pass one journal entry inventory account debit to PP at which amount? At carrying amount or at carrying amount. Correct. Now we'll sell such inventory. So sale of such inventory which was initially classified as PP will be revenue or will not be revenue? Will be revenue. Good question. Good question. In exam, this case study, they will give entire story, huh? Entire story will be there. So that will become difficult question. Understood? Correct? So this sale of such inventory which was initially classified as PP will be classified as revenue. Till now not asked in exam, can be asked in exam. This point. Correct? Scope you do by your own. Scope and the scope now also become important, huh? With MCQ. I will do, or you can do by your own. Scope and disclosure, I don't want to do it. You want me to read it? Scope. Chalo. Because every point is now important because of MCQs. Because of MCQs, now all these points are important. Means in the old scheme, these points were not important because they were not supposed to write something about scope of Ind AS 16. Now they will give MCQs. Now following are not covered in Ind AS 16. This type of question can be asked. So all point with MCQs, entire reading is required. No selective study. No point can be left. Because 1 mark is also important. Ask those students who got understood. Correct? So that is also important. So not applicable to what? PP classified as held for sale. Ind AS 105 is attracted. Biological asset other than bearer plant. Ind AS 41 is applicable. But for bearer plant, so for bearer plant, Ind AS 16 will be applicable. This is very important, can be asked in exam. Means can the cost of bearer plant will be calculated as per Ind AS 16? Cost of bearer plant will be calculated as per Ind AS 16. For bearer plant, cost model and revaluation model will be applicable. Depreciation will be also charged. Impairment loss as per Ind AS 36. Means everything whatever we have done will be applicable to bearer plant. But for biological asset other than bearer plant, Ind AS 41 is applicable. Correct. Now, so what is the meaning of bearer plant? So bearer plant a living plant. Achha, what do you mean by biological asset? Biological asset means living animal, living plant. Living animal, living plant. Correct. So bearer plant are living plant that satisfy how many conditions? 3 conditions. 3 conditions. First, which is used in production or supply of agricultural produce. Which are used in production or supply of agricultural produce. Which are expected to bear agriculture produce for more than 1 accounting period. And last, it is not held for sale as an agriculture produce. Means the plant itself is not an agriculture produce. Plant itself is not an agriculture produce. Understood? If these 3 conditions satisfied, then that living plant will become bearer plant. For example, the best example is what? Can I say mango tree? It is held to produce mango, which is expected to bear mango for more than 1 year, and the plant itself is not an agriculture produce. Therefore, it become a bear a plant, and Ind AS 16 will be applicable to such plant. But if I say annual crops, okay, this is not expected to be produced for more than 1 year, because this will be harvested totally. It will be harvested totally. So it is not a bearer plant. Understood? Correct. Detailed discussion once again we'll do about this in Ind AS 41. It is also not applicable to recognition and measurement of exploration and evaluation of mineral resources. So any recognition and measurement of exploration and evaluation, there is one Ind AS 106, which is not in our syllabus. Thank you very much. It is not applicable to any mineral right and mineral reserve. No Ind AS till now. Ind AS 16 is not applicable to such right. Such right. A clarification has been given. Ind AS 16 is not applicable. Done. Disclosure. So I hope we can do it. Disclosure, read by your own. Okay. Disclosure, read by your own. Disclosure, what I will do. The last point of this chapter is Appendix A to Ind AS 16. You know about Appendix A? What do you mean by Appendix? Appendix is just an attachment to Ind AS, but that is not Ind AS 16. So if in exam such question comes, you can't write on as per Ind AS 16, you write on as per Appendix A to Ind AS 16. Appendix A to Ind AS 16. So one doubt came. This is nothing but clarification of doubt. We have done one journal entry for dismantling cost PP account, debit to provision. Now this provision Ind AS 37 applicable. Now 37 says about the reassessment of what? Reassessment of provision. Reassessment of provision. So in future, this provisional amount may change. Either there will be increase in liability or decrease in liability. So what accounting treatment for increase or decrease in liability, whether it will be adjusted in PP, that doubt came. That clarification was not given under Ind AS 16. Therefore, the clarification was given by way of Appendix A to Ind AS 16. So very simple clarification. What they said, any adjustment in provision amount, the accounting treatment will be based on whether we have adopted cost model or revaluation model. Now cost model, so there can be either increase in liability or decrease in liability. If increase in liability, it will be added to the cost price of asset. It will be added to the cost price of asset. Decrease in liability, it will be deducted from cost price of asset. Simple. Correct. Now suppose the carrying amount of PP is 1 lakh, but decrease is 1,20,000. Quite possible. Then what you will do? The journal entry will be at provision account debit. How much? 1,20,000. PP, how much you can adjust? Only 1 lakh. So difference will be transferred where? To PL as a gain, and the gain will become 20,000. Done. Okay, due to this adjustment, the carrying amount will be changed. The carrying amount of PP will change. So adjusted carrying amount means revised carrying amount will be depreciated during remaining useful life on prospective basis. Clear? But whenever this is revaluation model, then we can't adjust the increase or decrease in the cost price of asset, because there is no cost price of asset, there is a fair value of asset. Correct. Now can we change the fair value PP? No, we can't change the fair value PP, because then it will be not fair, because that is fair value. Can you change the fair value PP? Then what is the use of revaluation model? Correct. So you can't adjust with the amount of PP. Then in this case, increase or decrease. Can the increase will be loss, decrease will be gain. So this loss will be adjusted with what? Revaluation surplus to the extent available, and the balance loss will be debited to what? PL. So what journal entry will do? OCI, revaluation surplus account debit, PL account debit to what? Provision. Very simple. In this case, gain. So if there is a revaluation surplus, means previously there was a upward revaluation, then it will be transferred to what? So we'll say provision account debit to OCI, revaluation surplus. But previously there was a downward revaluation, then provision account debit to PL to the extent of previous decrease, and the balance will be transferred to what? OCI, revaluation surplus. Means accounting of this is similar to subsequent accounting of revaluation model. Subsequent accounting of revaluation model. This para is also very important. This para is also very important. Till now, so they have not given good question of this. Means I think no, they have not given till now any question of this nature. But 100% expected. 100% expected. Understood? Understood? So it is also expected. You can say important from examination point of view. Done. Difference Difference, I don't think so they will ask any question on difference, but all the differences are given where? Given where? In ICS study matter. But as per syllabus is concerned, they have given only four accounting standard. One is AS 7, one is AS 9, one is AS 22, and one is AS 19. Achha, four accounting standard for which difference need to be understood. That is given specifically in the syllabus. So I will say if they will ask difference, this is more important than other accounting standards. So this will do when we will do the revision of respective chapter. Chalega? Yes, sir. This difference you can read by your own. I will not read. So from my point of view, Ind AS 16 is completed. I like to take one or two more questions so that थोड़ा हो जाएगा practice. Question 13. On 1st April 2001, Sun Limited purchased some land of rupees 10 million, including legal cost of 1 million. But it will be capitalized? Yes. In order to construct a new factory, construction work commenced on 1st May 2001. Construction work commenced on 1st May. Sun Limited incurred the following costs in relation to the construction, preparation and leveling on land. Whether it will be capitalized? Yes. Purchase of material of construction? Yes. So it is 6.08 million. Be careful. This is given lakhs. This is given million. They want to play with your mind. This is in exam. All this information are dangerous. Dangerous. Understood? So be careful while converting it. Chalega? Employment cost of construction worker 2 lakh per month. Ab how many months we need to understand? Overhead costs incurred directly on the construction factory 1 lakh per month. Whether it will be capitalized? Yes. Ongoing overhead costs allocated to construction project using company's normal overhead allocation model 50,000 per month. Whether it will be capitalized? Why not? Ongoing, related to ongoing activities. Because this word ongoing, yeah, it is not an incremental cost. This will not be directly attributable. This will not be capitalized. Income received during the temporary use of factory premises, a car park. Whether it will be capitalized? No, it will not be capitalized or no. Cost of relocating employee. Cost of opening ceremony. No. The factory was completed on 30th November, which is considered a substantial period of time as per Ind AS 23. It means the interest cost will be capitalized. And the production began on 1st Feb. But of which date is relevant? 30th November ki 1st Feb? 38th November. This is not at all important. Depreciation will begin from 30th November. The overall useful life of the factory building was estimated at 40 years from the date of completion. However, it is estimated roof will need to be replaced 20 years after the date of completion, and the cost of replacing the roof at current price would be 30% total cost. They have given for component accounting. So there are two parts, roof and other. So roof, what is the useful life? And for other part, 40 years. At the end of 40-year period, Sun Limited is a legally enforceable obligation to demolish. Okay, sir. The director estimate that the cost will be 20 million. Okay, sir. An annual risk adjusted discount rate is given 8%. Okay, sir. The present value of rupees 1 in 40-year time at annual discount rate of 8% is 4.6 cents. Batao. 4.6 cents means what? Whether we will take in cent or rupees? Rupees now. It means this becomes 0.046. 1 second, dangerous. Exam, all this information are dangerous. Correct? So it means discounting factor is 0.046. So 20 million multiplied by this. The construction of factory was partly financed by loan of 17.5 million, which was taken on 1st April 2001. The loan was at an annual rate of interest of 6% during the period 1st April to 31st August. When the loan proceeds have been fully utilized to finance the construction, Sun Limited received an investment income 1 lakh on temporary investment of the proceeds. I think you know, as per Ind AS 23, whenever there is a specific borrowing, the borrowing cost to be capitalized will be borrowing cost incurred less income from any temporary investment. The net amount will be capitalized. So this 1 lakh will be deducted from actual borrowing cost and the net amount will be capitalized. Correct? Means I have done all the points are simple. You can do it. First thing, into how many months? Into how many months? You will count from which date? 1st May to 38th November. It is coming 7 months, 7 months. Now only one point. You will calculate finance cost to be capitalized for how many months? Means you understand my question? The borrowing cost will be capitalized for how many months? Borrowing cost will be capitalized for how many months? First, 4 months. Means 4 months how you have counted? May, June, July, August. August. Where it is given that it is repaid during the period 1st April to 31st August, when the loan proceed has not been fully utilized to finance construction. So whether it is repaid on 1st August, where it is given it is repaid, it is given during the first 4 months. The loan amount was not fully utilized, so some amount was invested. Means it was fully utilized after 4 months. Yes or no? So loan was there or not? So borrowing cost was there or not? So why you are saying 4 months? Jhatka. Jhatka samjhe? In exam mein jhatka. How they will give marks? You know, they will give marks like this. Because what they have marked, calculate a carrying amount. They will say, acha carrying amount, acha this is wrong, 0 marks. Understood? One mistake. Understood what I am saying? No sir, we have done this correct, this give marks sir. Fight. Fight, you want to fight. Step marking what? Step marking they will see end result. They will see end result. Understood? Are you able to understand what I am saying? And if the end result is wrong, 0 marks. If suppose some marks is given, but that will be 1 mark, 2 marks like this. So simple question become difficult when you are not reading the question carefully. I was knowing that you will do mistake, and therefore I have asked this question. And I think this question you have done previously also. Am I right or not? Same question you have done. Then also you have done mistake. Now once again, how many months batao? 7 months. But the loan was taken on which date? 1st April. 1st April to which month? 30th November na? Acha. Date of construction was 1st May. So will you, whether borrowing cost will start from 1st April ki 1st May? As per which Ind AS? Ind AS 23. So Ind AS 23 say the commencement date of capitalization will be done when 3 conditions are satisfied. That is, borrowing cost is incurred, expenditure on qualifying asset is incurred, and the activities which are necessary for construction, acquisition, etc. are also undertaken. This point will do in Ind AS 23. So this will be the commencement date of capitalization. So how many months? 7 months. 7 months. So 7 months. Now you can calculate this question become easy. So after calculating this, can I say out of this will include some land component? Land component is I think 10,000. 10,000. So building component become how much? 9912.50. Out of that 30% is what? Roof. 70% is what? So for this the useful life is 20 years, and for this useful life is 40 years. So from 30th November 31st March, how many months? It is 4 by 12 and 4 by 12. This much depreciation you will calculate. Understood? One mistake, but question become complicated. The question is not complicated because of the information. The question become complicated when you are not reading the question carefully. Chalega? Yes sir. One more question I would like to take this question. This is also not yet asked, but from my point of view it is expected. Now the time has came that they will ask this question. Correct. Only in this one point I need to explain. Entity has a nuclear power plant and related decommissioning liability. The nuclear plant started operating on 1st April 2001. The plant has a useful life of 40 years. Its initial cost was 1,20,000. This include an amount of decommissioning cost of rupees 10,000, which represented 70,400 in estimated cash flow in 40 years, discounted at a risk adjusted rate of 5 years. Means what is the future expenditure? What is the present value? At what rate? And this is already included in what? 1,20,000. So there is no need to again include it. So 1,20,000 include dismantling cost. Thank you very much. Yes sir. The entity's financial year end on 31st March. Assume that market based discounted cash flow valuation is 1,15,000 is obtained at 31st March 2004. This valuation is after deduction of an allowance of 11,600 for decommissioning cost, which represent no change in the original estimate after unwinding of 3-year discount. Correct? And at the end it is given that entity has adopted which model? Revaluation model. Now the question is that what they want to say, they have given 1,15,000 and they have given that this valuation is after deduction of an allowance of 11,600. What do you mean by these 2 points? Means if you have understood this point, this question is very easy or this question is dangerous. So what do you think about this point? Fast. What? Means fair value you are saying. Fair value is 1,26,600. Why? No, that is not a logic. Now just try to understand. I think you have understood, but I think you have understood either by your own or what, I don't know. But that is not the correct explanation. Correct explanation is what? Revaluation is done at what? Fair value of fair value less cost of disposal. Fair value, no? Fair value. Understood? Fair value. It means whether cost of disposal should be deducted or should not be deducted. Should not be deducted. But what they are saying, this valuation is done after deduction of an allowance of 11,600, means they have given fair value of fair value less cost of disposal. They have given fair value less cost of disposal, but we want revaluation at what? Fair value, not fair value less cost of disposal. Understood the correct explanation? Correct. So whatever you have said, it might be correct from solution point of view, but different question you will be in trouble. Because same point they have given for Ind AS 105, you will be in trouble. Understood what I am saying? So this is what? Fair value less cost of disposal. When you add what? Cost of disposal, it will become what? Fair value, and revaluation is done at fair value. Understood? And this point was requiring clarification. I think now this question will become easy. Understood? Same thing after that, once again they have given on 31st March 2005, entity estimate that as a result of technological advances, the present value of decommissioning liability has decreased by 5,000. So now there is a decrease in 5,000. This is changes in DRSL. Appendix A to Ind AS 10 will be applicable because asset was measured at revaluation model, so any decrease will be adjusted with revaluation surplus. That already we have done with Appendix A to Ind AS 16. And they decide that full valuation of asset is needed at 31st March 2005 in order to ensure that carrying amount does not differ materially from fair value. The asset was now valued at 1,07,000, which is net of an allowance for the reduced decommissioning liability. Means this is also what? Fair value less cost of disposal. In this also we'll add what? Cost of disposal. This will become fair value. So in this we need to find out what is the reduced decommissioning liability. That you will do some calculation, you can find out, that answer will come, and then you will add it, the fair value will come. Can you do this question now by your own? Understood? So this is from my point of view expected question which may be asked in exam. One more question where a lot of doubt came in my class after taking the class. This question, let me say whether you are doing correct or not. This question is also important, can be asked in exam. On 1st April 2001, an item of PP is offered for sale at 10 million with the payment terms being 3 equal installment of 33,33,333 over a 2-year period. Payment are made on 1st April, 31st March, 31st March. The property developer is offering a discount of 5%. 5% of 10 million means how much? 0.5 million if the payment is made in full at the time of completion of sale. Implicit interest rate is 5.36% per annum. So how the property will be recorded as per Ind AS 16? So this is deferred settlement term. Deferred settlement term, correct. My question to you all, what will be the cost price in this case? Cost price will be equal to what? Present value of all future payment. So present value of 33,33,333. How many year? 2 year. But first year is Y0 na? Then Y1, Y2. 3 times na? So the present value of these all 3 will become what? Will be equal to what? Will be equal to what? Will be equal to cost price. Acha, they have given 10 million minus 5%. 0.5 million means it become 95 lakh. What is this 95 lakh? What is this 95 lakh? Cost price. And the present value will be also cost price. Whether it will be same or different. Understand what I am asking? They have given 10 lakh minus what? 5%. Sorry, 10 million minus 5%. That is 95 lakh. And the present value of these will be also what? 95 lakh only. It will be 95 lakh only. It means the present value will be equal to purchase price at normal credit terms. At normal credit terms. So normal credit terms means what? Purchase price minus trade discount. And this is trade discount because this discount is given at a time of sale only, on the rate of sale. Therefore, this is trade discount, not settlement discount. Understood? Correct. It means the cost price will be equal to 95 lakh, and based on 95 lakh they have done the journal entry. Correct? Understood? Okay, sir. So this is one point where students are confused about this 5%. So now if you have understood 5%, you will be able to answer it in exam. Okay, sir. With this, I have completed. Now MCQs, batao what I should do. MCQs I will not read because MCQs reading will take a lot of time, and that is wastage of time in revision class. It is already given, so today you will go just read it all the MCQs by your own. Any doubt we'll discuss tomorrow. MCQs, any doubt, have a doubt will not come because hint is also given. I have given hint also. So don't see the hint. First solve by your own, whether you are able to do it or not. If the answer is correct, thank you very much. If the answer is not correct, see the hint. Even though that there is some doubt, you ask me in the class. But doubt will not come. Understood? So this is only to save your time. I have given the hint also. Chalega. Understood? With this Ind AS 16 over. I have almost taken 2 hours in Ind AS 16. Okay. Now Ind AS 16 was a bigger Ind AS. It will take time. Now whatever today is there, it is not so much big. Now I'll give you break at 2. Chalega? Lunch break at 2. 30-minute break will be there. Then 1 second we'll meet. And then we'll take 2.5 hours or 3 hours after that. It is the what I have said, 5 hours or 6 hours in between I will take every day. 5 to 6 hours. Chalega? So break is at 2. Chalega? You want break right now only. You want lunch break at 1 or 2? Huh? What? Today 1. You want at 1? Pakka? Huh? Chalo, today. As per your choice. So we'll take lunch break for 30 minutes only. Not more than that. I will come exactly in 30 minutes. I will start. Even though there is one student. Okay? Even though there is one student, I will start exactly after 30 minutes. Okay? So see your time. So we'll meet after. But from tomorrow at 2. भी मजा नहीं आएगा 2 hours में ठीक है ना तो 3 hours session is required. Okay, so 30-minute break, and this 30 minutes you can read MCQ also. ठीक है ना with lunch you can see ना time. Don't waste your time now. ठीक है ना any doubt you can ask me today only. Okay sir, चलो we'll meet after 30 minutes. Live student will meet after 30 minutes. Okay. Hello. Chalo. Can we start once again, everyone? Yeah. Now, one more thing I just want to say you that we have also planned for test series. Now, how we have planned the test series, that is also not mandatory. That is also not mandatory. But what I have planned, that I just want to inform you that suppose day 1 I am taking Ind AS 16, 23, Ind AS 38, Ind AS 2. Today I will take that. Today I have already informed you that you need to revise all these questions by your own of from any book. Just do it. That tomorrow whenever you are coming, correct now, so you can come 1 hour early, write down a test paper of that particular chapter, submit to us, and we will evaluate you. We will evaluate that, and we will just find out what weakness you have. Correct now. So that may improve your writing skills, because one of the more problem in exam that you are not able to write. You know everything, but you can't express in a proper way. What is actually the requirement that you do not understand, and when you are writing you do some mistake. So with that test paper, because what we are doing day 1 test in the next day only, but for that you need to revise today itself, today, yeah, in next day morning, and then come back and write down test. Or we can do that, you can also write down a test after class, day 2 class, that is also possible. Correct? Understood? So if you want to write down test paper, so contact our team. You need to register for that separately. Correct? For that registration separation required. This is also for online also. If you want to also register, if you want to join our test series, just write down one number. Write down one number 8766. You don't require. You can directly contact Nalayak number. Correct? So this is only for online student. Write down one number 8766246684. 8766246684. I will just say that don't call, directly message them. They will only call you back. Understood? So don't call, because that number will be totally busy only. So it is quite possible that what will say, only WhatsApp them. They will only call you at proper time. Understood? So for that, this test series will be in such a way that by the end of the 10th day, by the end of the 9th day, you will be able to write down 9 chapter wise test. And then we have also planned 3 cumulative tests. Cumulative test means what? Day 1, day 2, day 3. Correct? So combined test will be taken. Day 1, day 2, day 3. Just give a combined test. Then day 4, day 5, day 4, day 5, day 6 combined test. Then day 7, day 8, day 9 combined test. So that is also possible. If you want, that is also with us. And then one grand mock test. Grand mock test, what? After the entire revision. So that will be planned after 5 days. Will plan, so that 5 days, if you want to study something extra, you can study. Then come after 5 days, write down the test paper. Then of course we are planning for one more grand mock test. Means 2 grand mock tests there, but that is not compulsory. But one mock test you should write down. Understood? But that is possible only when you are following these revision classes. You are doing whatever I have said, then only that is possible. If that is not the case, then you write as per your requirement. Understood? Correct. So this test series I have just informed you that if you want, you can contact our team. Number already I have given. Now let us come to intangible asset, Ind AS 38. Ind AS 38. Now if you have understood Ind AS 16, Ind AS 38 is more or less same. There are few difference, need to be highlighted. Correct? Means entire PP and intangible asset are same to same, only meaning will be changed. So let us come to the meaning of intangible asset. What is the meaning of intangible asset? Intangible asset are asset. Correct? Of course they are asset which are identifiable, non-monetary, without physical substance. Without physical substance. and this para actually was given in AS 26, which is now deleted under Ind AS 38. So you can also delete if you have not deleted it, correct? So intangible asset are assets which are identifiable, non-monetary, without physical substance. Now we need to understand what do you mean by identifiable. This is the most important condition. So any asset which become identifiable, any intangible item which is identifiable will become what? Intangible asset. Means can I say all intangible items are not intangible asset? All intangible items are not intangible asset, correct? So for that three conditions required. First is what? Identifiable, then non-monetary, then without physical substance. First I will come to non-monetary. So what is the meaning of non-monetary? Non-monetary asset are those assets which are not monetary asset. Which are not monetary assets. So what do you mean by monetary asset? Monetary asset are those assets which have fixed or determinable number of units of currency and which are realizable in cash. Which are realizable in cash. In simple word I will say monetary asset are those assets which are receivable in cash. Any receivable in cash are what? Monetary asset. For example, debtor is what? Monetary asset. Loan is what? Monetary asset. To any amount which is receivable in cash, that is what? Monetary asset. So of course can I say PP is not receivable in cash. Inventory is not receivable in cash. So that are not monetary assets. Similarly, intangible assets are also not receivable in cash. Therefore, they have become non-monetary assets. Correct? So can I say debtor? Debtor is an intangible item or tangible item? Debtor is an intangible item or tangible item? Intangible item. Debtor is an intangible item but not intangible asset because they are monetary asset. So monetary asset may be intangible but may not be intangible asset. Understood this point? So monetary, you have understood non-monetary asset. Now without physical substance. Without physical substance means of course any intangible item will not have any physical substance. But can I say intangible item requires some storage device? Any intangible item requires some storage device, and that storage device will be tangible component. For example, if you purchase any software, the software will come in the compact disc CD. Correct now? Suppose we have developed any website. The website is an intangible item but will be stored in some server. The server will be tangible component. Correct now? So any storage device will be tangible component. So what Ind AS 38 says that the cost price of tangible component is insignificant as compared to the cost price of tangible component is insignificant as compared to intangible component, and therefore the entire asset will be intangible asset and Ind AS 38 will be applicable. Ind AS 38 will be applicable. Correct? Ind AS 38 will be applicable. This you understood. But sometime what happens, we purchase any tangible component with intangible component and both might be significant. Both might be significant. For example, the best example is laptop. Whenever we purchase laptop, so laptop we purchase with operating system, and operating system is also significant and laptop is also significant. In that case what we'll do, we need to apply Ind AS 38 ki Ind AS 16. The doubt will come. Doubt will come now. So if you purchase laptop, so whether we should apply Ind AS 16 or Ind AS 38? Ind AS 16. Why? No, both are significant na. Both are significant. Tangible component is also significant. Intangible component is also significant. So both are significant. It should be separated, and we should apply for laptop what? And for software what? That should be the case. But what Ind AS 38 says that if intangible component is an integral part of tangible component. Integral part means that tangible component cannot be used without intangible component. For example, our body is an external part, and can I say the lungs, heart, these are our integral part of the body. Can you separate? Can you separate? You can't separate. So can I say the body can be used only because of lungs as well. That become integral part. So that operating system is an integral part of tangible component. Therefore apply Ind AS 16. Apply Ind AS 16. But for depreciation will apply component accounting. For depreciation will apply component accounting. Understood? Correct. This question, believe me, this question has been given in MCQs of ICI. Understood? Level of MCQs. Level. This question I have not framed. This is in my. When I will explain this way. But this question has been given where? In MCQs of ICI. So just try to understand what is the level of MCQs. Means this you can answer only when you know the content of Ind AS, when you have understood the concept. Therefore, the 30 marks is very important marks. Now, the 30 marks will decide about aggregate. Aggregate will be based on what? 30 marks. How you are performing in the 30 marks, that will decide about your aggregate. Understood? So it means you need to be thoda sa be careful about MCQs in all subjects, not only in FR, in all subjects. Chalega? Yes, sir. So that is given without physical substance. So what they are saying, when the intangible component is an integral part of tangible component, then entity should apply Ind AS 16 to the entire asset. But if intangible component is not an integral part of tangible component, then separate it. Then for tangible apply what? Ind AS 16. For intangible apply what? Ind AS 38. For example, you purchase laptop with Tally software. So whether Tally software is an integral part of laptop? No. Without Tally software also we can use what? Laptop. So that is not an integral part. Then apply separate Ind AS. I hope you have understood these two examples. These two examples you can apply in exam. But the most important condition is identifiable. So identifiable means what? Ki an asset become identifiable if it is separable. If it is separable. Separable means what? It is capable of being sold separately. It is capable of being exchanged separately. It is capable of being transferred separately. So if it is separable, it is an identifiable asset, and that identifiable asset can be recognized as an intangible asset. Or means they have given two conditions. If any one condition satisfied, it is identifiable. The first condition is why it is separable. Second condition is what? It arises from contractual or any other legal right, even though it is not separable. Even though it is not separable. So if any intangible item arises from any contractual right or any other legal right, even though they are not transferable, even though they are not separable, it will be considered as intangible asset. For example, you purchase license to run any software, correct? And as per the terms and conditions, you can't transfer the license to some other party. So it is non-transferable. It cannot be separated. It cannot be separated, but it arises from which right? Contractual right. Therefore, it will be identified as what? Intangible asset. Understood? Have you understood? So there are two conditions. One condition satisfied become identifiable. So only identifiable will be the prime condition to determine whether it is an intangible asset or whether it is not an intangible asset. For example, just let us take one example. Suppose you have incurred some use branding expenditure, promotional expenditure, advertisement expenditure. So can you say that expenditure, whatever you have incurred, that will give you future recurring benefit? Now, of course, it is not a tangible component. That is an intangible item. So whether it meet the definition of intangible asset, whether it is identifiable. I'm asking you. Whether it is identifiable, whether it is separable, whether it is capable of being sold, capable of being exchanged. So it is not identifiable only, and it also not arises from any contractual legal right. Therefore, it is not identifiable, and therefore it is not an intangible asset. Therefore, entire expense will be charged to PL account as an expense immediately, even though expense is 1000 crore. Entire expense will be charged to profit and loss account as an expense immediately because it does not meet the definition of intangible asset. For example, Wipro has incurred a training expenditure of 1000 crore. Staff training expenditure of 1000 crore. Use amount. Whether it will be a tangible component? No. So it will be an intangible item. Whether it meet the definition of intangible asset, whether it is identifiable, whether it is separable? No. Whether it arises from contractual legal right? No. Means it does not meet the definition of intangible asset. Therefore, entire expenditure will be charged to profit and loss account as an expense immediately. Bachpan mein you have done one expense, preliminary expenses. Preliminary expenses, whether it will be charged to PL, whether it can be deferred also. Whether it can be deferred or charged to PL. Charged to PL or deferred? How many are saying deferred? No, you are in CA Inter till now. In CA Inter also we can't defer it. Okay. So it means it will not meet the definition of what? Intangible asset. Now apply definition of intangible asset on any expenditure which is not an intangible item. So any expenditure which is not a tangible component, you need to apply definition of what? Intangible asset. If definition satisfied, then apply this chapter. If not satisfied, charge it to profit and loss account as an expense immediately. All these are important for MCQs. All these are important for MCQs. Understood this point? Can we move? Asset to simple. Of course, it should meet the definition of asset. For meeting the definition of asset, there are two conditions: control and future recurring benefit. So there must be control and there must be future recurring benefit. What do you mean by control? Can you say even though asset is not owned, it may be under our control? So more important terminology, what control, not ownership. Not ownership. Control means what? We can use the asset and we can restrict other person to use it. If you can restrict other person to use it, it means it is under your control and that will be your asset. So that two conditions is given: control and future economic benefit. If all these conditions satisfied, identifiable asset, non-monetary, without physical substance, then item will become intangible asset. These all four conditions are important for identifying intangible asset. Once you have identified intangible asset, now you will apply which criteria? Recognition criteria. Same two conditions. Recognition criteria they have given that two conditions. It is probable that future economic benefit will flow to the entity and cost can be measured reliably. But can I say for intangible asset? For intangible asset, second condition also become very important condition, because for intangible items sometimes we are not able to identify the cost which has been incurred. The best example is what? Self-generated goodwill. Okay, goodwill meet the definition of intangible asset. Goodwill will meet the definition of intangible asset. For example, I am teaching from last 15 years, so I have a goodwill in the market, and goodwill has some value also. It has some value, but can we identify the cost incurred to generate that goodwill? No. We have incurred some expenditure. Means initially I have done lot of promotions activity, lot of free classes I have given only to increase my what? Goodwill in the market. So expenditure has been incurred, but we do not know how much expenditure has been incurred which is directly attributable in generation of that goodwill. Therefore second condition will fail. Therefore entire expenditure will be charged to profit and loss account, and that goodwill cannot be recognized as a intangible asset. Understood? Yes sir. The cost of an asset can be measured reliably. This also become an important condition for intangible asset. Then once you have recognized intangible, means once the recognition criteria is satisfied, then we'll go to initial measurement. It is similar to what? Ind AS 16. So I'll do thoda sa fast. So initial measurement done at what? Cost. At cost. Now what is cost? If it is separate acquisition, same thing. So separate acquisition, the cost of separately acquired intangible asset comprise of purchase price, including import duties, non-refundable duties and taxes after deducting trade discount, etc. Any directly attributable cost will be also capitalized. Correct. Example of directly attributable cost: cost of employee benefit arising directly from bringing the asset to its working condition, professional fee, etc. Cost of testing whether the asset is functioning properly or not. Same thing we have done there also. Examples of expenditure that are not a part of cost of intangible. Similar point: cost of introducing a new product or services, cost of conducting a business in a new location or with a new class of customer, admin and other general overhead. Same to same it has been done. Deferred settlement term, same thing. If the payment has been deferred beyond normal credit period, then cost price will be equal to present value of all future payment. Interest will be equal to future payment minus present value. Interest will be charged to profit and loss account over the period of credit unless it is covered under Ind AS 23. Similar point is given. Understood? Okay. Now when to cease capitalization, same thing, when the asset is ready for use or available for use. Normally for intangible asset we use available for use, but ready for use and available for use are same only. Once it is ready, we'll cease the capitalization. Understood? Means any cost incurred after the ready for use should not be capitalized, should not be capitalized. For example, cost incurred in using or redeploying an intangible asset. So any cost incurred after the asset is available for use, it will not be capitalized. Cost incurred while the asset is capable of operating in the manner intended by manager has yet to be brought into use. From ready to use up to put to use, no cost will be capitalized. Initial operating loss will not be capitalized. Acquired in exchange of non-monetary asset, same thing. Cost price of intangible asset will be equal to what? Fair value of asset given up plus minus cash adjustment, or fair value of asset received, or carrying amount of asset given up plus minus cash adjustment. We can see the first preference will be given up, second preference is received, third preference carrying amount of asset given. However, if the transaction lacks commercial substance, then cost price will be always equal to carrying amount of asset given up plus minus cash adjustment. Chalega? Yes sir. Then acquisition as a part of business combination, this will discuss in detail in which chapter? Business combination chapter. So I am leaving right now. Okay, na? This will be automatically covered in business combination chapter. Then acquired to government grant, this also will discuss in which chapter? Ind AS 20. Ind AS 20. So automatically you understand with Ind AS 20. Now internally generated intangible asset. Now what they want to say, कि any self-generated, internally generated intangible asset can be of two types. If cost cannot be measured reliably, it will not be recognized as an intangible asset. If the cost cannot be measured reliably, then it cannot be recognized as an intangible asset. But if cost can be measured, means there are some intangible asset, internally generated intangible assets for which cost can be measured reliably. For example, self-development of website, self-development of software, self-development of any know-how. Understood? So can you say for that cost can be measured reliably, and if cost can be measured reliably, then of course it should be recognized as a intangible asset because the recognition criteria will be satisfied. So in that case, what Ind AS 38 says that there are two phases of development. One is known as research phase, one is known as development phase. Any expenditure incurred during research phase will be charged to profit and loss account as an expense immediately, that will never be capitalized. But any expenditure incurred during development phase will be capitalized as an intangible asset if and only if 6 conditions are satisfied. How many conditions? 6 conditions. Out of that 6 conditions, 5 condition is related to future economic benefit. Means this demonstrate future economic benefit, and the last condition demonstrate what? Cost. So ultimately there are what? 2 conditions only. But whenever there are development phase, means whenever you are developing any intangible asset, so what Ind AS 38 said that you need to demonstrate what future economic benefit. For that demonstration, they have given 5 sub conditions. Understood? So what is that condition? There must be technical feasibility of completing the intangible asset. Correct? There must be intention to complete the intangible asset. There must be ability to use or sell the intangible asset. There must be existence of the market. There must be availability of adequate technical or financial resources. Can you see this all demonstrate the future economic benefit? Means whether you are able to complete or not, and after completion whether you are able to sell it or not. So it means whether there is a future economic benefit or not. Understood? And the last condition, whether there is an ability to measure the expenditure reliably or not. So the same condition. But if these 6 conditions not satisfied, so can I say we can't capitalize the development expenditure also. Means can I say in this way, just try to understand. This is also one of the important question in exam. Is suppose you started research phase during this particular point. 1 minute. Suppose you started research phase at this point of time, and research phase was completed यहाँ पर, so you started development phase at this point of time. You incurred 20 lakh, so this will be the charge to profit and loss account as an expense. But you started development phase immediately after research phase. Once research phase will be completed, you will start development phase. But you started it, but actual 6 condition was satisfied at this point of time. Understood? So you have incurred some expenditure यहाँ पर suppose 20 lakh, and after that you have incurred what? 40 lakh. So but what about this 20 lakh? Whether it will be charged to profit and loss account or it can be capitalized? Charged to profit and loss account. But suppose this is only 1 year, then suppose this is year 1 only. Understood? Doubt? Have you understood? Suppose this is the first year only. Now during the year the 6 condition was satisfied. Now the question is that this 20 lakh will be charged to PL or it will be capitalized? Charge to PL की capitalize fast. देखो doubt आया ना? Understood this batch? Why this is the batch? To clear all this doubt. This question will be only asked in exam. Means whenever you are not speaking loudly, means you have doubt. First answer was loud, so 100% correct. But now doubt. Either you will take more time in exam or you will skip it. And once you skip it, you can't come back in exam. Can you come back? You can't come back. And that confidence is required about your answer. Confidence will come only by revision. So whenever there is a doubt, apply your common sense and answer. Only one rule: apply your common sense as a CA, not as an engineer. Apply your common sense as a CA. Now as a common sense say answer whether it will be charged to PL or capitalized. मजा नहीं आ रहा है. Loud. PL or capitalize? So correct only. So it means you have applied common sense. Correct now. So whenever in any subject you have doubt, become CA. Answer. 90% time your answer will be correct. 90% time. But if you leave also you are not getting marks now. So answer it. But with confidence. With confidence. So you will save some time. You will save some time. And always the first answer is the correct answer. So have faith on your answer. Have trust on yourself. Okay? Correct? Yes, sir. So this will be charged to PL only. It means what Ind AS 38 says that you can capitalize only from this date. Only from this date. Means any expenditure which is incurred before that will be charged to profit and loss account as an expense. Understood this point? That is given this point. The cost of internally generated intangible asset for the purpose of initial measurement at recognition is the sum of expenditure incurred from the date when the intangible asset meet first recognition criteria. Understood. Now there are one more question. Suppose the carrying amount become how much? 40 lakh. Carrying amount become 40 lakh. Now Ind AS 36 is for impairment. What Ind AS 36 says that there are three intangible assets for which we perform annual impairment testing without any indicators. Means irrespective of indicator, they say that there are three intangible assets for which we perform annual impairment testing irrespective of indicator. First is goodwill arising from business combination. Second is intangible asset having indefinite life, and third is intangible asset not yet available for use. So development phase is not yet completed. It is not yet available for use. So for this will perform annual impairment testing irrespective of indicator. So in exam they will give recoverable amount, and recoverable amount is 30 lakh. So this 10 lakh is what? Impairment loss, and this 10 lakh will be also charged to profit and loss account. This type of question can be asked in MCQ. This type of question can be asked in MCQ. They will ask you carrying amount, and if you give 40 lakh, this is not correct. Understood? The carrying amount is what? 30 lakh, and impairment loss is what? 10 lakh. Understood? Chalega. Yes, sir. This also you have understood. The recognition of expense, already I have said this point. Whenever any expenditure which is on intangible item does not meet definition criteria or recognition criteria, will be charged to profit and loss account as an expense immediately. So if it does not meet definition as well as recognition criteria or any one of them, so it will be charged to profit and loss account as an expense immediately. Examples are given. This you can read. For example, expenditure on research page. Correct. Expenditure in startup activities. For example, establishment costs such as legal and secretarial costs incurred in establishing a legal entity. This is nothing but preliminary expenses. So preliminary expense will be also charged to profit and loss account as an expense immediately. Expenditure to open a new facility or business, for example, any inauguration expenses, etc. Expenditure for starting up new operation or launching a new product, etc. So if you have done some marketing activity, etc., that will be also charged to profit and loss account as an expense immediately. Expenditure on training activity, expenditure on advertisement and promotional activity, expenditure on relocating or reorganizing part or all of entity. Why I am reading this example? Normally in exam they ask this example only. So they will ask the example what is given in the particular Ind AS. So these all examples become important from examination point of view. So one time revision required. One time revision required. Understood? Yes, sir. Correct. Now subsequent recognition is same to same as per Ind AS 16. So don't write on as per Ind AS 16. Write on as per Ind AS 38 only. Huh? So as per Ind AS 38. Once again there are two model: cost model, revaluation model. Option is class wise. Frequency of revaluation, accounting treatment, then accounting treatment, revaluation supplement, then technique for presentation, all are same whatever we have done for Ind AS 16. So once again discussion is not required. But once again cost model or revaluation model. Understood? Yes, sir. Then coming to amortization. Amortization. Now my question to you all: any asset which are any intangible asset for which you are following cost model, will you amortize it? Yes or no? Difficult question. So, yes, sir. So, allowed. And for any intangible asset for which we have followed revaluation model, whether we'll go for amortization? Yes, sir. So both are amortized. Both require amortization. So this topic is applicable for both cost model and amortization. Now, any intangible asset for which we have followed cost model, will you do impairment? And any intangible asset for which you have followed revaluation model, will you follow impairment? Yes, sir. Understood. Correct. Now, useful life does not require any discussion. But now, as per Ind AS 30, there are two type of intangible asset. Any intangible asset having finite life. Any intangible asset has an indefinite life. So, what Ind AS 38 says that any intangible asset which has indefinite life, no amortization required. So, only intangible asset which has finite life require amortization. Understood is fine? Correct. Now, for any intangible asset which have finite life, can you say depreciable amount remains same? Residual value, what Ind AS 38 says that for intangible asset, normally there is no active market. Therefore, residual value will be assumed to be 0. So, normally if question is silent, the residual value will be 0 only, unless there are two circumstances when we need to estimate our residual value. If there is a commitment by third party to purchase that asset at the end of useful life, then we have some residual value, or there is an active market for that particular intangible asset, then we need to estimate the residual value, otherwise it will be always 0. Amortization method, once again it will commence from date when the asset is available for use. It will be ceased when the asset is derecognized or when it is classified as held for sale, whichever is earlier. Then amortization method same SLM, RBM and PUM. SLM, RBM, PUM, but Ind AS 38 says that whenever we are not able to estimate the pattern of future economic benefit for intangible asset, whenever we are not able to estimate the pattern of future economic benefit for intangible asset, then always apply SLM. This point was not given under Ind AS 16. Ind AS 16 says estimate the pattern of future economic benefit and based on that decide about SLM, RBM or PUM. Understood? Correct. So in this case one point is given, if the pattern cannot be estimated, apply what? SLM. Then same thing about review of residual value, useful life and amortization method. This should be reviewed at least at the end of each financial year. At the end, not at the beginning. At the end of each financial year. Correct. Now one doubt will come. That doubt is what? Suppose this is the intangible asset acquired and useful life is 5 years and you have estimated sales. Sales means revenue now. By using this intangible asset, the sales will be 20 lakh, 25 lakh, 30 lakh, 35 lakh and 40 lakh. You have estimated what? Useful sales. By the use of intangible asset, you can generate this much revenue over how many years? 5 years. Now the question is that can you depreciate the asset? Can you depreciate this intangible asset based on revenue? Understood this point? Means can you depreciate this in, suppose the cost is 100 lakh. So can you depreciate 100 lakh in this ratio? Yes or no? Yes or no? Huh? Yes sir, but the answer is no. MCQ question. Understood what? Correct? So I am here for this revision batch for this all small points. So revenue based amortization is not permissible. They have given only 3 methods now. SLM, RBM, PUM. Apply that. You will apply Ind AS 16 and Ind AS 38 content now. What is it? SLM, RBM, PUM. They have never said about revenue based amortization. So they said no, it is not appropriate. So there is a rebutable presumption. You know about rebutable presumption? Rebutable presumption means any presumption taken without any logic. So one presumption has been taken that amortization based on revenue is not appropriate. So this presumption has been taken, so we will not do amortization based on what? Will not do any amortization based on revenue. This question have been asked in exam. IC exam. They have given sales information. Correct now? And they have given useful life also. So batao, what you will do? SLM or sales ratio? SLM. Most of the student will do what? Sales ratio. Correct. Already asked in exam. This is already asked in exam. So it is also important. I hope you have understood. But there is one exception to this rule. What Ind AS 38 says that sometime intangible asset is acquired with an objective to generate revenue only. Means the inherent nature of intangible asset is to meet some revenue threshold limit. In that case, you can use amortization based on revenue basis. So there is one exception to this rule. Correct? Are you able to understand? When you have acquired some intangible asset only to generate revenue, some revenue threshold limit means objective is to generate some revenue. Based on this intangible asset. Then you can do amortization based on revenue. For example is what? You have acquired right to operate some infrastructure and you are generating some toll tax. Understood? In that case, whatever right you have acquired, that become intangible asset. And objective is to generate what? Revenue. In that case, you can do amortization based on revenue. So this also become important what they are saying. There is a rebuttable presumption that amortization based method amortization method based on revenue is not appropriate. However, if the predominant limiting factor that is inherent in an intangible asset is the achievement of revenue threshold, then revenue to be generated can be appropriate basis for amortization. Only exception is what? Right to explore and extract natural resources or right to operate toll road. Otherwise, we can't use it. So for simple intangible asset, we can't use this method. Understood? Chalega? Important. Then intangible asset with indefinite useful life. Already we have understood no amortization. But can I say for this we'll perform annual impairment testing without indicator. So because it cannot be amortized, so what Ind AS 38 as well as Ind AS 36 says that for this we'll do annual impairment testing irrespective of indicator. Chalega? Yes sir. Understood? This point also you have understood. Impairment will do under Ind AS 36. Derecognition same to same what we have done for what? Ind AS 16. No special point, you can do it. Correct? Now scope. It is not applicable to what? Now just try to understand. Suppose you purchase a software which will be held for sale in the ordinary course of business. So it will meet a definition of intangible asset or not? No. You purchase one software which is held for sale in the ordinary course of business. It will meet a definition of intangible asset or not? Yes, it will meet a definition. It is identifiable, non-monetary, without physical substance. So it will meet a definition of intangible asset, but outside the scope of this chapter. Outside the scope of this chapter, because that will become inventory, and for inventory will apply Ind AS 2. So you can't say it is not an intangible asset. It is an intangible asset, but outside the scope of Ind AS 38. For them, Ind AS 2 is applicable. So specifically outside intangible asset held for sale in the ordinary course of business. And you can't say it is not an intangible asset. It is an intangible asset, but outside this chapter. Chalega. Deferred tax asset is also an intangible asset, but outside the scope of this chapter because Ind AS 12 is applicable. These they are within the scope of Ind AS 116, that is Ind AS 116 is applicable. Goodwill arising in business combination. This is one point where students do wrong. Huh? Okay. Now, so goodwill, normally students do wrong. If I have some goodwill acquired in a business combination, that is an intangible asset. Ind AS 103, Ind AS 38. Ind AS 103. Ind AS 103. So for that Ind AS 103 applicable means, can I say Ind AS 38 is applicable to other intangible assets which are not a part, which is not any goodwill, means other than goodwill? Yes sir. Then asset arising from employee benefit. If you remember in Ind AS 19 means employee benefit, we have done one asset, plan asset. Plan asset. That is also right to receive some amount. So that for that also what is applicable? Ind AS 19 is applicable. Ind AS 38 is not applicable. Any financial asset, they have just given one clarification. Financial asset are monetary item and therefore they might be intangible item, but they are not intangible asset. So Ind AS 38 is not applicable. Intangible asset arising under insurance contract, not applicable because for that Ind AS 104 is applicable and that is not in our syllabus. Similarly, intangible exploration and evaluation asset, for that Ind AS 106 is applicable, Ind AS 38 is not applicable. Last, intangible asset classified as held for sale, Ind AS 105 is applicable. Now this all scope is important for MCQ based question. So this you need to do thoda sa ratta 5. Correct? Understood? Simple, I will say if some other Ind AS is applicable, so it is outside the scope of this chapter. It is outside the scope of this chapter. Chalega. Disclosure you do by row. Disclosure I am noting, but disclosure may be also important. Huh? If I am not doing, it does not mean disclosures are not important. But disclosure I will read, you only read. I will read now, so better you only read. ठीक है ना? चलेगा? हाँ. There are some disclosure which is important that I will explain. That I will explain in other chapters. Okay, sir. Difference also you do. This difference you can understand by row. I am not doing difference. Got this point? So with this Ind AS 38 is covered. Now MCQs. MCQs, you can see how many MCQs are doing. How many MCQs are given? Means I have done my job by giving MCQs. 15 MCQs are given. You can do it by roll. Some question I have taken. Let us take some question. Question number 6 is thoda a good question. Sun Limited acquired a software from Earth Limited in exchange for telecommunication license. The telecommunication license is carried at rupees 5 lakh in the books of Sun Limited. So 5 lakh is book value. The software is carried in the books of Earth Limited at rupees 10,000. This is also book value, which is not the fair value. Advise journal entry in the following situation in the books of Sun Limited Unlimited. So in the books of Sun Limited Unlimited, we need to pass journal entry. Fair value of software is 5,20,000 and fair value of telecommunication license is 5 lakh. The first Sun Limited, but what is given up? What is given up? So telecommunication license is given and what is received? Software is received. What is the fair value of telecommunication license? What is the fair value of software? Are you getting? So batao, we need to find out the cost price of what? In the books of Sun Limited, they have acquired software. So what is the cost price of software? In the Sun Limited, they have acquired what? Software. So what is the cost price of software in the books of Sun Limited? 5 lakh ki 5,20,000? 5 lakh. Understood? Yes, sir. Now reverse in the books of Earth Limited. So what is the cost price of telecommunication license? 5,20,000. Just the entry you can do. First situation is very simple. Fair value of software is not measurable. However, similar telecommunication license is transacted by another company at 4,90,000. So this becomes fair value. Now for Sun Limited, what is given up? So that fair value is known. That fair value is known. So what is the cost price of software? 4,90,000. But for Earth Limited, what they have acquired? Telecommunication license. But what is given up? Software. The fair value of that is not known. So we'll go for what? Telecommunication license. The cost price of telecommunication license will be equal to fair value of telecommunication license. Understood? But if both are not known, so both are not known, so we'll take carrying amount of asset given up plus minus cash adjustment. If suppose cash adjustment is given, that also you do it. Understood? Simple question. This type of question can be asked in exam. Correct. Question number 8 already I have explained with one example. Already I have explained that research phase and development phase. This 24 is a good question. Have been asked 2 times in exam. And normally students do mistake if you have not understood one particular point. Okay, na? So if you have done this question, so it might happen easy. But if you are doing for the first time, it is a good question. X Limited is engaged in developing computer software. The expenditure incurred by X Limited in pursuance of its development of software is given below. They have given point number paid rupees 2 lakh towards salaries of program designer, incurred rupees 5 lakh towards the cost of completion of program design, incurred rupees 2 lakh towards cost of coding and establishing technical feasibility. Means at point number C, they have established what? Technical feasibility. So point number A, point number B, point number C, whether you can capitalize it. No, it will be charged to profit and loss account as an expense immediately. Means your capitalization will begin after this. Correct. Now point number D, paid rupees 7 lakh for other direct costs after establishing the technical feasibility. It will be capitalized. Incurred rupees 2 lakh to other testing costs. This will be also capitalized. Only doubt will come in point number F. If you have read it, you know. But if this is the first time question, doubt will come. I am doing this only for point number F. Point number F. Cost of producing product master for training material rupees 3 lakh. Capitalized, not capitalized. I said now if you have done it before, then so you are saying capitalized because yaad hai na. Correct. But cost of producing product master for training material, for training it will be capitalized. Now those who have said yes, can you explain why it will be capitalized? Those who have said yes, first let me understand who said yes it will be capitalized. Who said yes it will be capitalized? Now no one is raising. I said now if you have done this question before, so you will say correct. But if I will ask some question, you will be silent. Now you explain. हाँ, for training activities ना, चलो बात, but that cost is incurred for training only ना. I am confusing you. Chalo, you have said correct, but just try to understand what is this. The cost of producing master file. Master file. This is a master file. I just give one example. I am recording right now classes. So can I say after recording, I will first create a master file, and that master file will be given to student for sale. So I will copy and sell it na. So first I will develop my master file, and then that file will be copied, given in pen drive to the student. So that become inventory. This is inventory, but this master file become what? My intangible asset. This is my intellectual property. This is my intellectual property. The master file is what? Main intangible asset. Main intangible asset. This is master file. If they say copied file, that cost will be what? That is actually cost price of inventory. That is cost price of inventory. Understood? So because of this word master, this is product master for training, this will be capitalized. After that, they have done some inauguration expenses, this will not be capitalized. Correct now? Then development phase was completed. Once the development phase completed, then no capitalization is permissible. Understood? So this point number 5 I think was so rather interesting. So this becomes 7 plus 2 9, 9 plus 3 12. 12 lakh will be the intangible asset. Chalega? Yes sir. Then this question also I found interesting. This question have been asked in exam for 10 marks. 10 marks question. I will just read it. Super Sound Limited had following transaction. On 1st April 2019, Super Sound Limited purchased a net asset of Music Limited for rupees 13,20,000. This become what purchase consideration? The fair value of Music Limited identifiable net asset is 10 lakh. Means it is a question of business combination. Super Sound Limited is of the view that due to popularity of Music Limited product, the life of goodwill is 10 years. Can you amortize goodwill? Goodwill is not amortized. It is only require annual impairment testing. So goodwill is also not amortized. So they have given this life. This is only to confuse you. Understood? So that is given under Ind AS 103. Goodwill cannot be amortized. Only annual impairment testing irrespective of indicator. So what is the goodwill? It is 13 lakh, means 3,20,000 goodwill. This will come in the balance sheet without amortization. Without amortization. Next. On 4th May 2019, Super Sound Limited purchased a franchisee to organize musical show from Arman TV for rupees 80 lakh at an annual fee of 2% of musical show revenue. The franchisee expire after 5 years. Means this is a legal right. Musical show revenue where first year how much? 10 lakh. The projected future revenue for the next 3 years they are given. Next 2. The projected revenue for the financial year 2020-21 is 25 lakh and 30 lakh per annum for the remaining 3 years. So they have given for 5 years. Useful life is also 5 years. So what is the cost price? 80 lakh. 80 lakh will be amortized in which ratio? Can we use revenue? Abhi to padhaya bhai. This is not exceptional na. I said that 2 example only. To extract natural resources and to operate toll right. Here the objective is not to, because that musical so that is a franchise, a legal right you have purchased. Correct now. For any normal intangible asset, always use what? SLM, RBM or PM. I said now, even though you have done this question, even though I will say in exam will do mistake. So this will be used by SLM method 80 lakh for, then you find out what is given, means monthly basis or yearly basis, that is given in the last. On 4 July 2019, Super Sound Limited was granted a copyright that has been applied for the Music Limited. During the financial year 1920, Super Sound Limited incurred a 2,50,000 legal cost to register the patent and 7 lakh additional cost to successfully prosecute a copyright infringement suit against the competitor. But whether 2,50,000 will be capitalized? Everyone is silent. Now I have done this chapter. Huh? Say yes or no. Don't be silent. Don't be silent, huh? Don't be silent, because in exam you say yes or no, na? You say yes or no. But whether it will be capitalized? Yes. Everyone saying yes, na? Then 7 lakh whether it will be capitalized? Whether it will capitalize. Capitalize? Everyone saying no, no, no. Of course, it is not directly attributable expenses to bring the asset in working condition. Correct? Now, therefore, it will not be capitalized. Only 2,50,000 will be capitalized. The life of the copyright is 10 years. Supersound Limited followed an accounting policy to amortize all intangible assets on SLM basis or an appropriate basis over the maximum period permitted by relevant Ind AS. There is no maximum period permitted by Ind AS. AS 26 has given maximum period of 10 years. This is what? To confuse you, there is no maximum period which has been permitted by Ind AS 38. Maximum period was permitted by AS 26, if you remember, 10 years. So this is only a jhatka, correct? So in this, the life is what, 10 years. So we will amortize in how many years? Taking a full year amortization in the year of acquisition. So there is an accounting policy there, even though that is acquired during the year, we amortize for how many years? Full year. So this will do as per the information given in the question only. Let's see what they have given. You can see 3,20,000 is not amortized. 80 lakh divided by 5 they have done. 5 is what? 16 lakh only. And 2,50,000 divided by 10, how much? 25,000. Understood? Correct. Good question. Simple question, then also good question. Understood? They have asked extract of financial statement. You should write down properly everything. Got this point? Yes, sir. Done. I think my job done. Ind AS 38 is completed from my point of view. Once again I am saying today you'll go, you revise all the question of Ind AS 38, whatever books you are following. You can come back tomorrow, you can ask me the doubt in any question. I have an obligation to answer that. You can ask me, but that I will do after revision class. Chalega? Yes, sir. Done. Ind AS 38, done. Now let us start with Ind AS 2. Ind AS 2. Ind AS 2. Inventory. Ind AS 2. Now what is the meaning of inventories? Inventory means what? Inventories are assets which are held for sale in the ordinary course of business, which are held in the process of production, which are held in the form of material or supplies to be consumed in the process of production or for rendering of services. Now when I say manufacturing or trading, there are two types of organization. So for manufacturing, this is finished goods, this is work in progress, and this is what? Raw materials. For trading, this is stock in trade, and these are not existing. Understood? This so you all know. Means when I am saying held for sale in ordinary course of business, it is finished goods for manufacturing and stock in trade for trading. This much you understood? Correct. Now for service organization, this is so not there. But for service organization, there may be some materials which are consumed during the process of rendering services. For example, right now I am using batteries, and batteries are used for providing services. So the stock of battery will be my inventory. So there are materials to be consumed in the process of rendering of services. Understood this point? Now, can you see when I am saying material? So now you know, because you have done costing. So there are two types of material. One is direct material, one is indirect material. So my question to you, direct material, so of course it is inventory, no doubt. Direct material is an inventory, no doubt. The question is that whether indirect material will be inventory. You are silent. I am asking question. Whether indirect material will be inventory. Yes. Chalo, yes. Now indirect material can be of two types. Correct. One is held for production. One is held for distribution. For example, I'll just give you example. A better example I'll give. Can I say there are, whenever you produce some item, so there is some primary packaging is done. Primary packaging. Correct. So this is what held for production. because without primary packaging it cannot be sold. Because that packaging cost is required to make it available for sale. So that is primary packaging. And can I say for distribution some secondary packaging is also done. Secondary packaging means some box will be put in one carton and then distribution will be done. Quite possible. So that is known as what? Secondary packaging. So that is for distribution purpose. That is for distribution purpose. I hope you have understood. Correct. Now batao, you said indirect material, Ind AS 2 will be applicable. Whether Ind AS 2 is applicable for this? For this? Yes? No. Why you are saying no to this? Can you explain? I don't know, because it might happen. It is what? It is what? ऐसे हो गया. Because I am asking question, you are answering ना. So you are saying yes or no. But can you say why it is not inventory? Held for sale, so it means it is what? Stock entry and finished goods. I am asking about material. Nalayak. Achha, if I will one thing. If I will say nalayak, please don't be, because that is my habit. ठीक है ना? So if I am saying nalayak means only as a simple word, हाँ? ठीक है? अब बोल. No, nalayak. This is held for not for held for sale. This I am discussing about raw material. Whether raw material are held for sale, so then why you are saying sale? Simple. Come to this point. Held in the form to be consumed in the process of production. This is word. So can you see this primary packaging is held for which product? I have written held for what? Production, and this is held for distribution. Therefore, this is not inventory. Outside the scope of this chapter, Ind AS 2 is not applicable. Ind AS 2 is not applicable. Understood? Have you understood this point? Correct? Whatever. Correct only now. You are saying held for sale. Held for sale is this point. I am discussing point number C. Chalo, okay. Now, held for sale in ordinary course of business. Now, one point will come. So, what do you mean by ordinary course of business? What do you mean by ordinary course of business? Huh? So, ordinary course is not defined. I don't know whatever you are saying. It is not defined in Ind AS 2. It is not defined under Ind AS 2. Ordinary course is not defined. So, can I say in this way? Any ordinary activities are those activities which are not extraordinary. Whether this is correct definition? Are बोलना रे? Any ordinary activities are those activities which are not galat, because extraordinary activities are not in Ind AS. Ind AS does not deal with what? Extraordinary activities. So you are not correct, huh? You can't say like this. You can't say like this. Understood? So what is ordinary activity? That is not defined. Now if I go to Ind AS 8, Ind AS 8 says that whenever any term is not defined in Ind AS, you can take the reference of conceptual framework chapter. And if conceptual framework chapter is also silent, there is one chapter conceptual framework. You know that point? So if that is also silent, go to any other standard. Means you can take the help of accounting standard also. So AS5 define ordinary activities. So as per AS5, what do you mean by ordinary activities? You have done AS5? First, what do you mean by ordinary activities? So ordinary activities are those activities which are undertaken as a part of business, or which are incidental to business. Either they are undertaken as a part of business or which are incidental to business. This has been defined under AS5. AS5 understood? Now I'll just give an example. You say whether it is inventory or it is not inventory. Is inventory or not inventory? I am taking the example of my father. My father is a grocery wholesaler dealer. Grocery wholesaler. So they will purchase the rice bags. It is big rice bag of 50 kg, 50 kg, 50 kg. So they will sell what? 50 kg together. They will not do retailer. But sometimes some retailer will also come. Some customer will come and they will demand 1 kg, 2 kg. So what my father will do? My father will open what? The jute bag and then give 1 kg like this. Understood? So at the end of the month, there will be some jute bag. And what then my father will do? My father will call some tender and sell the jute bag to that tender. Now the question is that the jute bag which was held for sale, whether it is inventory. Understood? Example final level? Final level you understood? So in final they will ask this type of question, huh? And the same question has already been asked when I used to do CA final. In not mine exam, but same question has already asked, but many year ago, but not recently. So बताओ, this jute bag whether it will be inventory or it will not be inventory. Inventory. So it means you have understood. Can I say it is also related to ordinary activities only? Because it is incidental to what? Business. And therefore that jute bag will be also considered as what? Inventory. Understood? Correct only. Very good. So now I hope you have understood this ordinary course has not been defined. But why it is not defined? For this ordinary course normally judgment is required. And management judgment will prevail. If they will say ordinary, so it is ordinary only, because they only understand their business. So as per any businessman, they know what is their ordinary activities. Therefore, it has not been defined. Chalega? Aage chalo. Valuation inventory. It is lower of what? Cost price or NRV, which is low. Now we know cost price, NRV. Cost price, NRV. First, let us come to cost price. What are the component of cost price? They say there are how many components? 3 component of cost price. First is what? Cost of purchase. Second is what? Third is what? Other cost. Now, can you say for trading organization, there is only one component, that is cost of purchase. Means for manufacturing, it becomes cost of purchase, cost of conversion plus other cost. But for trading, the only cost of purchase. Can you say for trading, it is cost of purchase of stock in trade. And for manufacturing, it is cost of purchase of raw material. So this is either raw material or stock in trade correct. So what do you mean by cost of purchase? Cost of purchase means invoice price less trade discount plus non-refundable duties and taxes plus any other directly attributable expenses to bring the inventory in present location. So all the expenses which have been incurred to bring the inventory in present location will be also added to the cost price of inventory. So this becomes cost price of raw material or cost price of stock in trade. Either it is cost price of raw material or it is cost price of stock in trade. Means trading the full stop. Now manufacturing will add some more cost. Correct. So manufacturing will also add what? Cost of conversion. So cost of conversion are of 2 types. One is what? Direct labor. One is what? Production overhead. Direct labor means manufacturing wages, etc. That will be also added. Correct now. And in production overhead means what? Production overhead means what? Costing now. Production overhead means what? Indirect material, indirect labor, indirect manufacturing cost. That will be also added. Now all the production overhead are of 2 types. One is variable production overhead, one is fixed production overhead. Correct now. Now I am asking you a question. Variable production overhead will be allocated to each unit on the basis of actual production or normal production. Correct, only 100% correct. Now next question, be careful. Correct. Fixed production overhead will be allocated to each unit on the basis of actual production or normal production. Very good, excellent. You have read? Array. Now one rule, you will not read before me, huh? Then you read in your home only, na? You are not going to read any content before me. Then interest will be lost. So we are here to identify what? Mistake. If you read it, then also you will do mistake where? So I just want to point which point where you are doing mistake. So this is the area where IC also know कि everyone will do mistake. Just write down these are the point where you need to cross check. So it is what? Normal production or actual production, whichever is higher. This is 100%. They will ask one question from MCQs. Means in MCQs, if they are asking what? Ind AS 2, they will ask this question only. In your item to pakka. So what they want to say? If fix, I have taken one question also. Then let us do that question only. Let us come to that question only. This question was asked in exam 33. XYZ Limited has a plant with a normal capacity of 10 lakh and the expected fixed overhead is 30 lakh. Fixed overhead therefore based on normal capacity is 3 per rupees 3 per unit. Determine fixed overhead as per Ind AS 2 if inventory actual production is 7,50,000. So in this case, what will be the fixed overhead recovery rate? It will be 30 lakh divided by what? 10 lakh. Is equal to what? 3 rupees per unit. What is the actual production? 7,50,000 into what? 3 is equal to how much? 20 lakh, 22 lakh, 22 lakh 50,000. So what is not absorbed? 7 lakh 50,000. So what you will do about 7 lakh 50,000? Transfer to PL. This become abnormal loss. Abnormal loss will be transferred to PL. But if it is 15 lakh, then you allocate based on what? 30 lakh divided by 10 lakh or 15 lakh? 15 lakh, whichever is higher. Now it will become 2 rupees per unit. Means in this case there will be no under absorption. Entire cost price will be absorbed to each unit. So there is no abnormal loss. There is no abnormal loss. Correct? This question was asked in exam for 5 marks. Very simple question at CA final level. Right. Other cost means what? Any other expenses which are incurred to bring the inventory in condition of sale. In condition of sale means once the production is completed. Once the production is completed, then after that some cost is required. For example, transportation cost from factory to warehouse, not from warehouse to customer. That is carriage outward. We are discussing only about carriage inward. Carriage inward will be added. Correct? So from factory to warehouse will be capitalized. Or there may be some packaging cost. There may be some modification cost. Sometimes customer demands some modification. So that modification cost will be also added. Understood this point? Yes, sir. Now it means whatever not included will be charged to profit and loss account as an expense immediately. So whatever not included is what? Admin expense, selling and distribution expense, abnormal loss, storage cost if it is not necessary for production. I mean there are two types of storage cost. One is necessary, one is not necessary. Necessary means storage cost of raw material, necessary. Storage cost of finished good, not necessary. Therefore that will be charged to profit and loss account as a expense. Borrowing cost will be capitalized only subject to Ind AS 23. If nothing is given, it will be always charged to profit and loss account as a expense. Now two questions I will ask, if you have understood this much. Correct? My question to you all, think and say. Think and say. Depreciation will be added or not added? Depreciation will be added or not added? Added. Huh? Which depreciation? Very good, excellent. Means not all depreciation. Means depreciation on those assets which are used in production will be added to the cost price of inventory. Otherwise, it will be charged to profit and loss account as an expense. Similarly, can I say amortization of intangible asset will be also added if that intangible asset is used in production process. This have been asked 2 times in exam. Be careful. 2 times in exam. Be careful. This type of questions are dangerous. Now in MCQ they will ask this type of questions. Chalega? Yes sir. Okay sir. Now in special cases there is one joint product and byproduct. Joint product, you know, byproduct, you know, I think nothing to say much. But joint product are those products which are produced simultaneously in one production process and both are main product. So of course joint cost will be allocated to each main product in the ratio of what? In the ratio of sales. So in the ratio of sales value they have given two preference. So it will be allocated to sales ratio of each joint product either at a time of split off or at a time of completion of production. Which is most preferable? First preference will be given to this. If that is not given, then second preference will be given to this. I think you know this point from costing only. Nothing to say much about that. Now what do you mean by byproduct? What do you mean by byproduct? Which are not joint product? But byproduct means what? How you will identify it as a byproduct? Huh? How you will understand intention? Because just try to understand. Suppose if I am producing ghee and butter from milk, and in the production process buttermilk will be generated. The buttermilk is a byproduct or main product? How can you understand? Now it can be sellable in the market and I can sell it. You want to drink? Correct now. It can be. You have seen Amul buttermilk. Amul buttermilk. Bola yes or no? It is sellable to end customer or not? So how can you say it is a what? Not a main product? So the point is what Ind AS do and what the costing also. If the product is insignificant, the value is insignificant, then it become byproduct. Then become byproduct. Even though it is sellable to what? end customer. So keyword is what? If the amount is immaterial, means suppose X, Y, Z, 3 products, all are material, means this all are joint products. But this is material, this is material, this is immaterial. Then these two are joint products, this is what byproduct. Understood? So if the amount is immaterial, then byproduct will find out NRV and it will measure NRV only. There is no need to find out the cost price of byproduct, and that NRV will be deducted from the cost of main product or joint product, and that joint cost will be allocated to what? 2 products, 2 or more than 2 products. Understood this point? It will be measured at NRV. Now, what do you mean by scrap material? Whether scrap material and byproduct are same? No. So scrap material means which can be sold only in scrap market, but the accounting treatment of byproduct and scrap material are same. Means scrap material is also valued at NRV, and that NRV is deducted from the joint cost, and then that joint cost will be allocated to what? Both the product. Understood this point? Correct. This is also done. Then deferred settlement term, similar point as what we have done where? In Ind AS 16 and Ind AS 38. Whenever there is a deferred settlement term, the cost price of inventory will be equal to present value of all future payment. Interest will be the difference between future payment and present value. That interest will be recognized over the period of credit as an interest expense, and it will never be added to the cost price of inventory. However, in Ind AS 16 and Ind AS 38 it will be capitalized as per Ind AS 23, but here they have said it will be only charged to PL as an expense and will never be added to the cost price of inventory. So one point is different. To recognize interest as an expense over the period of credit and will not be added to the cost price of inventory. Correct. I've just taken one simple question. A Limited purchase inventory at rupees 60 lakh on 2-year credit. Rate of interest for similar transaction is 10%. Calculate a cost price and pass journal entry. Don't read journal entry. Please don't read. I know where you can do mistake. If you are saying correct, okay. If you are not saying, then we need to identify that mistake now. So don't read before I read. Okay? Now batao. What is the cost price? Cost price will be equal to 60 lakh multiplied by 10% 2 year. It will come how much? 826 now. 0.826. So this will be the cost price of inventory. This will be the cost price of inventory. What journal entry you'll do on the date of contract? Journal entry batao. Don't see, huh? What will journal entry? Fast. Journal entry is what? Inventory account debit to what? To payable. But the inventory what amount? 45 lakh change. Payable how much? Full amount. 60 lakh na? 60 lakh. How many are saying 45? How many are 60? 60. How many are saying 60? How many are saying 45? And how many saying both से मजा आ रहा है? अरे भाई देखो फिर से you need to say one amount. Otherwise this class is wastage. Don't depend on me. देखो if I will say you listen, you will forget. Believe me. If I will say you listen, you will forget. Believe me, you will forget. After 2 days, you will forget. Try to think now. Try to express yourself. Try to express. CA or who is CA? CA is what those person who can change wrong answer into right answer. अरे बोलना ही ऐसा ना हो. That is only CA. We can convince anyone. You come costing, I can teach you costing. I will convince you that I am right. In class, I can convince you. So CA is those person who can answer anything, even though they don't know the answer. Understood? Try to become CA now. Feel like CA. Feel like CA. Feel like CA. That you are only what is left. A formality is left for you. Write exam. Take membership number. Start practicing or start doing job. That exam is a formality now. You have done articles. You know everything. You know everything or not? I mean, right now you can start filing return or not. Right now you do only the audit. You are doing all the audits now. You prepare report also. Only signing you can do now. That is a legal formality left to write exam. You are a chartered accountant. 100% you are CA. Only formality is left. And we apply substance over form. अरे बोलना रे, there is a legal formalities or not. Think like CA, behave like CA. But you should do like CA. Then only exam will become easy. Exam that fear will go. That fear will go. Understood? Believe me, I know many person who are right now not chartered accountant but doing practice type of work, and they are earning what more than 20 lakh per annum without any CA degree. Without any CA degree. And there are many person of my friend only who quit CA but they are earning 1 crore from CA work only, and they have CA under them. It does not mean you are not going to write exam, huh? But what I am saying that this CA, you know, you are chartered accountant because they have also done articles. If now you know everything, only this CA degree is a formality now left with you. Correct? Behave like CA. Behave like CA. Understood? Now, batao. 61. I will not ask that this much again. Okay? Correct? I will only motivate you one time because I need to complete the syllabus. So 60, 45. Batao. How many are saying 60? How many are saying 45? So 45 is correct. So confidence आया ना. Those who are not giving correct answer, confidence आया ना. You have confidence. Yes, I can give answer. Yes, I am right. बोलना yes or no? This confidence required where? In exam hall. And 60, why? Correct. This interest will be recognized over how many years? 2 years. So if you are at 60, you are recognized right now only now. So this will be also 45. So this is also good for you. Now you have understood your mistake. Mistakes are always good, but before exam. But before exam, not during exam. Correct? So if you are doing mistake before exam, accept it, realize it, and write down yes. Now we will not do that mistake. Chalega. So now I think you will understand this journal entry. I was expecting that someone will say 60 lakh. That was my intention to correct it. Okay, understood. Now, cost of agriculture produce harvested from biological asset. This I will discuss under Ind AS 41 coming soon. Net realizable value. It can be. Acha, doubt again. Now, what they are saying, what she is saying, just try to understand. Abhi we have done Ind AS 16, we have done Ind AS 38, Ind AS 2. Correct? Same point we have done. Here I have said interest expense over the period of credit can be either charged to PL or can be capitalized. Here also charged to PL can be capitalized. Here but only charged to PL. But this capitalization will be done as per Ind AS 23. Ind AS 23, because this asset can be a qualifying asset. But this inventory which you have already purchased is not a qualifying asset. Already you purchased means either you will purchase raw material or stock in trade. So any asset which is already purchased cannot be a qualifying asset. Therefore, Ind AS 2 says it is not a qualifying asset. The question of capitalization will never arise. Understood? Correct. So you ask, therefore I have said. Understood what I am saying? Means I know everything. I know. The same question. Same question. But understood now? Means this question was in MCQ. Today means what? Oh, I also don't know. बना के छोड़ दिया. NRV. चलो start करो. NRV means what? NRV means MCQs so can be any question, huh? MCQs you need to be perfect in what all the content of Ind AS. Now coming to NRV, so we are here to find out NRV of finished goods or what? Stock in trade and WIP and raw material. Now for these are held for sale in the ordinary course of business. So for that NRV means what? Estimated selling price minus estimated selling expense. Okay, so both will be given the question because these are estimated and we can't estimate. We can't estimate that information will be always given in the question. So you can find out NRV. Correct. Now WIP, because WIP are not held for sale, therefore their NRV is based on NRV of finished goods which will be produced from that WIP. So first find out NRV of what? First find out NRV of finished goods. So this become NRV of finished goods. From that minus estimated cost to complete. Any estimated cost to complete will minus. This will become NRV of raw material. This is NRV. sorry, this is NRV of WIP, NRV of WIP. Now coming to raw material, raw material cannot be also sold in the market, so their NRV cannot be sale price, their NRV cannot be sale price. But what is the objective of this chapter? Objective is of this chapter to find out expected loss on sale of finished goods. To find out expected loss on sale of finished goods, means if there is no loss on sale of finished goods, the inventory should not be written down. Inventory should not be written down. So their NRV is based on finished goods. Once again, what they are saying, if finished goods are expected to sold at profit, means if the NRV of finished goods is more than what? Their cost price, more than or equal to cost price. NRV of finished goods is more than or equal to cost price, means there is an expected profit, and therefore value raw material at what? Cost price. Means there is no need to write down. But if NRV of finished goods is less than what? Their cost price, so there is an expected loss. In that case, the value raw material at cost price or replacement cost, whichever is lower. Replacement cost means what? Current purchase price of raw material. Replacement cost means at what price it is available in the market as on balance sheet date. As on balance sheet date, that will be always given in the question. So current replacement cost or cost price, whichever is lower. Understood this much? Have you understood? Means this type of question I am expecting in exam. This is more important from CA final level. CA final they will not ask this too. Normally. So normally if they will ask this question. So can you see, first you need to find out NRV of finished goods, compare with the cost price of finished goods, then decide about raw material. Understood this point? Correct? Yes, sir. This also done. Correct. Now the question is that right now we said NRV means estimated selling price. Now the question is that how to estimate that sale price? Practically, how to estimate that sale price? So Ind AS 2 has given some preference. What Ind AS 2 says that suppose you have 20,000 units. 20,000 units in your on balance sheet date. Out of 20,000, suppose 10,000 units is already under a contract to sell. Means already you have done one contract to sell, but control is not transferred. You have done one contract to sell it, but control is not transferred. Means it is a sale or inventory. It will be considered a sale or inventory. Inventory, because Ind AS 115 say that revenue can be recognized only when control is transferred. So can you see, contract done but control not transferred, it is an inventory. But this contract will have sale price. So this sale price will become what? Estimated sale price for this inventory. Understood this point? Now for balance 10,000 units which are left, there are two things. Suppose out of these 10,000, 6,000 units are sold before approval of financial statement. Before approval of financial statement, so can it become an adjusting event? And you can find out a sale price. See what was the price at which it is sold. So that sale price will become estimated sale price for these 6,000 units. Correct? So for this 6,000 we'll take the sale price if that can be sold before approval of financial statement. This is very important point which can be asked in exam. Correct? Then for balance 4,000, because it is not sold before approval of financial statement, so for this we'll take the fair estimation given by management. So for this, whatever fair estimation given by management, that will become the estimated sale price. Understood? So this type of question I am expecting in MCQ. Good question. Correct? So first preference will be given to what? Any binding contract. Second preference will be given to sale before approval of finance system. Third preference will be the fair estimation given by management. This will be the order. This will be the order. Understood? In exam, all will be given. So first is, second is, third is. Understood? Correct? Now coming to techniques of inventory valuation, this is very simple. This you have done from foundation level. I will only just inform you. For cost formula, they have divided inventory into two types. Inventories which are not ordinarily interchangeable. Inventories which are ordinarily interchangeable. Not ordinary means these are homogeneous units. Means these are not similar. Interchangeable means these are homogeneous units. Means these are similar. So if they are not similar, apply specific identification method. Means find out the cost of each unit. For example, if you are producing big item, aeroplane, plant and machinery. So each unit will be different. If each unit are different, so apply specific identification method. But if they are interchangeable, interchangeable means each one unit can be interchanged from other unit. There are two situations. Key whether you can determine the actual cost, whether you can't determine the actual cost. So if you can determine the actual cost, then use FIFO or weighted average price method. Either use first in first out method, or you use what, weighted average price method. But if you can't determine the actual cost, if you can't determine the actual cost, then calculate approximate cost. Then calculate approximate cost by using two techniques. For manufacturing organization, they have given standard costing. For trading organization, they have given adjusted selling price method. Adjusted selling price method, correct? So this is very important. They will give you one case study where they will give you manufacturing organization. So you will use which method? Standard costing. But if they have given case study for trading organization, then you will use what? Adjusted selling price method. Understood? This is important from exam point of view, can be expected. Understood this point? Now what do you mean by adjusting selling price method? It means first find out the units of closing stock multiplied by sale price. So this becomes sale price of closing stock. From this minus what? Profit margin. This becomes cost price of closing stock. Means this is one type of indirect method. His sale price minus profit, that become cost price. This become indirect method. So whenever you are not able to find out the direct method of costing, you can't apply the direct cost method, then apply indirect method. That is known as adjusted selling price method. Understood? Yes, sir. Techniques of inventory valuation, I think no information required. Then comparison of NRV and cost price is very easy. Comparison should be done on item by item basis. Item by item basis. What do you mean by item? Is each item find out cost price, NRV, then compare that cost price and NRV. But sometimes they also allow group basis. If circumstances require, means if the items are of similar nature. For example, if suppose you have a rice, A quality, B quality, C quality. Correct? So item wise means what? Cost price, NRV, you can compare these two. This is item wise. But these all items are similar. Then you can also group it, and you can also follow group basis of comparison. That is also allowed, but only if circumstances require. Means whenever you can't apply item by item basis, then apply what? Group basis. Means if an exam question is silent, what you will follow? But if question say ki management want to follow group basis, then calculate value based on group basis. Understood? Correct. But you can't do overall basis. You can't apply overall basis. Either item or group, but not overall. Understood? Yes, sir. Reversal of write down and recognition of expense. These are two new points which was not in AS2. So what they want to say, just try to understand. I will explain with one example. Suppose this is Y0, this is Y1, this is Y2, this is Y3. Your purchase cost price of inventory is 100. Understood? Now you will prepare balance sheet as on this date, and suppose it remain unsold in this 3 year. It remain unsold. Till now it is not sold. Quite possible? Quite possible. Now you will find out cost price 100 and NRB, let us assume 90. So what is the value? Value is what? 90. So what is written down? 10. This written down will be transferred to PL as an expense. Understood? Next year, once again cost price, NRB is an estimation. So estimation may change. Estimation may change. Now NRB become what? 95. What is the value? 95. But can you say this has been increased? Increased from 90 to 95. So this is what? 5. But this is known as reversal of previous write down. This reversal of previous write down will be considered as income or reduction of expense. So this is not an income, this is reduction of expense. Means it will be reduced from inventory expense in the year when such reversal occur. Means this will reduce from the inventory expense of which year? This will reduce from inventory expense of which year? Year 2, because reversal occur in that year. Understood? Understood? Next point. Suppose this point, once again we'll do reassessment. Now NRB become what? 120. Quite possible. But the value is what? 100. So what is the reversal? 5. Means maximum reversal is what? To the extent of previous write down. and both will be considered as reversal, write down and reduction of expense. Understood? Have you understood this point? Yes, sir. Means what Ind AS 2 says, that this already I have explained. What Ind AS 2 says that, acha, one more point. This too you have understood? Now, my question to you all, everyone just try to understand. Everyone, you purchase inventory of rupees 1 lakh. Understood? And this inventory was sold at rupees 1,20,000 in the second year. Quite possible? Understood? You purchase inventory in which year? So you have done one account, purchase account debit to entry to you know. Jana entry, you know. I am not going to entry. So you purchase inventory in which year? But you sold inventory in which year? So expense will be recognized in year 1 ki year 2? Year 1, year 2? Huh? I am not able to understand. Year 1, year 2. How many are saying year 1? How many are saying year 2? How many says head and tell? Huh? 1 second. How many are saying year 1? How many are saying year 2? ये क्या समझ में नहीं आता, चलो ठीक है. Year 2 is correct due to which concept? Matching concept. अरे भाई, you have done closing stock ना in बचपन, correct ना? This is closing stock. This is inventory purchase but not yet sold. Means revenue will be recognized in the year when the inventory is sold, correct? And expense will be recognized when the inventory is sold. Understood? So that is given only what they want to say. Recognize the carrying amount of inventory sold as an expense in the period in the period in which related revenue has been recognized. Means in the year when the inventory is sold, correct? Similarly, when inventory is written down to NRV, recognize such write down as an expense in the period in which write down occurred. Reversal write down, recognize reduction in the amount of inventory recognized as an expense, recognized as a reduction in the inventory recognized as an expense in the period in which reversal occur. So any reversal will be reduction of expense in the year in which reversal occur. Means के total inventory expense will be what? Carrying amount of inventory sold. बोले yes or no? Carrying amount of inventory sold plus write down of inventory unsold. Write down of inventory unsold minus reversal of write down of inventory unsold. Reversal of write down of those inventory which are unsold. This become inventory expense and that will be charged to PL. Understood? Correct? That is only given in this point. Amount recognized in PL for disclosure purpose. For disclosure purpose. Understood? Correct. Now scope. Coming to scope. This scope once again important. So this Ind AS 2 is not applicable to what? This Ind AS 2 is not applicable to following inventories. With the inventory but not Ind AS 2 is not applicable. First is what? Any financial instrument. For example, you have purchased some equity shares for trading purpose. Means this is your main business. You will purchase sale. You will purchase sale. So that is stock in trade only. There is inventory only na. But for them Ind AS 2 is not applicable. Ind AS 32 and Ind AS 109 is applicable. So even though they are held as stock in trade, but for them what is applicable? Ind AS 32 and Ind AS 109 financial instrument chapter is applicable. Then biological asset related to agriculture activities, Ind AS 2 is not applicable. So if you have purchased some biological asset held for sale also, this chapter is not applicable. Ind AS 41 is applicable. Understood? Agriculture produce at the point of harvesting. At the point of harvesting, Ind AS 41 is applicable. This point once again I will explain when I will do Ind AS 41. This last point. But that Ind AS 2 is not applicable. Why Ind AS 2 is not applicable? I will explain where in Ind AS 41. Now these 2 points is important. I am expecting MCQ from these 2 points in exam. Now just write for this ABC. Ind AS 2 say the entire Ind AS 2 is not applicable. When I say entire Ind AS 2 means recognition criteria, definition criteria, disclosure requirement, nothing is applicable. But for this 1 and 2, next point, only measurement principle is not applicable. Means normally measurement we are doing as per what? Cost price or NRV, whichever lower. So some relaxation has been given to these 2 type of inventory. Only measurement principle. Other point is applicable. I mean disclosure point is applicable, but measurement principle is not applicable. I hope you understood this point. So the standard does not apply to the measurement of following inventory: producer of agriculture and forest products, agriculture produce after harvest, mineral and mineral product to the extent they are measured NRB. Means can I say for this inventory two option has been given. Well, either you apply Ind AS 2 or measure at NRB. Ind AS 2 means what? Cost price or NRB, whichever is lower, means option has been given. Either you can apply Ind AS 2, but if you can't calculate cost price, because normally for this type of inventory we are not able to find out the cost price. Are you getting what I am saying? For agriculture produce, normally it is quite possible we are not able to identify the cost price, then there is a difficulty in preparation of financial statement. Therefore, they have given some relaxation that you can measure it what? Only NRB. So, to the extent if they are measure NRB, then it is also applicable. Chalega? Now, when you are measuring at NRB, so any changes in NRB from one year to another year, that will be transferred to PL. So, any changes in NRB will be transferred to PL, that is given. Then second, any commodity broker trader, means any broker for commodity trading, commodity broker trader, who measure their inventory at fair value less cost to sell, means here two option is given, either apply Ind AS 2 or measure at what? Fair value less cost to sell, not NRB. NRB and fair value are two different terms. NRB and fair value are two different terms. NRB is different, fair value is different. When I say fair value is measured as per Ind AS 113 and NRB is measured as per Ind AS 2. So NRB and fair value are two different terms. NRB is from entity's point of view. Fair value is from market point of view. Detailed discussion in Ind AS 113. Are you getting what I am saying? So whenever you calculate from entity's point of view, that become NRB. Whenever you calculate from a market point of view, that become fair value. That become fair value. Understood? So here they have given fair value less cost to sale. And second option is what? Either you apply Ind AS 2. Ind AS 2 means what? Cost price or NRB, whichever is lower. So you can also measure at this term. So if you have adopted this, then measurement principle of Ind AS 2 is not applicable. Then any changes in fair value less cost to sale will be transferred to PL. Disclosure requirement you can do. This chapter is covered from my point of view. Understood this point? Have you understood this point? Okay. So even though small Ind AS, I am trying to cover all the points because now MCQs may come from any point. If suppose old scheme, so believe me, this chapter was only important from practical question point of view. That much discussion was not required. But with MCQs, all points become important. Come to some question. I have taken some question also. So 23. You will say me. I think this question is already asked in exam. For 5 marks. On 1st Jan 2001, entity accepted an order of 7,000 custom made corporate gift. On 3rd January 2001, entity purchased raw material to be consumed in the production process of rupees 5,50,000. So of course this will be added, including 50,000 refundable purchase tax. So whether it will be added, so you will take 5,50,000 minus 50,000. The purchase price was funded by raising a loan of 5,50,000, including 5,000 loan raising fee. What do you mean by loan raising fee? It is a transaction cost. Now, as per financial instrument chapter, what is the accounting treatment of this transaction cost? Net profit. Very good. This transaction cost is deducted from what? 5,50,000. Correct. So this transaction cost will never be added to the cost price of inventory. Now one doubt will come. If they have taken a loan, so what about interest? Interest will be capitalized, will not be capitalized. Depend upon Ind AS 23. If it is a qualifying asset, capitalize. If it is not a qualifying asset, do not capitalize. But any raw material which you have purchased is not a qualifying asset, therefore borrowing cost will not be capitalized for this particular question. But in other question it can be capitalized if it is a qualifying asset. Understood this point? During Jan 2001, entity design the corporate gift for the customer design cost. So of course cost of designer will be added. labor expense will be added. During Feb 2001, entity's production team developed the manufacturing technique and made further modification necessary to bring the inventory in conditions specified in the agreement. So modification cost will be also capitalized. Correct. The following material net of 3000 recovered from sale of scrap output. So of course you'll add net amount or gross amount. This 21,000 net amount. So you'll add net amount ki gross amount. Net amount. So 21,000 will be added. Labor of course 11,000 will be added. Depreciation of plant used to perform modification, whether it will be added. Yes रे भी तो बोला any depreciation of any asset which is used for production means modification also ना will be capitalized. देखो small point 5 marks will become 0 marks. No mercy. You know why no mercy? Because you have done one mistake now. 0 marks. Why no mercy? No. Because your paper is checked by whom? Chartered accountant. And they have also taken multiple attempts. Are you getting? So बदला तो लेगा ना. Emotionally affected ना. Don't expect any free marks for them. Don't expect. Whether they give any leniency in Article C. Don't expect only. They are only checking your paper. They will not give to us now. We have one emotional attachment with you, but they don't have. And so don't expect any free marks. So write on that basis. And it is equal for everyone. Huh? I also went from that phase only. So it is equal for everyone. Equal for everyone. Nah? So don't expect any free marks. If you are writing correct, then only expect marks. Expect marks. So one mistake, 0 marks. Understood what I am saying? हाँ, if they are giving 1 mark, 2 marks, so thank God कितना अच्छा आदमी था. It was a good person who has given 1 mark or 2 marks. Otherwise, don't expect. Then, during Feb 2001, entity incurred the following additional cost in manufacturing the customized corporate gift consumable stores. So, following additional cost in manufacturing, so of course this will be also added. Labor cost will be also added. Depreciation of plant used to manufacture the customized corporate gift, of course this will be also added. The customized corporate gift were ready for sale on 1st March. No abnormal wastage. Compute the cost. Very easy question, but only one point I think student could have done mistake in depreciation. Only this point. And they have given this question because they know most of the student will do that mistake. And 5 marks will become what? 0 marks. Correct. But you know, so you will not do mistake now. One good question, this 20 also, I like this question personally. If you have done this question before, so of course you will give me correct answer. But if you have not done, then apply your common sense. On 31st March 2001, the inventory of ABC Limited includes spare part. Now we have understood spare part can be inventory as per Ind AS 16. Understood? Which it has been supplying to a number of different customers for some year. So this is to held for sale only. Chalo. The cost of spare part was 10 million and based on retail price at 31st March 2001, the expected selling price of spare part is 12 million. On 15th April, due to market fluctuation, expected selling price of the spare part in the stock reduced to 8 million. The estimated selling expense required to make the sales would be 0.5 million. Financial statement were authorized by the board of directors on 20th April. Means Ind AS to link with Ind AS 10. Ind AS to link with Ind AS 10. Have you understood the question first para? So the first para what they have said? It is 31st March. Cost price was how much? 10 million. But due to market fluctuation in 15th April means after 31st March. On 31st March, what was the expected selling price? 12 million. But here it become how much? 8 million. And the estimated selling expense was 0.5 million. Now what is? NRB is 12 million. 8 minus 0.5 million. 8 minus is it is adjusting event. But market fluctuation is after 31st March. Na? What do you mean by non-adjusting event? First explain me. First, what is the non-adjusting event? Non-adjusting event are those events which relate to any condition arising after balance sheet date. Which relate to any condition which is arising after balance sheet date. So this condition is arising after balance sheet date or on balance sheet date. Anyone saying adjusting? Anyone saying non-adjusting? Chalo, so your answer is correct. Your answer is correct. But if you have given as per concept, if you have done previously this question sometime whatever, you know the answer, because that is when you are giving correct answer. That is the case, so ask me doubt. Ask me doubt. But your answer is correct. I am happy with your answer. Okay. So this is an adjusting event. So market fluctuation was, that information must be available on what? Balance sheet date. Therefore it is an adjusting event. This is not a non-adjusting event, and therefore we'll take 7.5. So what is the written down? How much written down? 2.5 is written down. Correct? Yes, sir. Then as on 31st March 2002, next year, the actors noted that such inventory is still unsold and lying in the warehouse of the company. The actors believe that inventory is in sellable condition and active market will result in immediate sale. Since the market condition have improved now, estimated selling price now become 11 million and estimated selling expense are same as 0.5. So now what is NRV? 10.5. What was the cost? 10. So how much is the value? 10. Value become 10. So how much is the reversal of previous write down? 2.5 become reversal of previous write down, and it will be considered a reduction of expense in the year in which reversal occur. So good question. I think now you understood. Read the answer. Correct. One question I have given for joint cost. This is simple question only. Correct. But in this question I like to ask one question only. In this also one doubt is there. I am reading. It is a simple question. Only one point where my help is required. In a manufacturing process of Vijay Limited, one of the byproduct BP emerged beside two main products MP1 and MP2 apart from scrap. Details of cost of production are given. You can see raw material, wages, fixed overhead, variable overhead. Output they have given MP1, MP2, BP. BP means byproduct. And closing stock they have given MP1 this much, MP2 this much. And this byproduct has been sold. Average market price of MP1 and MP2 is given 80 and 50, and byproduct is sold at rupees 25 per unit. There is a profit of rupees 5,000 in sale of byproduct after incurring separate processing charges of rupees 4,000 and packaging charges of rupees 6,000. 6,000 was realized from the sale of scrap. Calculate the value of closing stock. Now you can understand this is solution. Only one doubt will come, that only I will explain. My question to you: what is the NRV of byproduct? What is the NRV of byproduct? So what is the unit produced? 1600 into what? 25 minus 4,000 and 10,000. This is coming how much? 30,000. 30,000 become NRV. And what is the NRV of scrap? So this both will be deducted from the cost price of joint product, and that joint cost will be allocated in the ratio of sales ratio. That you can do it. But my question is that, but I don't know why you have said this. This may be correct or wrong, I don't know. But what is the importance of this point then? There is a profit of 5,000 sale of byproduct. Means what you will do for this? Have you understood my question? You have said NRV of byproduct is what? This minus this? Then sale is scrap 6,000. So what about this 5,000? You have not considered this, na? So what you will do for this? Ignore. So ignore it. Ignore it. Means this is bakwas point. Understood? This 5,000 whatever profit is given. Why? Because can I say we don't find out the cost price of byproduct. It is major NRV. This is given only to confuse student. If you consider this point, your answer with one point your answer become wrong. So what actually they want you to do? Initial mistake. Initial mistake means they are pressurizing you in exam hall. Understood what they want? Anyone who is taking this point, one mistake, so this is also wrong, this is also wrong, this is wrong, 0 marks. Are you getting what I am saying? So they want that. For that entire concept is required. So if you do not understand the question properly, you will do some mistake. Chalega? Understood. So now this question is easy. You can do the balancing. That is only based on calculation. So with this, Ind AS 2 is also completed. We have done Ind AS 16. We have done Ind AS 38. We have done Ind AS 2. Now 2 Ind AS are left for today. Let us do that also. You want first Ind AS 20, Ind AS 23. 20 or 23? 20. 20 is the easy one. For me, is for explanation purpose. Okay. In exam, all chapters are complicated if you don't know the question. Correct na? Chalo. Ind AS 20 will take. Yes. Now, what is the name? What is the title of Ind AS 20? Ind AS 20 title is what? Accounting for government grant and disclosure of government assistance. So, accounting of government grant and disclosure of government assistance. So, what is the mean by government grant? What do you mean by government assistance? Government assistance is a wider term, and government grant is a part of government assistance. Means, can I say in this way? All government grant are not, sorry, all government assistance are not government grant. So all government assistance are not government grants. So only those assistance which meet the definition of grant. For that, Ind AS 20 is applicable for accounting and disclosure. But any government assistance which is not a government grant, Ind AS 20 is applicable only for the purpose of disclosure. Means what is the scope of this chapter? Accounting and disclosure of, but disclosure of other form of government assistance which do not meet the definition of government grant. So first we need to understand the meaning of government assistance. Very good. So come to government assistance. It is an action by government, act by a government, designed to provide economic benefit, designed to provide some benefit, economic benefit to an entity or group of entities, to an entity or a group of entity, but not to public at large. Not to public at large. Means, can I say any facility given to public at large, for example infrastructure facility or telecommunication facility or transportation facility, that is to public at large. So that is also one type of assistance, but that is not covered in this chapter. That is not covered in this chapter. So any government assistance to public at charge, public at large, Ind AS 20 is not applicable. Understood? But if it is to any entity, a group of entity, Ind AS 20 is applicable. Now, if that government assistance meet the definition of government grant, then accounting and disclosure both will be covered as per this chapter. But if it is not a government grant, then only what is applicable? Disclosure is applicable. This much you understood? Have you understood? But now we need to understand the meaning of government grant. But before that, what do you mean by government? What do you mean by government? Now, in one of the MC question given by ICI, they have asked you the government meaning. So, what do you mean by government? Government means what? Either state government or central government, or it means government agencies, or it is also any other bodies which can be local body, national body, or international body. For example, WHO. So you may, because right now you know that due to COVID-19 lot of vaccination was developed in India, and we developed vaccination also. Correct now. So that company received grant from what? WHO. So that grant will be now covered where? Ind AS 20. Even though their WHO is not a government. So government does not means only Modi government and Congress government. It can be what? Government agencies, or it can be any bodies which can be local bodies, national bodies, or international bodies. Understood? So this was asked in MCQs. So this type of question can be also asked. Now let us come to government grant. These are government assistance in the form of transfer of resource. In the form of transfer of resource. Now when I am saying in the form of transfer resource, what do you mean by transfer resource? Resource means what? Well, in the form of transfer resource. Resource means what? Either cash or what? Asset. Are you getting? But if suppose government is providing some service, then what is the transfer resource? There is no resource transfer now. Suppose I am giving you free technical advice. for any industry. I am given advice to you, free technical advice, whether there is any transfer resource. No transfer resource. It means, can I say, if I am saying service and that is free, free service, so that is not involving what? Any transfer of resource, and therefore it will be a government assistance but not a government grant. Understood this point? Are you able to understand what I am saying? So there may be some guidance given. For example, I am giving guidance right now, free of cost. So what is the resource? Anything gone out of me? It is benefiting you, but no transfer resource na. There is no transfer of resource. So it will not meet the definition of government grant, but it will meet the definition of what? Government assistance. Understood? Means simple word I can say ki in the form of transfer resource which can be expressed in money value, I can say in this way, which can be expressed in money value. Understood this point? Correct. To an entity for past or future compliance, to any entity for past or future compliance. For past, it can be for past purpose, it can be for future purpose. With certain conditions, so of course condition will be there relating to any operating activities. The conditions will be related to any operating activities. Means suppose government is participation in any entity as a financer. Understand what I am saying? So government has given a loan. Yeah, government become an equity participant of that company. Correct. Government company, they have purchased some equity shares of that company. Whether that will be a grant. Not able to understand. Government become an equity participant of any company. Equity participant means they purchase equity shares of that company for helping that company only na. That is helping only na, because that become a government company. So whether that participation in equity instrument, whether that is a grant, because that is not related to, that become a financing activity. Understood this point? Yes sir. I think meaning you have understood. So this becomes the government grant. Means government grant will not include any government assistance to which monetary value cannot be placed. Understood? To which monetary value cannot be placed. Means this will be a government assistance but not government grant. For example, free technical advice, free marketing advice by the government. Correct. Second exception is what? Any normal trading transaction with government. Suppose you have done some purchase from government at a discount. So that discount is not a grant because that is in a normal transaction. So if you receive some discount in a normal transaction with the government, that is not a grant. Understood? Correct. Now, in this chapter, what is applicable, what is not applicable, just informing. Government participation in the ownership of the entity. Applicable, not applicable? Not applicable. GG, now this point I have not explained because till now we have not done Ind AS 41. Now, Ind AS 41 what says that any government grant related to biological asset other than bearer plant, for that Ind AS 41 is applicable, Ind AS 20 is not applicable. Means government grant related to biological asset other than bearer plant, Ind AS 20 is not applicable. Correct? So this I will do where? Ind AS 41, that is only given. Government grant related to biological asset other than bearer plant, not applicable. Why? Because 41 is applicable. Government grant related to bearer plant, applicable. Correct. Free technical advice from government, applicable, but only to the extent of disclosure. Okay. Government assistance to public at large, not applicable. Tax holiday, investment tax credit, additional depreciation, any exemption related to tax is covered under Ind AS 12. So any point related to tax, only Ind AS 12 is there, so that will be covered in Ind AS 12. Ind AS 20 is not applicable, even though it may meet the definition of grant. So tax holiday given, suppose tax exemptions are given, that is also one type of what? Assistance only, so that will not be covered in this chapter because that is specifically covered under Ind AS 12. Okay sir. Now, recognition of government grant. When to recognize government grant? My question to you is, can we recognize government grant on accrual basis even though not received? Can we recognize government grant on accrual basis even though not received? Yes or no? Yes, we can recognize. important for MCQs, correct? Means this type of question now become important. Previously it was not important under old scheme, correct now? So I'm stressing in this point because MCQs may be created. So there are two conditions for recognition of government grant. So what they said, government grants to be recognized only when there is a reasonable assurance that entity will comply with the condition attached with that and grant will be received. Will means what? Future tense na? Will be received. Means even though not received it can be recognized. So will be received. There is a certainty of collection, means there is a certainty of collection. Means if these two conditions satisfied, then what journal entry will do? Batao. If these two conditions satisfied and amount not received, what journal entry? Receivable account debit to what? To GG. And if these two conditions not satisfied, then we need to wait for what? Actual receipt. Then we recognize government grant only when it is received. So it can be either this or what? Bank account debit to GG. Bank account debit to GG. Understood? Have you understood? Only one question of this nature has been given in ICS study material, and that question was asked in exam. Correct? So that also that question I have in my booklet. That question I will do. Correct? But have you understood this point? Correct? Now the objective of this chapter is what? To understand the accounting treatment of what? GG. Accounting treatment of this government grant. Now what Ind AS 20 says that there are two approaches for this accounting treatment. One is known as capital approach, one is known as income approach. Capital approach means whatever grant received will be transferred to capital reserve. Capital approach means whatever grant received will be transferred to capital reserve. Income approach means grant received will be transferred to PL. Either immediately or over the period of time. Either immediately or over the period of time. Understood this much? Correct? Have you understood this much? Correct. Now, my question to you are, when we can transfer government grant to capital reserve? When we can transfer government grant to capital reserve? When it is related to asset. Anyone? When we can transfer government grant to capital reserve? Understood the question? See, when we can transfer government grant to capital reserve? When it is a investment. Business combination chapter. Correct. So now as per Ind AS 20 it is not permissible. As per Ind AS 20 this is not permissible. As per AS 12 it was permissible. But as per Ind AS 20 it is not permissible. So Ind AS 20 says that there are two accounting treatment, but capital approach is not correct. Therefore it is not permissible. So now you will never transfer government grant to capital reserve. So your answer was what? No. Dangerous for MCQ question. Yes or no? Correct. Okay sir. You want break? Want break? Bolo. Chalo. After this we will give break because I understood from your face that now energy is down. No energy. Because I am also sitting, you are also sitting. I am speaking, you are only listening. Then also who is tired? You are tired. Why? Why you are tired? You know why you are tired? The reason is what? I am here to earn money. You are here to what? Batao. You are here to what? Bolo, no, earn money only. Think like this. Interest will come. Bolna yes or no? I am here to earn money or not? Are bolna re? Because you came to you even though this is what, okay chalo free class, but can I say you will promote about me? Are bolna re? Ultimate objective is that only na? Are bolna re? Nothing is free in India. Nothing is free in India. Understood? This is said I am here to earn money or not? So interest. You go motivation level. Yes or no? I have not taken lunch. My timing of lunch was 2. You have said 1. I have not taken lunch also. Because I don't eat outside food. So my lunch not came from my home. So I am without lunch only. But then also see motivation level. You have taken lunch, na? Is breakfast as well lunch? You have not taken lunch. So you are like me. then motivated रहो. So you are also here to earn money only, हाँ. How much money? How much money? बोलो. Interest motivate करता. How much money? You are here to earn money. Annual money how much you want? Only 20 lakh. 20 lakh में क्या होता है रे? 1 करोड़. देखो 1 करोड़. बताओ how many are here to earn 1 करोड़? बोलना. You don't want to earn 1 crore? अरे बोलना रे. I will prove that you can earn 1 crore right now. How many are here to earn 1 crore? ऐसे देखो इतना देखो ऐसे होता है. Somebody asked me when I was also doing CA, I said I want to earn 5 crore. 1 crore में क्या होता है रे? अरे बता इतना पेन only for 1 crore. This much pain. This much pain you are taking, you are doing so much sacrifices only for 20 lakh, 30 lakh, 50 lakh. You are taking pain or not? I have also taken pain. At this 20 lakh, 30 lakh, you can earn anywhere. Don't do CA. Believe me, 20 lakh, 30 lakh, if you are good now, if you are thoda so smart, you can earn. This much pain we are taking for more than 1 crore. For more than 1 crore. 1 crore or more than 1 crore. That should be your ultimate objective. I can prove right now that easily you can earn 1 crore. But time नहीं है बताने का. Correct? You can easily earn 1 crore, but provided you have that intention to earn. You have that intention to earn. But before earn, what is come? Learn. So first learning, then earning. Understood? So right now you are here to ultimate objective is what? Now feel motivated. Correct that. Every single minute you are learning something to earn something. You are learning something to earn something. That earning will come only after becoming CA. So for that you are here. Okay, correct. So this last part will take, then break, then again will start. Okay sir. Okay. So capital approach, 1 second. Capital approach, whether it is permissible. Kasam ka, God promise. God promise capital reserve, capital approach is not permissible. Dangerous in exam with MCQ question. Okay. So what they said, grant will be either credited to PL over 1 year or more than 1 year. Means either it will be transferred to PL immediately or it will become a deferred income and it will be amortized to PL over the period of time. Now the question arises, sir, how will understand it will transfer to PL immediately or over the period of time? What Ind AS 20 says that it will depend upon basis of allocation. Simply speaking, they say if allocation, basis of allocation exists, then it will be allocated to more than 1 year. But if basis of allocation do not exist, transfer to PL immediately. Means just find out whether basis of allocation do not exist, then recognize grant to PL immediately when grant is received or understood. Why they have received or receivable? Because this is journal entry. Even though not received, it can be transferred to what? PL. Understood? Correct? And basis of allocation exists, then recognize in PL on systematic basis over the period in which the entity recognizes the related expenses which they are intended to compensate. Means as per matching concept. As per matching concept, this we need to understand what is systematic basis. Only this I need to explain. Correct? This will depend upon the nature of government grant. This will depend upon nature of government grant. Understood? Correct? We'll take how much minute break? You only say. I'll give you 20 minutes. 5 minutes extra from me. Okay? But come with motivated mind. I can understand. No, that is only an expense now, but there is no learning, there is no earning. You can sit for how many hours? 3 hours? And back to back movie, how many have you seen? Means one day, have you seen any 4 movies? I have to see 3 movies back to back. Maza aaya na? That time no tiredness na? With popcorn, without popcorn. With someone, without someone. With someone, without someone. अरे उसको बोलने दो मैंने. हाँ? Without someone. So you are motivated without someone also na? So here also like this you are doing for yourself. Earning is coming for yourself na? Chalo. So what I am saying, If you can watch 3 movies means 9 hours back to back. So here also we are doing 3 sessions back to back. Huh? So here my 3x. Come to my regular class. Come to my regular class. I be like this. Hello, yes. Now this you have understood. This you have understood. How many you done my regular class? कितना स्लो पढ़ाता बताओ. सुनो ना, मतलब नींद आ जाएगा ऐसा पढ़ाता हूँ. This is the super speed. You can't imagine what is the throat is gone. Correct na? So just try to understand. I'm here Taken tea, coffee? Tea, coffee taken? Huh? Which tea? Ginger tea or masala tea? Coffee. You like coffee? You want what? Yeah, correct, correct. I drink 5 times tea in a day for motivation only. You don't prefer tea, na? Mouse is a mouse. Thank you. Now, chalo. Can we start once again, everyone? So before break, we are discussing about Ind AS 20. We have understood the meaning of government grant, government assistance, applicability. Then we came to the recognition requirement. We have understood that it can be recognized on receivable basis also. When two conditions are satisfied, when there is a reasonable assurance that condition attached with the grant will be satisfied and grant will be received. If these two conditions satisfied, then we can recognize grant on accrual basis, receivable basis. Understood? But the objective of this chapter is to understand the accounting treatment of grant, whether receivable or receive basis. So what Ind AS 20 says that capital approach is not permitted. Ki now as per Ind AS 20, any government grant will never be transferred to capital reserve. Will never be transferred to capital reserve. Means it will be either transferred to PL on immediate basis or deferred basis. Immediate basis or deferred basis, depending upon the basis of allocation. Now basis of allocation will depend upon the nature of grant. Nature of grant. So now with the understanding what can be that basis of allocation. So that depends upon first grant related to depreciable asset. Depreciable asset. So depreciable asset you understood PP, it can be intangible asset, it can be investment property, etc. which are depreciable. Which are depreciable. Correct? Now my question to you are whether this depreciable asset will include land. No, it will not include land. Whether it will include intangible asset having indefinite life. No, whether it will include bearer plant. Yes, very good. Understood. Now it means you are giving answers. Means this is confidence. This confidence you need to retain. This confidence you need to retain in exam hall also. Correct? All answers were correct, and this type of MCQs they will ask. Chalega? So it will include bearer plant also. Now grant relative depreciable asset, they have given two accounting treatment, two alternative accounting treatment. Either you deduct from cost price of asset or treat grant as deferred income. Okay. Whenever options are given, it means one will be easy, one will be fair. One will be fair accounting, one will be easy accounting. Normally fair accounting are complex to apply. Therefore they give simple accounting also. So which one is easy? What do you think? And which one is fair? Fair is what? Fear is what? Fear not fair. Fair is what? Deferred income is fair. Deducted from cost price of asset is not fair accounting, but it is simple accounting. Why it is not fair? Suppose you purchase an asset of rupees 100 lakh and you receive grant of rupees 100 lakh, then it becomes 0. Means you are using one asset that becomes 0. Can I say not correct, not fair? Means you are not presenting that item in the balance sheet. Even though you are using that asset, therefore it is not fair accounting. We can say it is an easy accounting. Of course, this option is available with you, so you can either use that one or this one, depending upon the information given in the question. If question is silent, my suggestion is that give both alternative. Give both alternative in exam. Correct? Understood? Now, means whenever you are using grant deducted from the cost price of asset, it becomes 0. So what our Ind AS 20 says that for disclosure purpose, this asset will be disclosed at nominal value. This asset will be disclosed at nominal value. What do you mean by nominal value? Once again, nominal value is not defined anywhere, but as per experience, or I will say as per industry, nominal value means insignificant value. Means it can be 10 rupees, 100 rupees, only for disclosure purpose. Only for disclosure purpose. Means in this case, so 100, if you purchase an asset rupees 100, means you will depreciate this only. Means in this case, depreciation will be charged on which value? Gross book value. But here depreciation is charged on which value? Net book value. For example, you purchase an asset of rupees 100 and you receive a grant of rupees 80. So what is the net value? So depreciable amount will be 20 or 100? 20. Correct. So in this depreciation will be based on 20, but here depreciation will be based on 100. But what this says that this deferred income, whatever deferred income is, the grant will be treated as deferred income, and that deferred income will be amortized to PL in the ratio of depreciation over the useful life of the asset. In the ratio of depreciation over the useful life of the asset. Means if it is SLM, so equally over the year. SLM is equal depreciation, so equal amortization. But if it is RVM, first you need to calculate all the depreciation of entire useful life, then find out ratio of depreciation. In that ratio of depreciation, you need to amortize deferred income over the useful life. Normally in exam they ask SLM, but be careful about RVM. Whenever RVM, so more calculation. Understood? Have you understood? But accounting is very simple. The deferred income is recognized in PL over the useful life of asset in the ratio of depreciation. I think no discussion required. No discussion required. But again, I have taken one question only for this, because this particular means from examination point of view, this point is more important than other point. Means normally I have seen that in CA intern as well as in CA final they ask this question only. Normally. So this is important. I have taken one question to explain you practically also how to write down the answer. So one good question is there. But where is that question? This question. Question 25 means this question number is as per my question bank actually. If you are using my 10th edition question bank, so question number 25 will be as per my 10th edition question bank. If you are using my question bank, okay. If you are using some other question bank, then you know this question number. Chalega? An entity open a new factory and receive at the beginning of the year a government grant of rupees 15,000 in respect of capital equipment of rupees 1 lakh. It depreciate all plant and machinery at 20% using straight line method. I said normally they give what? But be careful about RBM. They may give jhatka in exam. Correct na? Okay. Assume that there is a reasonable assurance that condition attached to grant will be fulfilled. Means we can recognize even though not received, but it is already received na? Already received. For year 1, pass the necessary journal entry and so the presentation of the effect of this grant in both balance sheet and SOP. Normally students don't know how to present. I am not saying about you. When I say student, to overall student, huh? So don't feel bad. So pass journal entry, students are good in what? Passing journal entry, but when they ask presentation point, so they fail in exam to present properly. Presentation means extract of balance sheet, extract of SOPL as per the requirement of Ind AS and as per the requirement of Schedule 3, as per the requirement of Schedule 3. So normally in final exam, whenever they ask question from simple chapter, so they will ask extract also. They will ask extract also. Understood this point? Yes, sir. Under both method permitted under para 24 of Ind AS 20. So even though question is silent, I will say give both method if the time permit. If the time permit. Understood? Yes, sir. So method 1 is what? When the deferred income, when it is treated as deferred income. So what is the first journal entry? You receive the grant. Bank account debit to deferred government grant. So we'll pass bank account debit to deferred government grant. How much? 15,000. 15,000. Then you purchase the asset. What journal entry? Asset account debit to bank. So asset account debit to bank. They have not done their journal entry. We'll do that journal entry also. Asset account debit to bank. How much? 1 lakh. 1 lakh. Correct. They have not done that journal entry, but that journal entry is also required. Chalega na? Then we'll charge depreciation on an asset. What journal entry? Depreciation to accumulated depreciation. On 1 lakh, how much percent? 20%. So 20,000. So they have done journal entry for what? Depreciation to accumulated depreciation. 20,000, 20,000. Now 20,000 for how many year? 5 year. 20, 20, 20, 20. The ratio of amortization become 1:1:1:1:1 means 1/5 every year. So this 15,000 will be allocated in how many years? 5 years. On 1/5 basis, so 1/5 of 15,000 how much? 3,000. So what journal entry you do? Deferred government grant to grant income, and that grant income will be transferred to PL. So deferred government grant to grant income, understood, 3000. Then they have done also what closure entry means. Closing entry also they have done. However, these two entries not required as CA final level, means closing entry normally we ignore. But if you know, you can do that journal entry also. To depreciation, what is the closing entry? PL account debit depreciation. And what is the closing entry for deferred grant income? Means grant income to profit and loss account. Super easy. Now presentation in SOPL. So in SOPL, can I say income and government grant will come? So income and government grant will be how much? 3000. Expense and depreciation will come how much? 20,000. This become extract. Normally we should not make any total of extract, but in the solution they have given. But I will suggest don't give any total of extract, because this is only a part of SOPL, part of balance sheet. The total is not required, so you can ignore total. Now coming to presentation in balance sheet. So can you say PP will come in non-current asset? So under non-current asset, PP, plant and machinery will come with accumulated depreciation. So 1 lakh minus 20,000, how much? 80,000 will come. And can you say this deferred grant means I have done this only for this point. This deferred income will be with equity or liability? The deferred income will be equity or liability? Liability. Non-current liability, current liability? Both. Very good. Means can you say if the deferred income is amortizable within 12 months, it become what? Current liability. And after 12 months, then non-current liability. So what is the balance of deferred income out of 15,000? How much you have already amortized? 3,000. So what is the balance left? 12,000. Out of 12,000, 3,000 is going to be amortized within 12 months, and balance 9,000 is going to be amortized after 12 months. So under non-current liability, government grant 9,000. Under current liability, government grant 3,000. Understood? Correct. So if this question is coming in exam, this will be at least, I will say, at least minimum to minimum 8 marks. Now if you are not writing properly, they will not give marks now. So simple question, but how you are writing, that will give you marks. I always say in my regular batch that you are not getting marks for correct answer. You are getting marks for your best answer. Everyone is not going to become CA. They will select best of you. They will select best among you. So write best answer. Correct answer may not be given full marks. Understood? So think that way and write. So correct answer means everything properly. Whatever they have asked, write down properly. Okay. Now, so solution is very easy. Now, method 2 is what? When government grant is deducted from the cost price of asset. Simple. So first journal entry is asset account debit to bank. Then you receive what? Bank account debit to government grant. Then you will pass one adjustment entry. Government grant account debit to asset. Government grant account debit to asset with what amount? 15,000. So automatically 1 lakh minus 15,000 become how much? 85,000. Now you will depreciate 85,000. 85,000 into 20%, how much? 85,000 20%, calculate kar le. 85,000 20% how much? 17,000. You can see 17,000 depreciation charge. So only one journal entry, depreciation account debit to accumulated depreciation, and this depreciation will be transferred to PL account. Done. Now coming to SOPL, so only depreciation will come. Depreciation will be 17,000. Can you see net impact remains same whether you are following gross method or whether you are following net method? Depreciation remains, the net impact remain same. Then coming to the balance sheet, non-current as a PP will come with what? 85,000 minus 17,000. How much? 68,000. Only this is not required because in balance sheet we don't write down this. Correct now. So only you can write down 68,000. The PP net amount is what? 68,000. So ultimately net impact also remains same. It was how much? 80,000 minus what? 12,000. So asset minus liability, net impact remain same. Understood? So this is what one question I have taken, so that you can understand what type of question they may ask in exam. Okay, sir. So this you have understood. But similar question you have done in your CA inter level also. Now second point is grant related to non-depreciable asset. So non-depreciable asset, only one example will come. Normally grant is received for what? Land. And land is what? Non-depreciable asset. So in this what Ind AS 20 says that if any obligation exists, we suppose you have been given a grant of 20 lakh to acquire agricultural land, and with that there is one condition, they need to develop some irrigation facility during 5 years. So it means, can I say there is some cost of meeting that obligation, because you need to incur some expenditure to meet that development process. So what Ind AS 20 says that if obligation is there with that grant, to just find out the estimated cost of that obligation, and that grant will be treated deferred income, and that deferred income will be amortized in PL in the ratio of that cost of meeting that obligation over that 5 year or 6 year or 10 year as per the condition given in the grant. Understood what I am saying? So if obligation exists, means basis of allocation exists, treated as deferred income and recognized in PL over the period that bear the cost of meeting the obligation, don't worry, the estimated cost of meeting the obligation will be given in the question. Only you need to amortize in that ratio. Only you need to amortize in that ratio. Understood? Correct. But if no obligation exists, means there is no condition like that, then there is no basis of allocation, then entire grant will be transferred to PL immediately. Then entire grant will be transferred to PL immediately. Normally I have seen the question is silent about obligation. Normally whatever question till now we have received, question is silent about obligation, then your answer is what? If question is silent, it means it will be immediately transferred to what? PL. It will be immediately transferred to PL when received or receivable. Chalega. Then non-monetary grant. So if you have received some non-monetary grant, means in kind, you have received land only, you have received PP only. In that case, they have given two options. Once again, two options is given. One is fair, one is easy. One is fair, one is easy. So fair is what? Grant and asset will be recognized at fair value. Correct? Easy is what? Asset will be recognized either at concessional value or nominal value. Correct? Means I just like to take one question based on this. Means what they want to, suppose you receive a grant in the form of land and the fair value is 100 lakh. Now two situations may arise. Situation 1, situation 2. Either you receive that land free or you have received that land at concessional price of rupees, suppose 10 lakh. So in this now two methods, first one, second one. Either at fair value, then what journal entry will do? Land account debit how much? 100 lakh to government grant 100 lakh. This is the first option available at fair value. Second, you recognize land at nominal value. Nominal value, suppose 10 rupees or 100 rupees. This is rupees, not lakhs. Nominal value. Correct? So land account debit to what? But to what? Government grant 10 rupees. To what? Ind AS 20 is silent regarding this. It to what? Nothing, So can I say this journal entry is only for disclosure purpose? This journal entry will not affect your financial statement. This is only a book adjustment entry to inform the user that yes, we have a land which we have receiving grant only for disclosure purpose. So you can transfer it to any other equity. Any equity you can transfer. You can transfer it to any equity. This is only for disclosure purpose. Okay? This journal entry will not affect your financial statement. So it can be transferred to PL, retained earning, reserve and surplus, anywhere transfer and keep silent. Understood is fine? Have you understood is fine? But which one is fair? First one is fair. In second option, so we have not recognized grant only and we have received grant. Correct? So it is not fair. Concessional means what? If the first option we have taken, so land fair value is how much? 100. How much you have paid? 10 lakh. So balancing figure will be government grant, that is 90 lakh will be government grant. Correct? The second, at concessional value, the land account debit 10 lakh to what? Bank 10 lakh at concessional value. Understood? Have you understood? Means can I say it is similar to deferred income wala point? It is similar to a deducted from cost price of asset. So grant is deducted from cost price of asset and here the grant is treated as deferred income. So one doubt will come, so what about this government grant? How to allocate this government grant on a systematic basis over the profit and loss account? So again, this will depend upon nature of grant. This will depend upon nature of grant. If it is land, so land already we have done on this basis. And it is appreciable asset on this basis. Are you getting? So government grant, because it is deferred income, it will be amortized to PL in the ratio of depreciation over the useful life of asset. If this is the case, then if obligation exists, Then in the ratio of cost of meeting of that obligation, if obligation do not exist, then transfer government grant entirely to profit and loss account. Understood this point? Correct. Done. This also done. Then coming to grant related to income. When I say grant related to income, means it is for revenue expenditure. Means you have received grant for expenses. You have received grant for expenses. So in simple what they have said, it will be always a deferred income and amortized to PL on a systematic basis over the period to match related expenses which they are intended to compensate. Means in the ratio of expense which they are related to compensate. In the ratio of expense which they are related to compensate. Understood what they are saying? So it is treated deferred income, recognized in PL on systematic basis over the period necessary match with the related expense which they are intended to compensate. Correct? In this one question, good question we have. Let me come to that question. Already asked in exam, but once again it can be asked. This question. Question 18. Entity A is awarded a government grant of rupees 60,000 receivable over 3 years. 40,000 in year 1, 10,000 in year 2 and 3, contingent on creating 10 new jobs and maintaining them for 3 years. The employer recruited at a total cost of 30,000 and the wage bill for the first year is 1 lakh, rising by 10,000 in each of the subsequent years. Calculate a grant income and deferred income. Grant income is which has been transferred to PL. Deferred income is which has not been transferred to PL, means unamortized portion of deferred income after transferring to PL. That is deferred income. To be accounted in the books of year 1, year 2, year 3. Calculate this is once again repeated. In the following two situations, there is a reasonable assurance that entity will comply with the condition attaching to them and the grant will receive. Understood? This is fine. And there is no reasonable assurance that grant will be received. Understood this point? Condition you understood? Now, this question have been asked in exam. When this question was asked in exam, now these 2 points were not given. So students were confused. When students were confused, they realized their mistake. Here these 2 points were not given. So that become based on assumption. Student need to assume the situation and give the answer. Correct now. Then they realized their mistake and in ICS study method they changed the question and they have given these 2 options. Are you getting what I am saying? So what is the question? First I need to explain the question. Because already asked in exam, but this question will be repeated. 3 years. First year how much they will receive? Second year how much they will receive? Third year how much they will receive? This is government grant. And what is the employee cost? First year what is the recruitment cost? 30,000 now. And what is the wage bill? So total become, second year wage will be increased by, third year wage will be increased by 10,000. Understood? Correct. Now the question is that year 1, year 2, year 3. Can you say your expense to you have understood? 1,30,000, 1,10,000, 1 lakh. Understood? The total become how much? Sorry, 1,20,000. Total is 1,20,000. Look at this is the ratio of amortization. This become the ratio of amortization. But the point is that we'll amortize in situation 1, case number 1 and case number 2. First year will take 60,000 ki 40,000. Understood now? Means they have given 2 cases now. There is a reasonable assurance that entity will comply with the condition and there is no reasonable assurance. So in first case, we'll amortize 60 or 40. And second case, in second case 60 only. Who is saying 60? 60 only. Doubt आ गया ना? Doubt is there or not? अरे बोलना रे. Just try to understand. When we are doing amortization, so amortization we are doing for total grant or only some portion of grant. total grant during that year na. So we are doing amortization of total grant during that year. Means amortization to will based on 60,000 only for 60,000 in both the situations. In both the situation amortization will be for what? 60 only. Now can you amortize fast? So 60 divided by 3,60,000 into what? 1,30,000. It is 21,667. Then what? You don't bring calculator. 18,000 and the last one is 20,000 now. Correct. So in both situations your amortization will be this only, because amortization you are doing for total grant, but accounting treatment based on case 1 and case 2. Case 1, so first I am doing case 1. Batao, initially we will amortize, initially we recognize 40,000 ke 60,000. In case number condition satisfied, both the conditions satisfied, so you recognize how much grant, 60 or 40? 60. So you recognize 60, but out of that how much amortize? This much amortize now. So what is the balance? It is 38,333. Then 38,333 minus what? So this become 20,000, and then 20,000 minus what? 20,000. This become the, so this become your grant income, and this become deferred income at the end of each year as per case 1. As per case 1. But case number 2, this will remain same. This will remain same. But a case number 1 you have recognized on accrual basis, but case number 2 you recognize on receive basis. So you will not recognize 60, you recognize 40 in first year. So you will recognize 40. How much you have amortized? How much you have amortized? 21,667. So 40,000 minus 21,667. How much? 18,343. Next year can I say this will become opening balance, and again how much you have received? 10,000 you have again received, so plus 10,000. Then how much amortized? Minus 18,333. So how much remain? 10,000. Then next year 10,000. How much received? How much received? Then how much amortized? So this become answer for case number 2. Beautiful question, I will say. Very good question. If you are conceptually strong, then only you can answer this type of questions. Understood is fine. Correct. Good question. This question can be again asked in exam, because when this question was asked in exam, that time these two scenario was not given in the exam question. So students were confused what to do, what not to do. Now it become a good question. Chalega. Now if an exam similar question comes, I will say always assume first one. There is reasonable assurance. Suppose question is silent, I will say my suggestion is that always assume the condition has been satisfied. That is a better assumption. There is a better assumption now. Chalo. Done. This also you have understood. Now come to the next point. Correct. Now presentation in SOPL. So what they have said about a grant related to income, you have two presentation approach. Once again they have given two alternative presentation approach, but this presentation is only applicable for grant related to income. This is not applicable to any other grant. Correct. So this presentation is only for which point? Only for this point. Correct. So what they are saying, either you can present grant as a separate income in the SOPL, or you can present the grant income by way of deduction from related expenses. By way of deduction from related expenses means in the, if I take the same question, so can I say what was the grant income and what was the expense? Understood? So in the first method I will say grant income as a separate income 21,667, and expense will be how much? 1,30,000. Or what we can do, we'll say expense net of grant. So net of grant is what? 1,30,000 minus 21,667 is equal to 1,08,333. Either of these can be followed. If question is silent, I will say give both presentation in exam if they ask extract of SOPL. If they ask extract of SOPL. Now one doubt will come, so whether this grant income should be shown as a revenue or should be shown under other income. This doubt will come. Should be shown as a revenue or should be shown as a other income. So if you read Schedule 3 of Companies Act, they have given that if this grant is received by non-profit organization company, non-profit, then it is a revenue for them. So for NPO, it become what? Revenue. And for other entity, it become other income. Understood? So if this grant is received by non-profit organization company, then it will be treated as revenue. Otherwise, it will be other income. This question can be asked in exam. This question can be asked in exam in the form of MCQs. Chalega? Understood? So what they have given? They have given that only either as a separate income or under other income or presented by way of deduction from related expense. Correct. Next point is about forgivable loan. What do you mean by forgivable loan? Any loan which has been waived off. So simple, this whatever loan portion has been cancelled, withdrawn or waived, that loan portion whatever has been waived will be recognized as a grant and will be transferred to PL immediately. Will be transferred to PL immediately. So what journal entry will do? Loan account debit to grant. Loan account debit to grant, and the grant will be transferred to PL. And this is very easy. So loan account debit to grant and grant account debit to PL. Chalega. Then concessional loan. This is the super important from exam point of view. Normally from this chapter this question is also acceptable. Means expected. Okay? So sometime we receive some government loan at concessional rate of interest. At concessional rate of interest. What do you mean by concessional rate of interest? Means lower than market rate of interest. If the market rate of interest is 10%, but somebody, means government has given you loan either at 8%, 10, 8%, 5%, 4% or 0%. Correct now, that become concessional loan. So what Ind AS 20 says that in this case loan will be recognized as per Ind AS 109. As per Ind AS 109, what Ind AS 109 says that any financial liability will be recognized as fair value. Will be recognized at fair value. So what do you mean by fair value? Fair value loan means what? Fair value of loan means what? Present value of contractual cash outflow. CCO means what? Contractual cash outflow discounted at what? Discounted at, I'll give you 3 rate of interest. Okay, na? Discounted at contractual rate of interest, effective rate of interest or market rate of interest. Huh? How many are saying market rate of interest? How many are saying EIR? Doubt hai. And how many are saying contractual rate of interest? Chalo, it is market rate of interest. Market of interest. I have already said fair value means, आप सुनते नहीं, सुनो, fair value means what? As per market condition. I have said fair value NRV. I have said now NRV means as per entity's condition. Fair value as per market condition. There I have given already hint. Hint diya na. So market condition means market rate of interest. I'll come to this market rate of interest. Yeah, this is a super doubt with the student, but this doubt I will solve in which chapter? Financial instrument chapter. I am coming to that chapter. Okay, but this will be always what? How kasam? It is at what? Market rate of interest. Correct? Understood what? So fair value means what? Market rate of interest. Understood? So this you can calculate easily. So whatever, suppose you receive 10 lakh, but fair value loan is what? 8 lakh. So what is the government grant? Government grant will become 2 lakh. Understood? So what journal entry will do? Bank account debit how much? 10 lakh. Loan payable is what? 8 lakh. And government grant is what? 2 lakh. For this you will apply Ind AS 109. And for this you will apply Ind AS 20. So loan to will understand when we will do Ind AS 109. And if you have done Ind AS 109, you know this will be measured at amortized cost. This will measure amortized cost by applying EIR. Now what is EIR? I explain. Okay, now. So this will be measured amortized cost by applying EIR. And can this become government grant will be covered under Ind AS 20. So what Ind AS 20 says? This will be amortized on systematic basis as per the nature of grant. Now suppose this loan has been taken for purchase of machinery. Then what you do? in the ratio of depreciation. For non-depreciable asset, then apply that. For related revenue expense, then apply that. Means this will depend upon for what purpose the loan has been taken. Normally in exam they will say this has been taken for the purchase of PP. Then in the ratio of depreciation over the useful life of the asset. Understood? Have you understood this point? Second option is also available. This can be deducted from cost price of asset. Understood? But normally this type of grant they consider it deferred income in exam question. Okay? Okay, sir? Have you understood this point? Correct. So this is important. One question which is expected from this chapter is this. Correct. Then there are two exceptions. I mean, right now whatever we have done, you have understood that normally it is whenever basis of allocation exists, so normally it will become deferred income, and deferred income will be amortized on systematic basis as per the nature of government grant. But there are two exceptions where always government grant will be transferred to PL in the year when it is received or receivable. So two exceptions are there. First, if any government grant is received or receivable for some past expenses or past losses. So some government grant which have been received or receivable for past expenses, that will be transferred to PL in the year in which it is received or receivable. Second, any government grant received or receivable as a reward for the immediate financial support of an entity with no other related cost. So suppose government has given grant to any entity to support them financially with no other condition, that grant will be transferred to PL immediately. Understood? Yes, sir. Done. Now coming to repayment, this is also important. Why important? Because if they ask repayment, so you need to also understand initial entry, then only you can do what? Repayment journal entry. Achha, when repayment is possible? When the condition is not satisfied. Then grant become refundable. When grant become refundable, what Ind AS 20 says that it is a changes in accounting estimate. Therefore, we'll do accounting on retrospective basis or prospective basis. So it will be changes in accounting estimate. Therefore, we'll follow what? Prospective accounting. Now, the accounting treatment depend upon the original entry. Means simple word I will say, if originally it was created to PL, so at the time of refund will debit what? PL. If originally it was created to asset, so now it will be debited to asset. Originally if it was deferred income, so once again debit to what? Deferred income only. Means if grant is already transferred to PL, then what's your entry? PL account debit to GG payable and GG payable to cash or bank. Correct. When grant is deducted from the cost price asset, then what's your entry? Asset account debit to GG payable to cash or bank. But in this case, can I say the carrying amount of the asset will revise, and that revised carrying amount should be depreciated over the remaining useful life. That is understood fine. Correct. Only I need to explain Torasa this. The grant which is treated as deferred income. For example, suppose you receive 10 lakh grant. Out of this, unused is 2 lakh. Means till now you have not used how much? And used is how much? My question to you all, कि deferred income will be 10 lakh, 8 lakh. Means you receive 10 lakh. Out of that you purchase a machinery of rupees 8 lakh. So unused is how much? So your deferred income will be 10 lakh, 8 lakh. Very good. So deferred income means this will be what then? Then this will be what? Very good. We see liability. Very good. Liability. This will be liability. This is also liability. This is also deferred income is also one time of pre-receive income. Pre-receive income is what? Liability. But when you are saying liability means it is repayable because you have not used it. So it means condition not satisfied. So it is repayable from the beginning only now. Correct. So your deferred income only will be of used portion, not unused portion. Normally in exam they don't give this type of question. They will give entire amount is used. Normally in exam, but they can give this type of question also. Correct. Now out of this you have transferred to PL. Already you have transferred to PL. Suppose 2 lakh. So how much unamortized portion? How much unamortized portion? 6 lakh. Understood? This was the case. Now, suppose refund occur, and now refundable amount is 8 lakh. Your refundable amount is 8 lakh. Means 10 lakh is not refundable, 8 lakh is refundable. So the question is which account will be debited? So what Ind AS 20 says? First you debit which account? Unused amount. So first you will say grant liability account. How much? 2 lakh. Then what? चलो इसको 9 lakh कर दो, 9 lakh. Then what? Then unamortized deferred income. Then you write on deferred government grant account debit how much? 6 lakh. And balance will be debited to what? PL. Balance will be debited to PL. The balance is what? 1 lakh. To bank how much? 9 lakh. Understood? So this will be the order. First what? Grant liability means unutilized, then unamortized, and then amortized. First unutilized, then unamortized, and then amortized. Understood? This is given under Ind AS 20. So that is only given first GG account unutilized, then deferred government grant unamortized, then PL account amortized to GG payable to cash or bank. Understood? GG means government grant. Okay? Okay. Understood. So Ind AS 20 completed, but one appendix is there. Appendix A to Ind AS 20. If you have done AS 12, in AS 12 you have done one point, grant related to promoter contribution. Remember? Grant related to promoter contribution. Means CA enter, you will forget. Now CA final pass, that also you will forget. You forget. Huh? इसलिए बोलता है be in practice, you will never forget. Once you go to job, what? You will forget entire CA syllabus. So be remaining what practice. Why you have studied so much? To forget. चलो ठीक है, okay. तो चलो. But AS 12 में there was one point grant related to promoter contribution, and AS 12 used to say that such grant will be transferred to capital reserve. Now one doubt came in the industry. Ind AS 20 is silent regarding what? Government grant related to promoter contribution. So one doubt came that whether it will be transferred to capital reserve or PL. Because grant in the nature of promoter contribution means government is promoting some industry, and because of that reason they are giving some grant to that industry. So it is just like for, means they are financing them, they are financing that industry. Now one doubt came that it is related to operating activities, it is related to financing activities, and if it is related to financing activity, it will not meet the definition of what? Government grant. It will be outside the scope of what? This chapter. So one doubt will come whether it will be transferred to capital reserve or PL. So one clarification has been given that even though nothing was specifically mentioned in such grant related to operations, but any grant is given for operations only, because they will purchase what? They will purchase some PP etc. for operations only now. So even though it is silent, but the grant is for operating activities, and therefore it will be transferred to PL on systematic basis. On systematic basis. So one clarification was given, you can read it. They have given that such grants should therefore not credited to shareholders' interest, means capital reserve, and should be recognized in PL on a systematic basis. Why I am doing so? Once again, this point can be asked as a MCQ question. Disclosure requirement you can read. The chapter is over. Ind AS 20 is completed. Okay. Question I already have done. One more question I will do for that. Government loan wala point. A Limited received from government loan 1 crore at 5% payable after 5 years in a bulleted payment. The prevailing market rate of interest is 12%. Interest is payable regularly at the end of each year. Calculate the amount of government grant and pass necessary journal entries. Also examine the government grant to be recognized. Also state a grant will be recognized in SOPL, assuming that loan is to finance the depreciable asset. Loan is to finance depreciable asset. So in this first you need to find out fair value of loan. That will be based on Ind AS 109. So you need to find out contractual cash outflow. So what is the contractual cash outflow? 5% of 1 crore, how much? 5 crore, 5% of 1 crore, how much? 5 lakh now. So year 1, year 2, year 3, year 4, year 5. This 5 lakh, 5 lakh, 5 lakh, 5 lakh, 5 lakh plus entire payment of 1 crore is done at the end of 5 years. At the end of 5 years, so plus 1 crore. Crazy, you will find a present value factor at what rate? 12%. 12% is what? Market rate of interest. So at 12%, and you can find out present value. So this will become what? This is present value, but this is what? Fair value of loan. This is fair value of loan, correct? So this is already calculated. So fair value loan will come this amount. Already calculated, this is the fair value loan. So what is the grant? 1 crore minus this will become grant. So 1 crore minus is how much coming? 343. This become grant. This will be amortized to PL on which basis? This will be amortized to PL on this basis. This will be amortized to PL now. On what basis? In the ratio of depreciation over the useful life of asset. But in this question, because useful life is not given, rate of depreciation not given, therefore that cannot be worked out. You need to write down only one note. This will be amortized to PL on in the ratio of depreciation over the useful life of asset. But if the depreciation rate is given or useful life is given, calculate and make a working note of that. Chalega? Now they will ask one more question. He find out the closing balance of this liability. The liability means loan amount. So this is actually as per 109. This is as per which chapter? Ind AS 109. So it will be at amortized cost by applying EIR. So this table actually, I think you know, this is nothing but amortized cost table. Amortized cost table. So opening balance of liability plus interest minus closing contractual cash outflow. This will become what? Closing balance. And you can find out this become what? Amortized cost table. So this question come, it will be of what? 8 to 10 marks. 8 to 10 marks. Done. Come to the last chapter for today. What is the last chapter? Ind AS 23. Ind AS 23. Now Ind AS 23, why it is important? Because in every chapter where there is an asset, they can insert this. In PP they can insert intangible asset, they may insert investment property, they may insert in any other chapter, they may insert. Correct now? So if they are asking question about PP, they may ask this question. So therefore it becomes important. Now borrowing cost Ind AS 23. Now borrowing cost means what? What do you mean by borrowing cost? Borrowing cost means interest cost and any other cost in connection with borrowing. So interest cost or any other cost in connection with borrowing means it will not include any cost of equity. It will not include any cost of equity. It will only include cost of borrowing. Borrowing can be short-term borrowing, long-term borrowing. So any borrowing will be covered. Any borrowing will be covered. Now one doubt will come. If I am saying cost of equity share capital, covered, not covered? Not covered, correct? But what is that cost of equity share? Okay. Now my next question is that what is the whether cost of preference share capital covered, not covered? Now very good. Means if you are saying not covered, means you have forgotten financial instrument chapter. Correct now. So it is linked with what? Financial instrument chapter. Therefore I said this revision class is important only when you have done the previous classes, because it will be linked with some other chapter also. So can I say preference share capital now can be classified as equity or can be classified as financial liability also. So if it is a financial liability, then can I say it will be covered? If it is equity, then it will not be covered. One question in MCQ ICI has given this question. Correct now? They have given this question. Correct? So be careful about all the points. Be careful about all the points. So what they are saying? The cost of equity instrument. When I say equity instrument, it is a wider term. It will include equity shares, It will include all other preference shares which has been classified as equity. But cost of redeemable preference shares will be covered under borrowing cost. Understood this point? Correct. Now, borrowing costs include interest expense calculated by using effective interest method. Now you all know about effective interest method. So as per Ind AS 109, we calculate interest expense by applying EIR. Not by using market rate of interest. Market rate of interest and EIR are different. Understood is fine. So we calculate fair value by using what? We calculate interest expense using what? Understood these two terms? Correct. Now I am assuming that you know EIR, because I will explain EIR where? In financial instrument chapter. So I'll come back to this point. In this chapter I am assuming that you know EIR calculation. You know about EIR. Chalega? Yes sir. Now it will also include interest expense in respect of ROU asset held by lessee. So under Ind AS 116 chapter, in the books of lessee, we calculate finance charges. So that will be also borrowing cost. They are just giving a clarification. Last point, any exchange difference arising from foreign currency borrowing to the extent it is regarded as an adjustment to interest cost. This point I will explain at the end. Correct. So this exchange difference I will cover at the end. This point will be automatically covered under Ind AS 116. So I will not touch this point. Means right now in this chapter we will be covering only what? First point. Correct. Now one doubt will come, sir, whether it will include underwriting commission, means whether borrowing cost will include underwriting commission or any discount on issue of debentures or any premium payable on redemption of debenture. What do you think? It will not include. Why? Excellent. Okay. It means just try to understand. Now I'm just giving one clarification, because this point again I will explain where? 109. But I am just giving clarification so that we can proceed. Suppose debenture of rupees 10 lakh issued at a discount of 10%, redeemable at a premium of 10% after 3 years, and the contractual rate of interest is 10%. Understood? Correct. So as per AS 16, as per Ind AS 23, as per AS 16, borrowing cost used to be interest cost plus discount plus premium plus underwriting commission. But now as per Ind AS 23, because we are using EIR method, effective interest method, so while calculating EIR, everything has been considered. Therefore whatever interest expense you have calculated by using EIR automatically adjusted with what? Discount, premium and underwriting commission. Therefore separate calculation is not required. Means can I say under Ind AS there is no discount account, there is no premium account, there is no underwriting commission account, because that will be automatically adjusted with initial recognition of any financial liability. Detailed discussion will do where? In 109 chapter. ठीक है ना? तो अभी थोड़ा सा I have given कि this will not exist only under Ind AS. There is no such account. Under Ind AS there is no such account. If there is no such account, there is no such reference. Correct. One clarification given. As per AS 16, following was also considered as what? Borrowing cost. But now above item are adjusted while calculating EIR. This is only a clarification I have given. If you know AS 16, doubt will come. But if you have already said that you have forgotten what? So just delete it if you have forgotten. Doubt will not come only. Understood? Doubt will come when you remember what? AS 16. But if you have forgotten, the doubt will never come. Understood? Yes sir. But I hope you have understood what I want to say. Ki interest expense calculated by using EIR automatically adjusted underwriting commission, discount, premium, etc. Therefore now we don't open separate account for that. Chalega? Yes sir. Now accounting treatment. Accounting treatment is based on 2 points: whether we should capitalize it or whether we should charge it to profit and loss account. Correct. So what Ind AS 23 says that any borrowing costs which are directly attributable, any borrowing costs which are directly attributable. Now you know this term, directly attributable. Now you know this term, what is the meaning of directly attributable. So any borrowing costs which are directly attributable for acquisition, construction or production of a qualifying asset will be capitalized, otherwise charged to profit and loss account as an expense. Means in a starting point of this chapter, we need to identify qualifying asset. If there is no qualifying asset, no capitalization, so only we need to identify what? Qualifying asset. It means now we need to understand which assets are qualifying asset, which assets are qualifying asset. I'll give you some example. First you say me whether it is a qualifying asset or not. Batao, PP. It is a qualifying asset, yes or no? Who said no? Very good. If you are saying yes, means answer is wrong. So depends. All PP are not qualifying asset. When I'm asking, now be careful. You are at CA final stage and MCQs are there. And MCQs are there. So be careful now. Are you getting what I'm saying? Correct? Chalo. So yes, it depends. It depends. Inventory? Huh? It depends. Means inventory can be also qualifying asset. Inventory can be also qualifying asset. Biological asset? Biological asset not. Bearer plant? Biological asset? Why no? Biological asset do not have emotions. Why no? You are correct only. Biological asset is not a qualifying asset, but it means we need to understand what? This chapter. Means what is required? Retention is required. Retention in exam hall is required. Correct now. Sometimes we forget, but when you do continuous revision, it will be in your mind forever. It is as simple as when you listen one song, you memorize it or not? You have never done what? It will be in your mind because you are taking interest to listen that song. But in class right now you are taking interest. Huh? If yes, it will come. If no, then it will hawa. The interest is required. Now who will create that interest? I am not the mediator, huh? Don't say. Interest you need to only create. Interest you need to create, because what will come? Money. How much? 1 crore. Huh? Tab to more interest will come. Correct? More interest will come. And what happened when I was doing CA? One CA, there was one GMCS course na. अभी भी है. चलो. So that time it was newly introduced. So when newly introduced, we were not thinking what happened, what will happen in that, what will not happen. We were not aware of that. So we came there. We started doing what GMCS course. One faculty came. He started motivating us. Correct now. So he asked me how much you are expecting to after becoming CA. So everyone was saying 10 lakh, 20 lakh, 5 lakh. That time the 6 lakh was also a good amount. That time. Means 15 years before I am saying. 2005 I passed. I passed in the year 2005. That time more than 15 years, na. So I was not answering actually anything. Correct now. So he pointed me, what you say? Because they were 20-25 students, he can point, he can ask me individually also. So what is your answer? I was silent for 1 minute. Then I suddenly say 1 crore, sir. Everyone started laughing. Believe me. I was thinking, what I said? Some wrong answer I said. Everyone started laughing. It means keep silent. Let them laugh. My job is to what? Become CA and earn that amount. They started laughing. But have your emotions controlled. In yours, whatever you will say, others will try to what? Pull you down. Others will try to pull you down. This is only what? Competition. Understood? You will say anything, they will not appreciate you. Correct? Say it louder. Means anywhere, wherever you go, say your value. Your value is what? How much? 1 crore. Means in suppose in the job you went for the interview and somebody asks you what is your expectation, what you will say? What do you say? Bolo? What do you say? 6 lakh? 6 lakh per month. How much you will say? Batao. You will be silent, you will say some amount. Huh? Bolo. Suppose I am taking your interview, you need to answer or not? Keep you silent like this. Sir, jo dena de dena sir. Le le job mein sir. You will say like this? So what you will say? Huh? You say or you not say? How much? 2 crore. They will ask you next question. Don't say this amount. Say this amount. They will not ask you any question. Sir, my expectation is present value of all the future economic benefit you should derive from me. Now you say 100% they will not ask you any question because you have given as the answer as a chartered accountant. Now let them estimate the benefit which you derive from me. Understood? Correct now? So if you give this type of answer means what? You are a chartered accountant. Don't say any amount 1 crore, 2 crore. Correct? And believe me, then after they will say how much you want to. Because now they will not leave you. Because in India, only the person who is earning top money is that person who have capable of earning. And they want that person who can earn that much money on their behalf. If they are giving 10 lakh to you, it means you have a capability of earning 1 crore. They will give you 10%. Yes or no? Correct? So I will say that let them decide, but interview is not the only the place where you are judged. If they are giving you 2 lakh, means you are capable of earning how much? 20 lakh. If they are giving you 10 lakh, means you are capable of earning how much? 1 crore. And if they are giving you 25 lakh, so it means better is what? Doing job or practice? Practice. Understood? Correct? So that is the place where you can earn maximum. But I will not force you to come to practice. I will say take your time, but decide about your future. We CAs are not made for jobs. We CAs are not made for jobs. But of course, for the first year, second year, third year, to gain knowledge, we should work somewhere. For example, I started my career with doing job in Deloitte. I gained entire knowledge. Then I started teaching accounting standards. But I learned from there only what is the implication of this standard, how to apply that in real life. So I understood, then I started teaching because my ultimate job was what? To teach. Understood? I'm just giving you some motivational factor. Now coming to qualifying asset. So what is the meaning of qualifying asset? Those assets which take substantial period of time for getting ready for its intended use or sale. Now only one thing, what do you mean by substantial period of time? So once again I will say this has not been defined under Ind AS 23. This has not been defined. So substantial period of time is not defined under Ind AS 23. It was defined under AS 16. But it is not defined under Ind AS 23. It means judgment required. But we can take the reference of AS 16. Now AS 16 used to say if any asset is taking more than 12 months, it will be always a qualifying asset, and any asset which is taking less than 12 months will be no. This is not correct. Any asset which takes more than 12 months will be always qualifying asset, but any asset which is not taking more than 12 months, AS 16 used to say apply your own judgment. Means it may or may not be qualifying asset. It may or may not be qualifying asset. In one of the questions today we have done, it was only 7 months. It was given the question, it is a substantial period of time, means 7 months can be also what? Substantial period of time, means even whenever question is silent, take assumption about less than 12 months. It may or may not be substantial, depending upon your assumption, give the answer. Whenever question is silent, I will say give both the point. If it is substantial, this is the answer. If it is not substantial, then this is the answer. Okay, sir? Yes, sir. So I hope you have understood what do you mean by substantial period of time. from Ind AS 23 point of view. Chalega? Now, specifically excluded, Ind AS 23 have specifically excluded two type of assets from the definition of qualifying asset. First, any qualifying asset that are measured at fair value. For example, biological assets are initially measured at fair value. Correct? So, any asset which are initially measured at what? Fair value will be outside the scope of this chapter. Correct? Now, one doubt will come. So, for PP, if you have adopted revaluation model, understood what I am saying? PP, if you have adopted revaluation model, included, excluded? Included, excluded? One second. Qualifying assets that are measured at what? Fair value. So for any asset, any PP, if you adopted revaluation model, included, excluded, means that will be qualifying asset. How? Very good. It is initially recognized at what? Cost. Excellent. So it is initially, that are initially measured at fair value. Initially. Good. So PP will be covered. Intangible asset will be covered. Investment property will be covered. Understood? Yes, sir. Then they want to also exclude inventories that are manufactured in large quantities on a repetitive basis. Means I just want to explain this because in this also they have given one MCQs. Inventories. Inventories. Now either it can be purchased or it can be manufactured. Purchase means ready for sale or ready to consume at that time. So it does not require any substantial period of time. Therefore, it is not a qualifying asset. Any inventory which is purchased is not a qualifying asset. Correct? Now manufactured, so it can be manufactured either in large quantity or small quantity. Large quantity or small quantity. Large quantity, so either it can be on repetitive basis or it can be not on repetitive basis. When I am saying not on repetitive basis means as per customer demand. As per customer demand. I hope you are understanding. Correct? Means you are producing large quantity but based on customer demand. Based on customer demand. Understood? When I say small quantity, so normally it is on which demand? Customer demand only. For example, we got a order for what? Some small quantity of any item. So we are then producing. Otherwise we are not producing. Correct now. So can I say in this there is no doubt. It may or may not be qualifying asset. I am writing may be what? Qualifying asset. If it takes what? Substantial period of time. Have you understood this point? Any inventories which are manufactured in a large quantity but not on a repetitive basis, or any inventories which are manufactured in small quantities may or may not be qualifying asset. Means these are not excluded from the definition of qualifying asset, but they want to exclude this from the definition of qualifying asset. So this is not a qualifying asset. Not a qualifying asset. Understood this mind? Have you understood this entire thing? समझे? बोलो ना. Now one doubt will come. Means you have not understood. If you are saying yes sir, means you are not thinking. It block हो गया. What is the doubt? Yes sir, manufactured in large quantity on a repetitive basis, but it can be more than 12 months. बोलना yes or no? It can be more than 12 months or not. Then sir, why you are adding not a qualifying asset? See, why you are adding not a qualifying? It may be qualifying asset. Yes or no? Are you able to understand? This point have you understood? Are bolna re? Means when I am saying manufacture in large quantity on a repetitive basis, I have written not a qualifying asset. You said yes sir, we understood. But you have not understood. Because it can be also more than 12 months or not. If it is more than 12 months, it is a qualifying asset, it is not a qualifying asset. Means doubt will come now. Now let me explain you what actually happened. Means if you read Ind AS 23, they have given up to this. inventory that are manufactured or otherwise produced in a large quantity on a rapidity basis. Correct? Are you getting what I am saying? Means just try to understand, if the point of substantial period of time will come, then the clarification was not required only. Means if you are saying more than 12 months, then the clarification was not required only. If you are saying more than 12 months will become a qualifying asset, that we know. If less than 12 months, then judgment required, then you can apply your own judgment, then this clarification was not required. So institute in their ICI study material have added one more point. So we'll follow what? ICI as per study material. So this point was added by institute, not by me. This is added by whom? Institute in your study material. So we'll follow that now. And as per me, ICI is correct. As per me, ICI is correct. So I also follow what? ICI. So what they are saying? Even if they take what? Substantial period of time for getting ready for sale. It means now it is correct or not? It means ICI in the study material has given one clarification that it is not a qualifying asset, even though it is taking more than 12 months, a substantial period of time. Because what happened, if you are saying it is a qualifying asset and it is taking more than 12 months, then allocation of borrowing cost will be very much difficult. How to allocate borrowing cost to each unit of production, that will become practically difficult, and practically this point will be very difficult to allocate, and therefore they said ignore it, and it will not be a qualifying asset. Therefore do not capitalize any borrowing cost for such type of asset. Now I think you have understood. So apply this in exam. Apply this in exam for answering any MCQ. Chalega? Understood? Yes sir. Then this you have understood. Now two more points. Any asset that are ready for their intended use or sale when acquired are not a qualifying asset. Means any asset which are acquired and ready for use or ready for sale is not a qualifying asset. Financial asset will not be a qualifying asset. Financial asset means any investment is not a qualifying asset other than investment property. Investment in equity shares, investment in preference share will not be a qualifying asset. Chalega? Yes sir. Then amount of capitalization depend upon specific borrowing and non-specific borrowing. Now specific borrowing, they have given simple one formula. Borrowing actual borrowing cost minus any income on temporary investment. Means first calculate actual borrowing cost less income earned from temporary investment. Understood? This will be the net amount will be capitalized. Net amount will be capitalized. Now this actual borrowing cost will be calculated by applying which rate of interest? EIR. Will be calculated by applying which rate of interest? EIR. By applying EIR. Correct. Now just try to understand. This actual borrowing cost will be calculated during which period? Capitalization period. During capitalization period. Irrespective of expenditure incurred. Okay. Let me ask you one question. Whether you have understood or not. Suppose you have taken a loan on 1/4/2023 of rupees 10 lakh, and let us assume rate of interest and EIR both are same 10%. Correct? So what is the borrowing cost? 1 lakh. But you have used an expenditure started, but you have used throughout the year only what? 2 lakh. Understood? Means 8 lakh so you have not used, and suppose you have not invested also. So my question to you all, borrowing cost to be capitalized will be 1 lakh. It will be on 2 lakh. Understood this point? Question, have you understood? Not understood. Once again. 10 lakh you have taken loan for one project. Project is incomplete in the year. You have only incurred how much expenditure? 2 lakh. And 8 lakh you have not invested anywhere. It is your choice. You don't want to invest. You are crorepati. Correct now? 10% of 10 lakh. What is the borrowing cost? 1 lakh. But expenditure you have incurred means you have used only how much? 2 lakh. Means how much you have not used? 8 lakh. Correct? So borrowing cost to be capitalized will be 1,20,000. 1,20,000. Pakka. This is your confidence. Means when the sound is coming from stomach na, it means you are correct. Okay, 100% correct. 100% correct. So irrespective of, oh, I have written only. You have said from this point. Chalo, that's okay. So during capitalization period, irrespective of expenditure. Now what is capitalization period? I will explain. Now coming to general borrowing, non-specific borrowing. Now normally in exam question they will give you 10% loan 1 lakh, then 12% loan 1,20,000, then 13% loan 5 lakh. Suppose this was taken at the beginning of the year, this was taken on 30th June, this was taken on 30th September. 3 loan you have taken and that is non-specific. Non-specific means it is not for any specific purpose. It can be used for any purpose. Correct. Now during the year you were constructing a building and for this building you were using fund from this fund only. Are you getting? These two funds remain unused. So batao, you will capitalize how much borrowing cost? Understood the question? These are non-specific borrowing. You are constructing one building. That building is a qualifying asset, and that building was constructed by using loan fund from which loan? First loan. Means second loan, third loan were unused. So how much borrowing cost will be capitalized? Means 10 lakh into. Now you have incurred only 20,000. Now batao. You have incurred only 20,000. Now batao answer. 10,000. Achha, how many are saying 10,000? How many are saying 2,000? How many of you have some other answer? Both are wrong. I said other answer, so you should raise your hand na. It means not confident, huh? Not confident. It means doubt about yourself. You have doubt about yourself whether I am correct or not correct. Correct? Don't doubt about yourself. Always answer. Okay? Next time I will not appreciate this. Okay? Okay. So I am giving you opportunity na. Okay. So all are wrong means this type of question blunder mistake in exam, and same question is given in one of the MCQ of ICI. Correct. So they are now going to ask this type of question in what? MCQ. So you should be totally understood the concept, not only calculation. So whenever there is a non-specific borrowing, will not do one-to-one relationship because it is impossible. How can you say that you have used this loan only? This loan has some emotions, na? They will say no, you can use my fund also. So you can't do any one-to-one relationship. Therefore, Ind AS 23 says that we'll need to find one effective rate of interest for all the borrowing. Means that is known as capitalization rate. That is known as what? Capitalization rate. So capitalization rate, how you will calculate? Batao. We will find out 10% of 1 lakh. How much? 10,000 plus 12% of 1,20,000. How much? For how many months? How much it is coming? 9 months, na? 9 by 12. It is 10,800. Then 5 lakh ka 13% into what? 6 by 12. 32,500. Understood this? Divide by what? But divide by what? 1 lakh plus 1,20,000 plus 5 lakh. Is this correct? Not correct. Very good. Means you know. So this will be 12 by 12. This will be 9 by 12. Very good. This will be 6 by 12. So this multiplied by 100 will be what? A capitalization rate. This will be capitalization rate. Understood? Now what is coming? Can you give me? Bata do yaar. I am not good in calculation. Bata do. What is the rate of interest? Anyone solving? How much? 12.16. Let us assume it is correct. 12.16%. This become capitalization rate. Let us assume this is correct. I don't know the whether it is correct or not. Now this will be applied on what? 20,000. This will be applied on the expenditure incurred on qualifying asset. Understood? Means entire borrowing cost is not going to be capitalized for non-specific borrowing. For specific borrowing, all the borrowing costs which has been incurred during capitalization period will be capitalized. But for non-specific borrowing, we'll apply capitalization rate only on expenditure incurred. Only on expenditure incurred. So this 12.16 will be applied on 20,000, not on loan amount. Understood is fine. And that will be the amount of capitalization. Amount of capitalization. Understood? Understood? I think basic concept you understood. I will take one question at the end. Chalega? Have you understood this fine? So this is only given here. You can read it. You will be able to understand. Correct? Now, one special point is there that you suppose one special point which can be also asked in MCQ. One special point. Try to understand this point. Suppose you have taken one specific borrowing, correct, of rupees 10 lakh, 10%. An asset was ready for use. Asset was ready for use. Means it was taken for building and building was ready for use at this point of time. Correct. Now we already once the asset is ready, then no further capitalization. So we will cease capitalization for this asset. Now this loan was for a specific purpose of this building only. Building is completed. But loan is not yet paid. The loan is not yet paid. Means can I say it will be outstanding for second year also? It is outstanding for second year also. Correct. Now you have some non-specific borrowing also. This is non-specific borrowing. Are you getting what I am saying? You have some non-specific borrowing also. Now during this year, you are constructing some other building. Correct. Now this is also a qualifying asset. For this qualifying asset, you want capitalization rate because you have two non-specific borrowing. Yes or no? Now the question is that for second year, this specific borrowing is not yet paid. Whether it will be considered for calculation of capitalization rate or not. Yes. Second year. First year? No. Very good. Excellent. Means you know this point. Very good. Excellent. I was not expecting that you will give me correct answer for this. I don't know whether you have applied your common sense or you know this point. You applied your common sense? Applied your common sense? You have applied your common sense, you have read in Ind AS 23. You have read. Chalo, very good. You have read, then also very good. If you have applied common sense, then also very good. Chalo. So this point is covered here. What they are saying, these 2 points. The capitalization rate shall be weighted average of all the borrowing costs applicable to all non-specific borrowing of the entity that are outstanding during the period, even if it is not used. Even though it is not used. However, entities shall exclude from this calculation borrowing costs applicable to specific borrowing until substantially all the activity necessary to prepare the qualifying asset for intended use or sale are complete. Correct. It means when the funds are borrowed specifically for a qualifying asset, cost in relation to that borrowing are accounted for a specific borrowing cost until asset is ready for intended use or sale. If the borrowing remain outstanding after the related asset is ready for intended use or sale, it become a part of general borrowing and it will be used for calculation of what? Capitalization rate. So this become very important. MCQ to 100% important. Practically till now they have not asked any question on this. Can be asked. Can be asked. This I will do at the end. Group company. Now come to commencement, suspension and cease. Means when to commence capitalization, when to suspend capitalization, when to cease capitalization. When to commence, when 3 conditions are satisfied. What are 3 conditions? It incur the expenditure for the asset. Means expenditure on qualifying asset is incurred. It incurs borrowing cost. Means borrowing cost is also incurred, and it undertake activities that are necessary to prepare the asset for its intended use or sale. Means any activity which is necessary for acquisition, construction or production of a qualifying asset are undertaken are undertaken. Simple example I will say, suppose you require some sanction from any other authority, any other concerned party. So you have filed an application for what? For getting that sanction. Means you have undertaken that activity. Then okay, then only you can commence the capitalization. You can commence the capitalization. However, from exam point of view, so these two conditions are more important. These two conditions are more important. Means what they want to say is, suppose you have taken a loan यहाँ पर and you started expenditure यहाँ पर, correct? So this borrowing cost will be charged to PL or will be capitalized? Charged to PL. Very good. But if it is specific loan, then understand what I am saying? You said charge to PL, but one doubt will come. But is specific borrowing, then charge to PL can be capitalized. Huh? How many are saying capitalized? Everyone saying charge to PL. Very good. It will be charged to PL irrespective of fact whether it is specific borrowing or non-specific borrowing. Means you commence capitalization from which date? This date, correct? And you will capitalize till the asset is ready for its intended use. But what happened? During this, after some time, active development was interrupted here due to some unnecessary activities. For example, labor strike, fire occurred, legal case filed, and development was stopped. So in that case, what Ind AS 23 says that you need to suspend capitalization for some period. So here you will suspend capitalization and it will be also charged to what? Profit and loss account. So if active development is interrupted due to some unnecessary activities, so suspend capitalization, and for that particular period, borrowing cost will be charged to profit and loss account. But it should be active development must be interrupted only because of unnecessary activities. Sometimes what happen, development need to be interrupted due to some necessary activities which are necessary for what? Production or construction of a qualifying asset. Then it will not be suspended. Then it will not be suspended, correct? Then after that, once active development start, once again we will start capitalizing it. And suppose here the asset become ready for use, so on this date we will cease capitalization even though borrowing is not repaid. Even the borrowing is not repaid. So after this, the borrowing cost will be charged to profit and loss account until it become a part of general borrowing. Then capitalization rate so chalega uske baad. Understood? Correct. I think this thoda you have understood. That is only given in this entire point. You can read and you can understand. Correct. One more point is, suppose you are doing three projects: project 1, project 2, project 3, correct? And you have taken a loan of 100 crore for this entire project. Entire project you have taken one loan. Now project 1 is completed. Understood? Correct. Now can we cease capitalization for project 1? You have taken loan for this is entire project, huh? Means project is 1, this is building 1, better building 1, building 2, building 3, better write on that. Project is 1 only, huh? Project is 1, so you have taken for one project, but in one project there were 3 buildings. Quite possible. Building 1 ready for use. Now can we cease capitalization for building 1? Yes, but if it can be used when they are under construction, means if you can't use it, if you can't sell it till the entire project is completed, then you can't cease capitalization. Understood? So yes, but provided that condition is also satisfied. So that is given in this para. This is also important from exam point of view. Now coming to one point, exchange difference. This I will explain to us by one question, exchange difference. Okay. Let us come to one example. Suppose you have taken a loan of 1 lakh ज़्यादा हो जाएगा, $10,000 in foreign currency. ठीक है? Rate of interest is 4%. Correct? Understood? And when you have taken loan, suppose you have taken loan on 1/4/2023, exchange rate was ₹80, means $1 is equal to 80. And on 31st March 2024, exchange rate become 85. Okay. Now, what they want to say, just try to understand. If for foreign currency borrowing, What is the interest cost? It is 400 into 85, we can say. So 400 into 85, how much? 34,000. And okay, there is one exchange loss also. Exchange loss will be 10,000 into what? 5. That is how much? 50,000. Now interest cost is covered under Ind AS 23. So we are not discussing about interest cost. Interest cost is borrowing cost covered under Ind AS 23. We are discussing about what? Exchange loss. This exchange loss is covered under Ind AS 21, and Ind AS 21 say it will be always transferred to PL, means it cannot be capitalized. It cannot be capitalized. So if you apply Ind AS 21, it cannot be capitalized. But Ind AS 23 says something else. What Ind AS 23 says, that we need to understand. So what Ind AS 23 says, that it might be covered under Ind AS 23. And if it is not covered under Ind AS 23, then Ind AS 21 is applicable. Understand what they are saying? Now we need to understand what amount is covered under Ind AS 23. Understood the doubt? Now if it is covered under Ind AS 23, so it can be capitalized or charged to PL depending on the situation. But if it is covered under Ind AS 21, it will be always transferred to PL. Have you understood what we are discussing? So what Ind AS 23 says, that first you identify if the similar loan was taken in functional currency, what interest cost we need to pay. So suppose we would have taken $10,000 into 80, means 8 lakh, similar loan, and suppose the rate of interest is 12%. Rate of interest is 12%. Of course, the functional currency rate of interest will be higher as compared to foreign currency borrowing, and therefore we have taken what? Foreign currency borrowing. Otherwise, we would have taken what? Functional currency only, na? So 8 lakh into 12%, how much? 96,000. 96,000. So what Ind AS 23 says, that exchange difference which will be covered under Ind AS 23 will be lower of A and B. Will be lower of A and B. Lower of A and B. A is what? Exchange loss. Exchange loss is what? 50,000. And B is difference between above two interests. Two interest means this two interest. This interest and this interest now. Means interest of functional currency borrowing and interest of foreign currency borrowing. So it is 96,000 minus 34,000. That is 62,000. It means which one is lower? So it means entire 50,000 will be covered under which Ind AS? Ind AS 23, and it will be regarded as an interest cost, and it may be also capitalized depending upon the condition given under Ind AS 23. So entire 50,000 will be covered in this example. But suppose let us suppose this is 80,000, then so this is coming how much? 50,000, and 80,000 minus it is coming 46,000. Then lower is what? 46,000. Means out of 50,000, then how much will be covered under Ind AS 23? And balance will be covered where? Balance will be covered where? Means balance is what? 50 minus 46 is 4,000. The balance will be covered under Ind AS 21. Means this 46,000 may be capitalized, but 4,000 will be covered under Ind AS 21, which will never be capitalized. It will be always transferred to PL. Understood? This is known as exchange difference, which is regarded as an adjustment to interest cost as per Ind AS 23. So what is the formula? Formula is lower of what? Actual exchange difference, or the lower of difference between the two interests. The lower will take under Ind AS 23. Understood? Correct. This point you have understood. Second point. Suppose this 85 become 82. 78. Then there is an exchange gain. Exchange gain. So what Ind AS 23 says, exchange gain will not be capitalized. Means exchange gain will not be covered under Ind AS 23. So any exchange gain will be always covered under Ind AS 21, and that will be always transferred to PL. So whenever in exam they have given exchange gain, ignore it. It will not be covered under Ind AS 23. So only what is covered is exchange loss, not exchange gain. But one more point. Suppose this is first year, year 1, this is year 2. Year 1 you have taken $10,000, rate of interest 4%, here it was 80, here it become 85, here may it become 83, correct? So first year, though, it is similar to this example only. So your interest cost was how much? 34,000. and your exchange loss which has been capitalized will be 50,000. Yes or no? So total covered under Ind AS 23 will be 84,000. Year 1 done. Now year 2. Interest cost will be how much? 400 into 83. 33,200. And there will be exchange gain. Exchange gain is how much? 10,002. That is 20,000. Now what about this 20,000? This was given in ICA MCQs. How much? Acha. You are saying this will be reduced from interest cost. Okay. To the extent of what? Exchange loss which was previously covered under Ind AS 23. Means it will be 20,000 or 50,000, whichever is lower. Understood? So exchange gain of next year can be adjusted with interest cost to the extent of exchange loss which was previously covered under Ind AS 23. Understood this point? 100% correct. It will be deducted from this because it is regarded as an adjustment to interest cost. Understood? But I'll change the question. Suppose this much you understood. Now one doubt will come. You have said correctly. Correct. Now one doubt will come. Suppose this becomes 78. So the interest cost will be how much? 400 into 78 how much? 31,200. And exchange gain how much? How much? How much will be regarded as an adjustment to interest cost? 50,000 means 31,200 minus 50,000. Doubt came na? 1 second. Have you any doubt? Are you able to follow me? First you have understood first example. First example, have you understood or not? Not understood na? How many of you understood first example? How many not understood? I will assume first example you have understood. Now I am coming to second example. So I change the rate of exchange rate. Because of that reason interest cost is coming 31,200 and exchange difference is coming what? 70,000. Exchange gain is coming 70,000. Then I ask one question, how much will be regarded as an adjustment to interest cost? So what will be answer? 50,000 ki 31,200? 50,000 ki 31,200? But the answer is 50,000. Correct answer is 50,000. Understood? Understood why I have asked it? I will prove why it is correct. I have understood because as a student, so I will have also that doubt. Correct now? I know what is your doubt, but answer is what? Answer is 50,000. So first let us come to exam point of view na. Because in this class, so I am not explaining the concept na. So first answer is what? 50,000. Let us come to Ind AS 23. What this is? The amount of borrowing cost adjustably lower of actual foreign exchange loss and borrowing cost in functional currency minus borrowing cost in foreign currency. This point you have understood? If subsequently there is a realized or unrealized gain in respect of settlement or translation of same borrowing, the gain to the external loss previously recognized as an adjustment should also be recognized as an adjustment to interest cost. Means they are saying about 50,000 na. So as per Ind AS 23, 50,000, and that is only correct. I will prove it. Can I prove it? Are bolna re? Means you are saying 31,200 na, but my answer is what? Let me prove it. Suppose initial cost was 1 lakh. Correct? But in this year, how much you have capitalized? Correct? You have capitalized 34,000 plus 50,000. How much it became? 1,84,000. Correct? Means if there was no borrowing cost, means if there was no exchange loss, then to yahi hota na 1,34,000. Correct? Next year what happened? 1,84,000. I am ignoring abhi other part. So next year what happened? 31,200 minus what? 50,000. This is my correct. So what is the answer? 1,65,000 200. Correct? Now, if there is no exchange loss, it should be 1,34,000 plus what? What is the answer? Oh, Jadu. Jadu understood. Means you will make it at par, na? So negative, they just try to, this become negative borrowing cost. Negative borrowing cost can be also capitalized. Capitalized does not means only add. Capitalized also means minus also. So when I am saying the respective expense will be capitalized, so that can be negative expense also. And negative expense will be deducted from the cost price. Understood? So capitalized does not means only add. Capitalized means minus also. Understood this point? Have you understood this point? So this negative will be what? Deducted from cost price of asset. That only we have done. Negative is deducted from the cost price of asset, and therefore it become at par. But if you will take your answer, it will not be at par. Then your answer means that will be practically wrong. That will be practically wrong. Understood? With simple word. To the extent of previous exchange loss which has been adjusted as per Ind AS 23. This much you remember. All answer you can give. This is also important from exam point of view, because I have observed the MCQs given by ICI. Understood? Correct. This you have understood. This disclosure you can do. Means the chapter is over. I'll come to one more part. This point. Group company. The capitalization of borrowing cost in group finance statement. For that I will take one question. Means if you have read, you will not be able to understand. Better I will take one question. Now just try to understand one more point before I come to that question. Questions are here. Question I have not opened on this. MCQs so you can do. I'll take this question. 70. Now before I will take this question. Now this Ind AS 1 to Ind AS means Ind AS 116. This is applicable to CFS or SFS. CFS means what? SFS means what? So this is applicable to CFS or standalone finance means separate financial statement. I am asking one question, you respond. Ind AS 1 to Ind AS 116 applicable to consolidated financial statement or separate financial statement? This full Ind AS done and we have not understood this only. Am I right or not? Doubt is there, na? No, someone is saying correct also, but doubt is there or not? Doubt means when we are doing classes, so actually we are not listening properly, and now you are listening properly. Correct? So why you are listening properly? Because already you have done entire thing. You know all the content. Now only you want a special point. Okay, na? So I am now just giving you special point. Ind AS is applicable to both. Means Ind AS has been actually designed from consolidation point of view. Can I say it has been designed from consolidation point of view? Automatically it will be applicable for what? Separate. So all Ind AS has been designed from which point of view? Consolidation point of view. And automatically it will be covered to what? Separate financial statement or individual financial statement. Understood? So this Ind AS 23 is also applicable to what? Consolidated financial statement. Now when I am saying consolidated financial statement, so all group entity will become single entity. All group parent, subsidiary will become what? One entity. So you need to apply Ind AS 23 from group entities point of view. From group entities point of view. Understood this? Yes. Now we can do that question. Apply your common sense. Now apply your common sense. I have just given hint. Hint I have given. Means suppose you have not done this question in exam. Before exam, and you don't know about any concept of this. You have forgotten Ind AS 23. But you are see na. You are chartered accountant. Let's see how you are reacting. Okay, na? Apply your common sense. In a group with parent company P, there are 3 subsidiaries with the following business. Area. Achha, have you done this question before? How many you have done this question before? So keep silent. Okay, na? Those you have not done, apply your common sense. Apply your common sense. Because if you have done this simple question, na? Okay, don't feel bad. Parent company has no operating activity of its own but perform management function for its subsidiaries. Okay sir, okay sir. Financing activities and cash management in the group are coordinated centrally. Okay, sir. Finance company is a vehicle used by the group solely for raising finance. So this finance company will raise only finance. All the entities in the group prepare Ind AS financial statement. Okay, sir. Ind AS only. So Ind AS will be applicable now. The following information is relevant for current reporting period 2001-2002. Real estate company borrowing 10 lakh with an interest rate of 7%. So they have taken a loan of only one loan at a rate of 7%. Expenditure on qualifying asset during the period amounted to rupees 15,40,000. All construction work were performed by the construction company. Amount invoiced to real estate company included 10% profit margin. So can I say this 15,40,000 include profit of which company? This 15,40,000 include profit of which company? Profit of construction company. But right now we are doing what? Real estate company. So in separate financial statement will not eliminate any internal profit. That elimination is not required. My question is that this borrowing is specific borrowing or general borrowing? Specific or general? Huh? Specific or general? 2-3% is saying. Everyone say specific or general? Confidence means confidence is not there. But whether it is given the question it is specific borrowing, then it will be what? General borrowing. Apply your common sense. Apply your common sense. Nothing is given. So how can you assume it is specific borrowing? Correct now. Just right away. I came in the classroom. So because you know my name, so you know. But if some other person is coming, he will disclose that he is a chartered accountant. He is not a chartered accountant. Will you understand? Acha, he is a C only. They should mention na. Bola, if nothing is mentioned, what will it? Common people only? General people only? Yes or no? So it means it is a general borrowing. Correct? It is general borrowing. Now, because there is one borrowing, capitalization rate is not required. So this will only become what? Capitalization rate. Now, expenditure income on qualifying asset is 15,40,000. But what will be the borrowing cost which will be capitalized? For real estate company. How much? But what is the actual borrowing cost? 70,000. But how much will be capitalized? How much will be capitalized? You will apply 7% on this. So 15,40,000 into 7%, how much? 1,07,800. But how much will capitalize? How much will everyone need to say something? ऐसे समझ आएगा ना 70,000. Correct only. 7,000 correct. Means can I say actual borrowing cost means the amount of borrowing cost capitalized should not exceed what? Actual borrowing cost. Common sense point. Common sense point. Understood? Correct. So this is correct. Now come to construction company. No borrowing during the period, but finance 10 lakh of expenditure on qualifying asset using own cash resource. So they have a qualifying asset and they have financed by using their own resource. But how much borrowing cost will be capitalized? 0, nil, khatam, aage chalo. Finance company raised 20 lakh at 7% externally and issued a loan to parent company for general corporate finance at rate of 8%. Means they raised from outside how much? 20 lakh. At what rate? And given to parent company at what rate? 8%. So batao, is there any qualifying asset? So how much borrowing cost will be capitalized? Nil only. Low, done. Now for parent company, whenever they have asked for parent company, so you will think from CFS point of view, not from SFS point of view. So in exam, you will think from CFS point of view. Correct? Use loan from finance company to acquire new subsidiary. No qualifying asset apart from those in real estate company and construction company. Parent company did not use any loan to Parent company did not issue any loan to other entity during the period. What is the amount of borrowing cost eligible for capitalization in the financial statement of each of the 4 entities for the current reporting period 2001-2002? So now we are coming to parent company. Now in the parent company CFS, because you know CFS, there will be 2 qualifying assets, 1 and 2. One is what? 50 lakh. 15 lakh 40,000. But this include internal profit of which company? Whether we should eliminate, we should not eliminate. Eliminate. How much elimination you'll do? 1 lakh 40,000. I think correct only, na? So this will become out 14 lakh. This too is common sense point once again. What is the qualifying asset of one more company is there? Construction company. What is the qualifying asset? 10 lakh. 10 lakh, na? That will also come here, na? In CFS it will come, na? In CFS it will come. Then there will be two borrowing. Borrowing 1, borrowing 2. Borrowing 1 taken by which company? What was the amount of borrowing? 10 lakh. And what is the rate of interest? Then one borrowing taken by finance company. How much? 20 lakh. What is the rate of interest? Whether you will take 7%, 8%. 7%, 8%. 7%. Understood? Common sense. I think in this too no doubt. Whatever you have said, I think every student will say this only. Anyone have doubt? Now the question is that once again apply your common sense. I'll just give one hint. In CFS, Ind AS 23 applies assuming that all entities are one entity. Understood? Do by your own. Calculate borrowing cost to be capitalized. 1 minute you have. Do it. Either do correct or do wrong, but do it. How much borrowing cost will be capitalized? Do it. Everyone give me the amount. Calculate the amount. Give me the amount. If you can give me correct answers, so ho gaya, done na. You may give me wrong answer also, but I am happy that if you are giving wrong answer, then only I can correct you. Next day you will all will bring calculator also. In FR class, so you should bring calculator na. Everyone have calculator. Chalo, theek hai. Okay. Bol. Question again. Achha, you want question? Question to already have written there. Why you want this question? Question no. Question. What do you want in question? Don't read solution if you have soft copy. Huh? Chalo, bolo. Answer. Option number 1 is what? 1 lakh 40. Option number 2? 1 lakh 68. Option number 3? Any other answer? How many are getting 1 lakh 40? How many are getting 1 lakh 68? So others, what you are getting? Arey bhai, you are not able to understand what I am saying. If suppose this question come in exam, you will do it or you will leave it. Do it or do na. Two lakh 10,000. कितना बोलने के बाद आंसर आता है. Fourth point, last option. अच्छा, how many are saying 2 lakh 10? And others are saying what? Sir, all of the above. None of the above. I will answer. Is there? Chalo, ठीक है. Means out of these 3, 1 may be correct. I think. But how many are saying 1? Voting start. Option number 2. Option number 3. Chalo, ठीक है. Let's see. Now, can I say because this become a single entity, we need to first calculate capitalization rate. But I don't know whether you have calculated or not. But capitalization rate will be 7% only. Bach gaye. But you need to first calculate capitalization rate. But in this, because 7%, it will be 7% only. Correct now. But first calculate capitalization rate. And this will be applied on what? 7%. 7%. How much? How much this? 14 lakh into 7%. How much? 98,000. And 10 lakh into 7%. How much? 70,000. Total become, so 98 plus 70, 1 lakh 68 is correct answer. Understood? Means I don't know what you have done. I think you have done 30 lakh into what? 7%. But it is general borrowing or specific borrowing? So general borrowing will be applied on expenditure incurred. Specific borrowing, then actual borrowing cost will be capitalized irrespective of expenditure. Means thora the common sense you have not applied. How this answer came, I don't know. I don't know. So if you have done given 1,40,000, I hope you have understood your mistake. Correct. Have you understood this? Have you understood this? So in CFS, entire entity will become one entity. Don't make one-to-one relationship. You say, sir, for this, so we have not taken a loan. No, 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 no. Now, in this, all borrowing will become one borrowing with one set of borrowing for one entity only, and qualifying asset has been, of course, constructed or acquired from that borrowing only. And just try to understand. I just give a hint why Ind AS 23 says that. You just try to understand. Suppose this is one company. This is a finance company. Finance company has raised one loan of how much amount? 10 lakh, and given to whom? So this become loan given. This will come yahan par, and this will become cash. And from this only they purchase subsidiary now. So this is again diverted to whom? Subsidiary company. Means ultimately that loan amount is only used. Ultimately that loan amount has been used by that entity who is saying that I have used my own resource. But actually this is a loan fund which has been diverted from one company to other company. Therefore in CFS, entire borrowing will be considered as one set of borrowing to calculate capitalization rate. Understood now? Now if you read this point, you will be automatically able to understand what they want to say. I think my job done. All the points are covered. In day 16, I don't think any question required. You can understand any questions by your own. Correct? But I have just pointed out the main point where you do mistake. Understood? Today class is over. I am also tired now. Okay. So we'll meet tomorrow at the same time, and tomorrow I am just giving you what will take. Okay. So you can say Ind AS 41 tomorrow. Test already I have said. If you want to write test, already I have given the number. Online student, and for you, you can contact the team test if you want to write on test. So tomorrow only will be the test for test day number 1. So if you have test now, you will study. Otherwise, you will not study. I know. So go home, start preparing for test number 1. Understood? And try to score more than that. This chapter wise test will be of 30 marks. So try to score more than 20. More than 20 in each test. Understood? Correct. Now day 2 will be Ind AS 41, Ind AS 36, Ind AS 40, Ind AS 105. Don't revise and come. Don't revise, because then only I am here to revise only now. So don't waste your time in revising this chapter now. Now revision I will do. Practice you will do. Okay, sir? So thank you very much for today. Hope you have understood everything correct now. And if you are watching my live classes, so please comment how you have understood these classes, and like whenever you have time, like my video, subscribe the channel. I'll come back again tomorrow, same time, 11. Okay? Thank you very much.